what you said, because increasingly, by the way, have you looked at institutional foreign ownership in these defense names? Is there a decent amount of ownership? Because defense is coming up as a big theme globally. You know, own defense names as a geopolitical hedge. Are these well owned amongst foreign institutional investors, or you think it's only just about starting now? What's your sense?
I think that's something which is quite interesting. If you see HAL and all, the government has been doing OFSs, and the government ownership came down after the IPO. But the space like shipbuilding, still the government ownership is quite high. Institutional ownerships are low in the stocks like MDL and a few other stocks. Definitely related to the other PSU packs, the institutional ownership is a challenge, and we can't rule out going forward as BEL, where the government ownership is only 51%. There could be many long-term stocks where the story is there. The government might reduce their stake, but institutional ownership and at least more than half of the stock is quite low. Yeah.
There is no implication for the space from defense, right? It's a high value sector. And one of the ways where we can kind of placate the Trump administration is by buying more stuff from the US, especially on defense, because it's all high value stuff. But does it at all in any way impact the sort of Make in India story in that sense?
So I think there has been news that the European defense spending could benefit, but I have a slightly different view. I don't think in near term this is going to benefit the Indian companies. If you see exports, so two things are happening. Obviously, we are trying to strongly set up the foundation for the localization of defense and setting up the vendor base, and there's a lot of modernization plan. And on export, we wanted to go to 35,000 in next 2 years, and then 50,000 in next 5 years. I think major export which is happening is subsystems and few of the electronic warfare systems, the mounted guns, and the artillery. These are a few areas where the export is happening, and we are capable of to some extent. And this is also happening to the 3 to 4 countries, including US, Armenia, and I think Europe is very small pie. So for me, I think the benefit, near-term benefit, would be limited. I don't see too much.
My question was more about whether this buy. I mean, if they say, well, buy more from us, will that hurt localization efforts? That was my question.
See, if they're focusing on OEM, the OEM players in, let's say, Europe and US, there could be some buying which can happen in intermediate products, which includes defense electronics. But I think it will take time. It is not next 1 or 2 years.
And of course, I mean, at least in terms of what makes headlines, it is the big stuff, right? The airplanes and the...
But the last has not been said on that, right? I think it's still up for negotiation, because there's a lot of pushback by a lot of Indian players saying that this is not something that we should just be buying blindly.
That morning we had the management of Zen Technologies with us, and they said
Mr. Atluri.
that, was it F-35s?
C-35, I think. Was it the F-35? Okay.
And they said, well, but you know, yeah, absolutely. It's still, I think, up in the air. Thank you very much, Amit. We'll continue this conversation as we go along. Appreciate your time. We come back with some technical trading ideas. We'll have Mitesh joining us and Sudarshan joining us with those trades.
Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first for the sharp fall we saw in the stock price? The promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around
Okay, welcome back. 9 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with what they'd want you to do as far as trades are concerned. Gentlemen, good morning. Good to have both of you here. It's kind of, in a way, I was saying this in the morning that thankfully the market is correcting a little bit and not sleepwalking straight into 2nd April. But where are things now? I mean, yesterday the sell-off accelerated towards the end, right? Mitesh, what are levels and what would one do?
Good morning, Prashant. Sorry.
No, I think you. Sorry, go on.
Yeah, morning, Prashant. So, a couple of things. One, the market had run up so fast that some kind of pullback was possible. No, very difficult to time exact hour when it starts. But once you have the idea that there's a pullback going on, you can then look at the short-term averages, retracements, gaps, any other pivots which are there. And I think Nifty, to me, and my understanding, 23,400, 380 is a very critical zone. I don't think it will break. I'm not saying, there will be a trend reversal in case Nifty starts trading below that. But I think there should be a very good, strong support area. And therefore, we are right there, actually. We're just about 80, 100 points away from that. So, to my understanding, the pain which could happen for the next couple of days is limited to about 100 odd points. And then I think we should make one more attempt towards 23,780, 800 zone. Maybe clear it, but at least an attempt towards the earlier highs is very likely. So in that sense, trading with long buys is what I recommend.
Okay, trading with long buys is what you'd recommend. Sudarshan, what about you? What would your broad take be?
Yeah, good morning. Well, yesterday was a disappointment. The market refused to oblige me. The idea was that we'll buy on a dip, and that dip accelerated, as you said, became literally a deep decline in the afternoon. Now, my stops were 23,300, and those stops have not been hit. But the market is not giving a sense of comfort. When today is a difficult day, we have weekly expiry, we have monthly expiry, and we have a financial year expiry. And things can happen unusually, not just in options, but also in futures. So my suggestion for the day is, if you still want to be in a trade, you have to be long with a stop under 23,300. Otherwise, the best trade is to step aside, watch the markets do whatever they want today and tomorrow, and re-enter on April in the next week.
Okay, all right. So it's going to be choppy and turbulent perhaps next couple of sessions. Gentlemen, good morning. Let's talk about stocks as well. Mitesh, what are you going with today?
Good morning, Subhi. In line with my idea that the broader directional bias is on the upside, I have all buy calls. A buy on L&T with a stop at 3,400 for targets of 35.35. A buy on Power Finance Corporation with a stop at 404 for targets of 430. Gas Authority or Gain India is a buy with a stop at 170 for targets of 182. And HCL Tech is a buy. Keep a stop at 1616, look for targets of 1670.
And Sudarshan, what about you? Which are the stocks today?
Well, I have a mix, and that reflects my sense of uncertainty or stepping aside. Marico is a buy, at least it's a safe stock, all the defensives, with a stop under 627, Marico, and then Ashok Leyland, which I heard is being discussed on the channel just now. That's a buying opportunity. Keep it as a positional buy rather than an intraday buy. It's with a stop under 210. I have Zomato as an intraday short, stop above 208. And finally, Hindalco as another intraday short, with a stop above 704. So I have two buys and two sells and a sense of confusion.
That's That's well put, Sudarshan. And yeah, absolutely, it is confusing with everything which is going on, at least in the near term. Thank you very much, gentlemen, both of you. With about 5 minutes to go for the pre-open session to kick off, and we'll chat again for your trades. The Max Financial block deal has gone through, as Nimesh was telling us yesterday. 35.8 lakh shares. That's about 1.03% equity. Changed hands, 399 crores worth. The price is 1,112 rupees per share. Well, we'll take a quick commercial break here. We come back with the pre-open. Of course, also the analyst from BNP Paribas. We'll talk about the big L&T order win and maybe check on a view on Siemens as well. Stay tuned.
Of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool.
Welcome back. We're just about 2 to 3 minutes away from the pre-open rates and bracing for what would probably be a bit of a cautious start. That's the large trade in Max, which our team was alerting you on earlier. And we'll, of course, get to know the buyer and seller's identity only later in the day. But the sense was that this could be the promoter selling a little bit of stake today. That's Max Financial in the news. Deepan is still with us. Deepan, okay, since I was talking about Max Financial, let's talk about the financials here, particularly some of the insurance names, which have really come back in the limelight. Anything that you're picking?
Surbi, I think these are great long-term stocks and they provide stability in the portfolio. But in times like this, when the overall market is reviving, I think it's better to go for high-growth stocks and some of the beaten-down stars of the previous bull phase. So I would just be a bit cautious. So I would say remain equal weight on insurance. But one very good way to play the insurance would be through something like a PB FinTech, which is an insurance portal. And now some of the concerns surrounding their healthcare venture, they seem to have subsided. So it's a better way to play the insurance sector and gives a complete exposure to that particular industry. So that would be our preference.
Okay. Also, yesterday's big star, Deepan, Siemens. We were just discussing it with the analyst as well, with this demerger now finally in motion. What is your call on the stock? Would you buy it with obviously, to get the benefit of the energy business? How would you approach it?
Yeah, so we always, whenever there's a split like this, we have seen that there's a 5-10% value unlocking which does take place, and the present consolidated is slightly cheaper than when they are trading separately. So yes, I think you could have a trading opportunity over there. But from a longer term perspective, I don't know, because the valuations are extremely rich, and the stock also, in terms of performance, has delivered very well over the last 4 or 5 years. So P multiples also have shot up. So from that point of view, you want to be a bit cautious. But if you're holding Siemens shares, just because the valuation has gone up, I wouldn't sell. But from a fresh investment, I think there are better choices within the capital goods space or even the engineering construction space.
All right, Deepan, very quickly, what about BSE? I was at the exchange, had a chat with Mr. Ramamurthy a few days ago, and now they surprised the street with a corporate action. They're going to consider a bonus. What's your view on the stock? It's come off drastically from the recent peak. Your view now?
Yeah, Nigel, I think it'll improve the sentiment, but I want to wait for a correction and buy at perhaps lower P multiples.
Okay, all right. And throwing a couple of more to you, Zomato and Jio Financial Services, both of them will be in focus because of that nifty rejig that will take place. Your view on both these two names? There could be some flows that will come in towards the end of trade.
I think Zomato is for long-term investors, and if you don't have exposure to that particular space of food delivery and quick commerce, then this correction is a good opportunity to get into Zomato, but you have to have a 3 to 5 year type of a view. Geo Finance, I would avoid. I think there are better plays in the NBFC financials than Geo Finance. A bit disappointed with the scale-up which has taken place over there.
You know, Deepan, another space is the gas stocks, right? So IGL, MGL, relatively cheaper compared to historical averages. I mean, and also, I mean, take a look at Petronet, for example. Only come up 10-15% from the lows. Any thoughts?
Yeah, Prashant, you're right, but there's no growth over there. And, a lot of shifting has taken place towards EV, especially on public transportation side. So that can act as a dampener as far as long-term demand is concerned. And these are basically utility companies. And with the economy reviving, stock market reviving, you want to go for small mid-cap stocks with high growth potential rather than safe stocks or defensive stocks like the gas companies.
By the way, the pre-open is coming up on your screen. Of course, the GIFT Nifty was weirdly unchanged. But the pre-open down 200 in the Nifty. I don't know. I don't think that perhaps it'll settle down. It's just the first 1 minute of trade, and we'll give it some more time. And we'll look at stocks, etc. in a bit from now. Maybe 2-3 minutes later, we'll start looking at individual names. Deepan, any thoughts on a name like Indus Tower?
Yeah, Prashant, first, a disclosure, we and our clients are invested and generally positive on that entire space. But, with Starlink coming in and now most of the capex and rollout of 5G over and done with as far as Bharti is concerned, and also the positive fallout of Vodafone, kind of remaining solvent and, going from strength to strength. So that risk factor also has come off in IndusInd. But look, the stock price has also rallied significantly. So I would say that, existing investors like us, we're remaining invested, but from a fresh investment perspective, I would say there are better choices.
All right. What about Ashok Leyland? What's the view out there? Plenty of buzz yesterday. Are they going to do some inorganic growth? That was something that the street was working. Then they were wondering, is it something to do with IndusInd Bank? At least as of now, it was neither. They're closing that European part of their business, which was loss-making, which in turn will be a positive. However, that IndusInd group, since they're part of the same group, could be a bit of an overhang on the stock. How do you view the stock, Ashok Leyland?
No, Nigel, generally positive on Ashok Leyland. And, we are seeing them steadily increase market share. The new products have received good response and they're giving tough competition to the market leaders. And certainly this particular development is positive for Ashok Leyland. Valuations are reasonable. And should the economy overall pick up, logistics and transportation pick up, it will benefit Ashok Leyland. As also the fact that if the RBI goes in for interest rate cuts, that may also provide a boost to Ashok Leyland, and then there could be some regulatory changes as far as scrapping is concerned. So very positive on Ashok Leyland from a risk return profile. And if there is any dampener because of these particular development, maybe a good opportunity for long-term investors.
I think that is weighing on the stock, actually, that additional pledge, that the promoters are taking on the shares that they have. So for the time being, the street is taking, bigger focus on that, rather than the closing down of the European subsidiary. And that is weighing on it. That was always the risk when IndusInd Bank itself had, fallen. We had highlighted that in various shows as well, that could be a risk. And it seems, as of now, Ashok Leyland is under pressure because of the promoter pledge on the shares that they have. Yeah,
absolutely. Sizable amount over there. And that's, that's something that the street is not liking at all. Now it's correcting a little bit. I mean, it's not 10%, 5-6%, now 1.5%. Let's see. Maybe it's not as severe a reaction as a 10%, but the fact is that there is a promoter level overhang on the stock. Anyway, for the pre-open overall, now we've settled down to a cut of about 0.5%, which is about 100 odd points on the Nifty. Look at Tata Motors in the pre-open, straight away 4% on the lower side over here. In fact, you should check out some of the other stocks as well. Samvardhana is down about 3 odd percent. Let's pull up some of the other names as well. Maybe we can get a Sona BLW and Uno Minda, some of the component makers that also have exposure to the US. Most of these stocks are starting on the lower side because of the tariff issue. Aside of that, HDFC Bank, TCS, some of the other biggies, they're also exerting pressure on the downside. Wipro's won a large deal. Wipro's up about 1% or so. Deepan, before we let you go, Within the large cap space, aside of financials, I mean, IT, I know you've been very circumspect and you don't like the fact that there's hardly any growth. What about, say, a stock like L&T, anything else, large caps, where you're willing to put fresh money to work?
Banks and L&T, I think.
Okay, I picked both the spots correct then, banks and L&T for you. And L&T's, yeah.
Those are the only two sectors or companies where there is still growth which is higher than the nominal GDP growth rate, and valuations are reasonable. So I would go, if you want to create a portfolio, the core holdings have to be the large cap banks, could be PSU bank like SBI and maybe an L&T, and then even a Bharti Airtel. Otherwise, it's getting very, very difficult to find large cap stocks which have got sustainable growth momentum of at least double digit within that particular category. So I would say these 3-4 companies have a good risk return profile. And certainly, I think you can be overweight in them. As a disclosure, we and our clients are invested in all of these large cap stocks I just spoke about.
All right, Dipan, thanks very much. Good to get your perspective as always. And since we started talking about L&T, let's take the conversation forward because there was favorable news flow around the company yesterday. The company has backed its largest contract ever from Qatar Energy for offshore hydrocarbon business. BNP Paribas then came out with a note. They quite like the L&T story. They have an outperformed rating on the stock. We have Priyankar Biswas, India Analyst Industrials, Logistics and Metals with us. Priyankar, thanks very much for joining in. So it's a big win, right? 15,000 crores of an order win. How does it play into the overall ordering activity as the year is closing out? I mean, in terms of ordering, I don't think L&T has disappointed anyone. It's just a question of better margins, better execution. Your thoughts, and why are you overweight on the stock?
Yes, thanks for all the relevant questions. In fact, I do recall having this conversation with you guys in earlier episodes as well. So the concern on L&T had typically been like literally for the last 4 quarters that the order inflows won't come. That is what the whole issue was, that the 10% growth that they guided won't come. Now, what you highlighted as a 15,000 crores order, I would say it's more closer to $4 billion. So something probably higher than 30,000 crores is what we are speaking about. So that itself takes this year's order inflow based on whatever I estimated to 15% plus rather than what the management has guided at 10%. So clearly the strength is very much there. And what we are saying and what we had put out in the note is that there is not going to be a capex slowdown specifically in Middle East in both CY25 and CY26. And we have put out that the tender pipeline as it prevails today is actually far higher than what it was prevailing at the same time last year. So just to put in comparison, like 235 billion of tender pipeline in Middle East right now versus something like 194 billion. So there is still a lot of growth that we are speaking of. No oil-linked related slowdown is supposed to happen.
All right. That was the fear, right, Priyanka? The recent narrative is that oil price can weaken, so it will impact Middle East capex. But you're not in that camp. You're saying that the Middle East capex is a secular upswing regardless of oil prices. Are we getting that correct?
Yes, right. So if you look at it, let's say from a pre-COVID level, the theory that you were saying used to hold true. That I agree. But if you look at it for the last 3-4 years, Middle East capex is already at its peak despite the oil price hovering around $75. One must note that. So the Saudis and the UAE are going for economic diversification, and that is where they have given published tender pipelines. And not all of these are funded by the government specifically. So they are funded by the sovereign wealth funds also. So it's guaranteed funding projects. So unlikely that the order inflows will slow anytime soon in the next year or the year after that. That is how I'll put it.
Priyankar, your target price, I think, on the stock is 4435. So you're seeing fresh highs. I mean, for L&T, the highest, I think, point was just around 4,000. Then the market corrected. Stock cooled off as well. What will drive L&T to that level? You mentioned the order book growth. I mean, this year has been fabulous. It'll end at 15%. In terms of, like I said, revenue and margins, are you penciling in any margin expansion to drive this kind of a stock price performance? And what about the top line growth for FY26?
See, the FY26 top line growth is actually underpinned by the order book that is already present. So there won't be much uncertainty on that end. That is how I'll put it. But yes, there are margin uncertainties. And what I will say is, yes, we are expecting the margins to move up. So this year, let's say we have a expectation of a margin of the core EBITDA margin around 8.3. Next year, we are building it around 8.6. Now, our assessment is based on the fact that, do recall, in 2023, L&T won some very large Saudi Aramco projects. That was sometime in mid of 2023. Now, this should cross the margin recognition threshold in this calendar year. And that is what will drive up the margins. So the energy project margins are somewhere at peak execution around 10%. And if you see a 10% margin projects getting up into the mix versus a 8.3 at an overall, so the natural maths says that the margin expands. So we are building in that. And the other factor that drives in is like, look, L&T's working capital levels are at 12%. Now, one may think that it cannot come down from here, but our view is it can come down to somewhere close to 10.5, 11 as well, because there has been some water-related overdues. And once that comes in, so that is where you will have the working capital levels coming down further. And who knows, because of such large cash flows, you may eventually have large payouts as well. And that can drive the thing up.
Priyankar, good morning. What are the other stocks under your coverage?
So we do look at, let's say, Cummins, AIA, and of course, the logistics space.
Okay. Any screaming buys from those areas?
See, we have been quite positive, I would put it that way, on, let's say, JSW Infra. That is a stock that I have been consistently pushing for some time. Because I feel that while the multiples looks optically high, but one must consider that the amount of growth that is happening. So, for example, like you will probably have 21 billion rupees of EBITDA now. And in FY 28 to 30, that can jump to anywhere between 90 to 100 billion. So if you consider that, I mean, the level of growth that you have there, I don't think there are a lot of stocks which give you that sort of a growth with absolutely a clean balance sheet. So that is one strong buy for us.
JSW Infra is a strong buy for BNP. Priyankar, thank you very much. And keep coming back. We'll talk more in terms of other ideas, etc. as well. Appreciate your time here this morning on CNBC. Well, there's about 3 minutes to go for the market open. Let's get 9-10 calls, maybe 9-12 calls now, I should rephrase. Mitesh, what do you have?
Go for with the buy on L&T for targets of 35.
We were just talking about that. Sudarshan, what about you?
Well, Marico, consider buying Marico with a stop under 627.
Okay. All right, gentlemen, thank you very much for that. Marico and L&T are the sort of calls coming through from Smitesh and Sudarshan. Trend is the next one we want to focus on. Stock actually did well yesterday, at least till mid-afternoon, maybe came off a little bit after that. Mangalam is here with more details. Mangalam.
Well, it's one of those stocks, which had been storied, had seen a big decline, and at lower levels, people are trying to find value here and, move around on that. So Macquarie this morning has written on Trend. They've initiated coverage with a target price of 7,000 rupees. What they say is it's a play on India's rising discretionary spend in fashion. They've, done analysis across all the Asian retailers, and they've said that Trend has the best retailing metrics in Asia when it comes to growth, return profile, and inventory turns as well. Add to that, they have the integrated backend, which allows quicker fashion-forward style drops, and new stores, which the company is putting through the franchise route, will also aid their return profile. So after the decline that we've seen, there's no worries about the story of the company going forward. The only question was all on valuations. Now that there has been a bit of a decline, the street believes that maybe this is a space to buy right now. Macquarie for sure has initiated coverage, a target of 7,000 rupees.
All right. Thanks very much, Mangalam, for that. So that is the view coming in on Trend. There was a 40% decline from the highs, and I think from the lows, maybe things have picked up a little bit now. And I think Macquarie, I saw something from Goldman as well a couple of days back coming through in terms of sort of overall industry perspective, Zudio, etc. 0.75% higher on Trend. Let's just quickly look at what the Nifty is left off with the pre-open, at least 53 points lower. So that's more like it. We'll just quickly run through the rates as they come up, and then we'll do stocks as we always do. So it's going to be slightly lower, mildly lower. 23,435 first rate, 23,400, about a third of a percent down. Nifty Bank is down about 0.14, 0.15. 51,180 or so is where that is at. Actually, it's almost flat. The Nifty Bank doing better than the Nifty. The small cap index is down a third of a percent. And I think you'll have the mid cap index, which will come up on your screen, is down about 0.45, 51,405 on the Nifty mid cap index. So that's the screen and the rates which are coming through. The Nifty heat map will give you a sense of how we are starting. But it's all about stocks this morning with auto comps, etc. in focus. You've got more down than up. And just about 15 names are higher, and the rest of the 35, 36 names are lower this morning.
And it's auto along the way. And the worst stock that's hit, and which is very sort of directly hit, is obviously Tata Motors, because of whatever imports that are going into the US from Jaguar and Land Rover, wherever those plants might be. But the fact is that once those cars are coming in, it's 25% tariff, as it's become very clear. So Tata Motors is a big casualty. There's a bit of a sentiment rub-off on Bajaj Auto and M&M. These are completely sort of inward-facing companies, and their export markets, for instance, Bajaj Auto are, Nigeria, etc., and Latin America. So they're not impacted by what's going on in the US. But sentiment rub-off, yes, slightly on the lower side. Eicher Motors also down about 1.5% at this point.
The tariffs, I think, only passenger cars.
Light trucks and passenger cars along with components.
Yeah, but I don't think two-wheelers, I'm not sure. I mean, yeah.
I'm saying that they don't have exposure. I mean, Bajaj is not exporting anyway to the US too much. Their markets are Latin America, Nigeria primarily. But there's a bit of a sort of sentiment rub-off on the downside. Maruti, of course, is in focus because of the boardroom changes, the first ever Indian getting appointed, but stocks, of course, down about 0.5% at this point in time. By the way, let's look at Ashok Leyland because of this overhang issue on the promoter pledge, 4% down on that stock as well, since we're talking about autos. So aside of autos, IndusInd Bank is lower by about 2%. Sun Pharma, Dr. Reddy's, is some selling in pharma names as well. HCL Tech is down about 0.6%. It's not too bad actually for the Nifty. Let's talk about the winners then. What's keeping it up on the other side? Wipro, big order win announcement coming through, 1.5% up. L&T, we were just discussing that stock with our experts, 1% higher over there. Trent, because of that initiation brokerage report, 1.5% up there. Today, some of the big boys are supporting Reliance, ICICI Bank. These stocks right now on the positive side of the screen. But for the time being, Nifty is still lower by 40 points.
Well, that's right. From the broader markets, though, plenty of stocks are calling for attention. Some of them are Motherson, as you said, 6.5% down. So now BLW, that stock is down. But remember, the management had joined us. They said they had a plant in Mexico and they were supplying in Mexico. So they believe that they would not be hit. For the time being, the stock is down close to around 5% or thereabouts. Other couple of, auto ancillary companies, like a Balkrishna Industries has lost close to around 4%. So keep an eye out on that one. Mid-size IT companies as well are getting hit. You have KPIT Technologies that is down 3%. Tata Elxsi as well is down close to around 2% or thereabouts. BSE, investors like what they've heard with regard to the company considering a bonus issue. For the time being, the stock is up 3.5%. So big up move is what we're seeing out there. NBCC is up close to around 3% and PB Fintech up close to around 1.5%. Good recovery is what we're seeing from the lows on the Nifty itself. Now it's down only around 30 points or thereabouts. And as we mentioned earlier today as well, Trent could be a stock you should be focusing on. Yesterday had good price action. You have the initiating coverage as well. And they've added fair number of stores in this year so far. So I think the street will like that. On the flip side, you have a couple of other names that you should keep on your radar. Zomato as well as Jio Financial. Both of them will be part of the Nifty effective tomorrow. For the time being, we're seeing both those two stocks doing a relative outperformance.
Absolutely. And up on your screens now. By the way, the Nifty has completely recovered, right? I mean, we started with about a 0.25% kind of cut. We're now absolutely in the flat zone, 20 point lower, 23,467 is where we are at this point. So it's more stock specific with Tata Motors and some of the Motherson and Bharat Forge, etc., which are down in varying degrees. But for the broader market, we've come up pretty smartly. We have Lawrence Belanco now joining us. He's a market master of the day. He's, of course, a much sought-after view on technicals with CLSA. Lawrence, great to have you with us back on the program. Thank you for your time. Prashant here. I remember the last note you put out something called the breadth thrust it was, right? And you said, it's indicating that maybe there's a bit of an up move here. And the up move has happened. From the lows, markets have picked up smartly. Where from here, Lawrence? And is it going to be, as some have put it, W kind of a market, up and down a few times over, or have we seen the worst already?
Yeah, I mean, I think to make a short answer to the question, I think the worst is over. I mean, there were two things we were looking at. One is, you know, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, you know, that would suggest that we revisit the highs. We trade back over 26,000.
Okay, so you're seeing a move back above 26,000 perhaps, and the worst is over, Lawrence. This is sounding really good. So then what is looking the best as India kind of recoils and, you know, goes back to those old highs? Where do you see maximum momentum building in the market?
Yeah, it's quite interesting. Late last year, we talked about the private banks over the PSU banks as a key sort of relative ratio. And, you know, in the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, you know, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks. But, you know, just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen RCRCR trade back to its all-time high. So, you know, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance, another sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now in the Indian market.
Private banks and big financials like Bajaj Finance. Indeed, I mean, what a move Bajaj Finance has showcased, right? Lawrence, just to go back to the numbers and to understand the time range again, over how many months, what's your time period in which you see the all-time highs come back, and what's the exact level that you would track?
Yeah, look, so I think the key message here, if we just take the average back testing of the breadth thrust signal, 250 days after you get that buy signal, the market is up 82% of the time, and the gains on average is over 13%. So, you know, if you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window.
Hi, Lawrence. Good to have you on the show. We'll get back to equities. For the time being, I wanted to focus on two asset classes which are very, very important from an India equity market perspective. The dollar index, has it topped out? And are you looking lower levels on that one? And the other one is Brent crude prices as well. That seems to be breaking down. From an India market perspective, that's another tailwind for us. So give us levels on both these two.
Yeah, so let's look at the dollar index to start off with. December, we did see a break above the 106, 107 area. And what the significance of that, it's the upper boundary of the trading range that the dollar index traded between 2022 and 2024. What we saw basically in February is a sharp reversal in the dollar that saw the dollar index drop back into that trading range. So we've basically seen a reversal in the dollar index back into a trading range. So really more in a neutral setting, let's say from an intermediate term perspective over the next 6 months, that we stay range bound between this 100 and 106. If you take a step back and you look at the longer term charts, you know, the dollar index has been in an uptrend since 2011. But this lower high that you've made in December relative to the September 2022 high does give you an indication that that dollar uptrend over the past 14 years is starting to top out. So the longer term profile is starting to provide us with evidence of lower highs. To confirm a major reversal in the dollar index, we still need to see a break below the 99 to 100 area. So next 6 months, look for a trading range and consolidation. On a longer term side, a break below 99 would be a major reversal of that dollar uptrend you've seen for the past 14 years.
That's interesting. Sorry, go on. Please, you want to finish that point.
Yeah, so I just wanted to touch on Brent then quickly.
Yes, please.
And then on Brent's, you're quite right. You know, over the past 18 months, we've seen the $70 to $71 area be quite a key support area, but every rebound that we've had off that $70 to $71 support area over the past 18 months has met selling pressure as on every rebound. So what you've had is this characteristics of selling the rallies in Brent, which builds a pressure on this 70 to 71 and ultimately suggests a break below that level. And again, from a longer term perspective, that suggests a downside target of 51 to 52 on Brent oil.
Okay, 51 to 52 on Brent oil. I got that. So interesting and sort of strong views in that sense. So Lawrence, just on that Nifty point, so 13% over the next 1 year or so, right? Just going
Yes.
by this signal.
Yes.
Roughly. Okay, got that.
And if you wanted a shorter term time horizon, at 90 days out, average gain is 7.5%.
Okay, got that. Lawrence, what about the NASDAQ? And because, here the Nifty and the NASDAQ have been the two best performing markets and very closely correlated. Is the US market, how's the US market structure looking?
Well, it's quite interesting. If you look at year-to-date performance across asset classes, there's significant performance dispersion on a year-to-date basis. But even if you take it back to the Trump election victory back on the 5th of November 2024, and the major US indices from the Mag 7, NASDAQ, S&P, are either flat on the year or marginally negative, where China's positive, Europe's positive, and India's sort of recovered into positive territory with this recent rally off the low. So I think we are seeing major dispersion develop, and as long as the US doesn't roll over into a recession, a slowdown in the US can continue to see this performance dispersion. So I definitely wouldn't start an investment thesis with this was the correlation, because we've seen over time that correlations can break down and a lot of money can be made on a breakdown in these correlations.
Lawrence, I just want to talk about Indian IT, because the thing is that the foreign dollars have finally started flowing back into this market after a long time. You mentioned financials will definitely be big leaders. IT may not have a fundamental reason to rally, but do you see it on the charts?
So looking at the charts, unfortunately, the relatives rolled over. We're below the 200-day. The absolutes rolled over. We're below sort of key moving averages, and we also below the 2021 and 2024 highs that we set. So we basically fallen back into the trading range that you saw in the first half of 2024. So we're not really seeing any leadership from this sector. The large cap names look sort of more vulnerable than some of the mid cap names, after the mid caps names obviously had significant corrections from their September highs. But yeah, it's not a leadership sector. It's not something that we're sort of pushing as an overweight, at least from a technical basis.
Okay, so not really leadership in IT. Get that point. Financials, you made that point very clear. Lawrence, a lot of the state-owned companies, they were the leaders of the market up until September of last year, right? These big stocks, the PSUs, and even other capital good companies or the MNC companies like Siemens, etc. This was the red hot part of the market. How do you find the structures here now?
We've started to see a bit of an improvement in the infrastructure names from the PSU side. So NTPC, for example, that's had a good recovery, but we're still below the 200-day. So there's a bit more work that we need to see, to confirm that in the same way that we've seen confirmation in the banking side. So the PSU non-banking parts of that PSU index is what we focus on, but we do need to see a bit more evidence that we've got a confirmed base where we think it's more sustainable on the upside. So a bit more work needed in that space.
Lawrence, before we let you go, will India outperform from here on global markets? We've had a period of underperformance and now we're getting our mojo back. Do you think the Indian equity markets will outperform? That's point number one. And that 7% return that we've seen traditionally in the 90-day window, some part of that is already played out, the 4% that we've had in the last 1 month or so, or is it from here on do we calculate it?
Yeah, so look, you're looking at an average, right? So each move has different speeds to how we typically see it. So yes, we could spend a period of time just going sideways and then have another 4% upside within that sort of 90-day window to get there. It's so very hard to sort of pinpoint exactly from a time frame perspective. But the point is, and the message should be here, that breadth has improved. So the participation in the rally and the break back above the 50-day is typically and historically a strong signal that while we'll get pullbacks on the way, that we should now be buying the pullback rather than selling the rallies, which has been the behavior that we've seen from September. to answer the question on a long-term basis, we still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But still having a long-term upside target of 37 to 42,000, I do think, India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Okay, Lawrence, good to hear your thoughts. Thanks a lot for joining in and join more often. You sounded quite bullish and optimistic today. The bulls will love it. Thanks a lot, Lawrence.
You only want the bull message, right?
No, we had a period of underperformance, Lawrence. It's good to hear a bullish thought as well. Thanks for joining in. Let's focus on the next stock, Suzlon. That's the one on our radar. Motilal Oswal, they've initiated coverage on the stock. They have an aggressive buy rating. Let's find out more about how things are shaping up from here on. We're joined by Mr. JB Chalsani, the Chief Executive Officer at Suzlon. Hi, sir. Good morning, and always good to see you in. Well, the Motilal Oswal note is quite positive on the prospects of the company. Let's talk about the industry first. Wind energy here in India is relatively underpenetrated if you compare it with the globe. And Motilal, in their note, they are saying that wind energy is expected to account for close to around 20% of India's renewable energy by 2030. Currently, I think it's low to mid-teens. Do you second that thought? Do you believe that's possible, 20% of the total RE space? And also, they're talking about India's new wind energy installations to reach around 8 gigawatt annually by FY27. Is that possible, 20% and 8 gigawatt?
Absolutely. If you look at even the projections requirement as per the CA projections itself, by 2030, 300 gigawatts is solar and 100 gigawatts is wind. So obviously in the 400 gigawatts, 100 gigawatts is wind, which is 25% of renewable energy, not counting the hydro, which is different. And as far as reaching out 8 gigawatts, I've been saying this, it is not something an unachievable task. Even if you look at FY17, we did about 5.5 gigawatts in the country, which was the highest ever achieved in the wind. That was for 2 megawatt turbines. Now every turbine is 3 megawatts and more. So if you convert that, because turbine is turbine, whether it's 2 megawatt or 3 megawatts, direction remains the same. If you convert that, even that point of time, we had a capacity of 8 gigawatts implementation capacity in 2017. So therefore, I really don't see an issue in that. There are few challenges on the ground, which needs to get sorted out, and we will ramp up.
So 20% is possible as a percentage of the total mix and close to around 8 gigawatt of installations by FY27. Got that. That's with regard to the industry perspective. For your company, Mr. Chalsani, if that's the case, 8 gigawatt, and you have, I think, roughly around 40% of the market share. Motilal Oswal, and they know they are talking about you hitting close to around 3.2 gigawatt of installations in 2027. Possible, right?
Yeah, absolutely. We are at 2.7 gigawatts of installations in the country till end of February. So I think we should cross that number as a country, the wind installations. And when you're talking about the percentage, there are two different percentages. One is our share in terms of total installed capacity in India till now. So we are number one and far ahead of everybody else at 31% market share on the installed capacity. And if you talk about the currently, what is most important for us is the order book. And if you look at calendar year 24, some repeated news agencies came up with the reports. Globally, not just here, we are number 5 in terms of order book. And they also said not number 5 compared to everyone else. Suzlon is the one which has 100% firm orders. Okay. So therefore, it's not just the orders. Globally, we're number 5. And then we also have firm orders.
Okay. All right. So just to confirm, 3.2 gigawatt of installations possible by 2027. For the industry, it could be in the vicinity of around 7 to 8 gigawatt, right?
No. 3.2 gigawatts of installed capacity would reach this year, this financial year, is expected to reach.
And for Suzlon in the next 2 years, given the industry will move from around this 3.5 to around 7 to 8, as per what projections suggest, by FY27, you could do around 3.2?
No comments. We don't give a guidance in advance. You know that very well. We always have this in CNBC. Obviously, that looking at our market share, being a market leader, more important is, for us, the business scenario got changed. Earlier, it used to be completely the COD. because we were doing 80% or 90% of our order book used to be EPC orders. But today, the 20% is EPC, 80% is equipment supply and parts flow. So therefore, for us, our business is how many turbines we supply. Okay, then because someone else is going to do the commissioning of those turbines. So the business slightly got changed, but we would obviously the market is going to go to that level. We would grow, but I don't want to give a number to it.
So let's talk about that. I think the order book, as of what we know, the latest numbers, end of Q3, I think was around 5.9 gigawatts. So as we start looking forward to FY26, how is the tendering activity? There are some reports indicating that maybe there's some slowdown. Earlier, the overall update was about, I think, 10 gigawatts of tendering. That's what our colleagues are telling us. And the reality has been a little lower than that. So can you tell us what's the on-ground situation?
Yes. So the first thing is that what impact the tendering has on our order book is important to understand.
Sure.
For us, if you look at our order book, what you talked about, 5.9, the simple addition of 5.5 versus subsequently whatever we announced, 60% of our current order book is coming from C&A segment, which has nothing to do with the bidding, and it has nothing to do with PPA. Okay, this is all for the large conglomerates for their internal consumption, whether it is JSPL or Charity or it's Serentica. These are nothing to do with the bidding. And that's where we are number one. And then we are a preferred the OEM for these people. So therefore, that's one segment which there is no issue. Balance 40%, 20% of that segment is coming from public sector. Okay. You know that we won NTPC single largest contract of 1.165 gigawatts. And there are more in the pipeline for NTPC. And then even other PSUs have said that they will be coming out with more and more tenders. So therefore, that segment is second segment. Third segment, 20%, is what comes to us from the bid PPAs. And every single order we have taken in that segment has a firm PPA. Only after that is what we'll take the order.
No, fair enough, sir. So it's a mix. I completely understand that it's a mix. Your direct work you're doing for different corporates, some would be competitive bidding. But a general sense, now that we are going to be looking out for FY26, how do you see your order book growing across these segments?
Yeah, our order book, in my opinion, would remain the more or less similar sort of a category. 40-50% in C&A, and PSU I expect is going to increase, and then the bid will remain at the same 20-25%. But now addressing your specific question of bidding, bidding is happening. So there were a few concerns raised in the recent past about the delays from the bidding to the signing of power purchase agreements. Okay. That, if you see in the last 30-45 days, there is a significant progress which is happening. So there is a sense of urgency at various levels. And we are now seeing the traction in terms of signing PPAs. You see in the last 30-45 days itself, number of PPAs have been signed. So therefore, bidding was never an issue. There's a huge amount of bidding happening, happened even today. Those are need to get converted into PPAs, which is what is moving now. That segment will increase significantly in FY26.
All right. Mr. Chalsani, good that you came on and spoke to us. Important last comments there. Things have picked up in terms of PPA signings, etc. last 35-40 days. We'll speak again, sir. Good luck. Thank you very much for joining us here on CNBC-TV18. We'll take a quick commercial break here. We're going to come back and we put the focus back on Trump tariffs. Sunil Kaul of Goldman Sachs will talk to us about what kind of reciprocal tariffs India and other emerging markets should expect. But the focus is very much on India in that conversation. Coming up.
Of twists and turns, but valuations are now lower. Is the worst priced in? Let's see how this one plays out.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah.
Okay, welcome back. April 2nd is essentially the deadline, tariff deadline for reciprocal tariffs. Now, President Trump has called it the U.S. Liberation Day, but most market participants know it as Reciprocal Tariffs Day. There have been a lot of uncertainty around tariffs. Markets remain on the tenterhook. Let's dive deeper on the tariff issue. I caught up with Sunil Kaul, Global Emerging Markets Equity Strategist at Goldman Sachs, and spoke with him about how to think about this issue, which is right upon us.
Our sense is that, look, India will be one of the many trading partners that will likely get sort of be included in the reciprocal tariffs. I think the Office of U.S. Trade and Representatives, they sought inputs from 19 of the trading partners. Out of those, 15 have trade surpluses with the U.S., which covers close to 90% of the U.S. imports, right? So India would be one of the 15 trading partners we think that could come in the reciprocal tariffs. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates. I think the one thing I wanted to mention in here is that our general sense is that these proposed tariff rates are intended to be sort of basis for negotiation, right? Like we have seen in Mexico and Canada's case. And so the likely number for each country is probably going to be somewhat higher than what the pure sort of product level matching of the tariffs would suggest. And then there will be room for that to get negotiated down.
So on a weighted average basis, tit for tat, reciprocal tariffs, 11% could be the number. Again, this is all in the possible. This is more than anything else a thought exercise. Yeah. But if you throw in VAT, etc., as well, the number could be actually meaningfully higher than 11%. It's possible.
It's possible, yes.
And the way, Sunil, as you also sort of explained, it is in a way an opening gambit for negotiations. Is that the way to think about it? I mean, say for example, if the number is 20%, market will be shocked. But will that then be? I mean, will they walk back based on how negotiations go?
I mean, that's exactly our expectation, Prashant, because there are a couple of things in here. One, I think if you looked at the amount of imports that these trading partners have, that's almost thrice what the imports from Mexico and Canada were. So the quantum we are talking about is quite large, which means that if you go by precedence, if they sort of delayed the tariffs on Mexico and Canada by 30 days, and then they sort of had partial reduction in those tariffs for another 30 days, that just suggests that there will be sort of room for negotiation and it won't be sort of implemented immediately in India's case, and for that matter, in most countries' cases. And as I said, these numbers are sort of open to negotiation, in which case the numbers will be higher, and then there will be that sort of 30 to 60 day window, as I just spoke, where there will be sort of obviously back channel talks, and there will be some room to take those numbers lower.
And it is also possible that instead of saying the number is 20% and then walk back from 20, I mean they say, well there's 10 now and 10 more coming. So that also in that sense perhaps could be a way to negotiate and show me proof that you're willing to work with us, and then maybe so we don't know, right, what combination and what measures and what route they use.
That's right. I mean, as I said, we are not entirely clear how it will be implemented, but just going by the prior instances with Canada and Mexico, most likely the number is going to be higher. Most likely it won't be implemented immediately on day one. They will give a window before this gets implemented. And then within that window, the numbers will be likely negotiated down with the final number, or in some cases, if there is potentially a deal, then it could be even sort of revoked entirely, as we saw with in some cases, right? So there is, as you said, there is a lot of uncertainty around how this pans out, but it does feel like the market will be somewhat negatively surprised, because the quantum of this is going to be larger than many of our investors are thinking, and it's probably going to be also pretty broad-based when it comes to different countries.
Market expectations, Sunil, are under 10% right now?
Yeah, I think on a weighted average basis, some of the recent surveys we did among clients is around sort of 9-10% on an average basis across these trading partners, not sort of singling out India in here. But that's, I think, what the expectation is, so about 10%.
Okay, all right. How are you leaning to the fact that VAT will be included? And maybe who knows, currency as well, right? I mean, the field currency is undervalued in many trading partners. Japan has been mentioned, China, and so what's your sense? Is that
look? I think that's why we said the numbers could be actually much higher because, as you entirely correctly pointed out, Prashant, there is the product level sort of tit for tat sort of tariff matching. On top of that, there is the non-tariff measures. On top of that, there could be sort of VAT. And then there is the currency undervaluation in some cases. And India obviously checks that box as well as per sort of US administration. And then there is the additional news flow that they just mentioned in terms of countries that are importing oil from Venezuela. They could also be subject to additional tariffs. And obviously there are other countries, China, EU, which are kind of more impacted from that. But India at the margin is also there. And so there are some multiple layers on top of the pure reciprocal level product by product tariffs, which could come in. I think all of those things actually point to the same conclusion, which is that the initial number could be a little bit higher than what the market is anticipating, which is partly the reason that we also think that it makes sense to be a bit sort of more cautious on the markets in the near term because of this sort of impending risk.
Mm-hmm. But if it is, you and I are talking about it, and people around dealing rooms and in institutions are talking about this. You are talking to clients as well. So in a way, if this becomes the view that, start with a big number and then walk back, will markets react in a very negative way? Maybe we get a bit of a dip globally and then that gets bought into?
Yeah, I mean, that's a great question, Prashant. I think the way this has been sort of getting asked in our conversations is that is April 2nd the clearing event in that sense? Is that, okay, so they announce stuff and then the market sort of looks beyond it. So now it's already announced and that's a clearing event for the markets. Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. So I think the way we sort of think about it is that you probably continue to have some uncertainty related to tariffs over the next sort of 30 days before things start to get 30 to 60 days before things start to get clearer in terms of what the final tariff rate would be for each of the countries. And so I think this will be something which will be an overhang for us for the next couple of months.
Here in India, there have been some news reports. Reuters reported that India is looking to cut tariffs on half of its imports, U.S. imports into the country. So it's fluid out there, right? I mean, so this is also obviously a little bit of posturing. I mean, showing the other side that we're willing to work even before and preempting some of this. So any thoughts there?
Yeah, I mean, exactly as you said. I mean, as we know, the U.S. Commerce Ministry was in Washington a couple of weeks back, and obviously there have been talks with India, similar to the other countries as well. So I think it's all a part of the deal or the negotiating tactics, as we just mentioned, Prashant. And so, I mean, it could very well be that, as you said, India would reduce tariffs on some of the imports well ahead of this. Or even sort of post the actual announcement, because the announcement, as I said, the implementation would be delayed, right? So India could still kind of implement these things post the April 2nd announcement. They could sort of also increase the purchases of sort of defense, energy related imports from US. And so I think each of the country will probably try to negotiate, probably try to lower tariffs in some categories where it's too high compared to what US is charging. And then also sort of increase some of the spending in areas of defense, energy, which US is keen on. And so all of this will be probably part of the countries showing US that they are willing to work with US and come to a more reasonable deal.
Is it possible to form a view on the markets with all of this uncertainty? Do you have one? The 1st of April, we'll also have these middle-class tax cuts which come into force. effect perhaps a few months later. 9th of April is the RBI, maybe a rate cut. What's the view on the market itself here?
Look, I think, Prashant, as you may recall, so we had sort of downgraded the market from overweight to market weight back in October, so about 6 months back, and the view there, and it was largely on the back of the cyclical growth slowdown, right? So fast forward, we already seen markets have come off, valuations for the large caps have come off, but our general sense is that on the domestic side, your growth has kind of bottomed out, but it's still sort of going to be a gradual recovery in here. You still have policy, especially on the fiscal side, which is somewhat restrictive. We still have earnings cycle, which is still seeing more downgrades than upgrades. So we still think there is a couple of quarters of downgrades left. We still know that small and mid caps have much higher valuations, and the positioning there is still not cleaner, especially within the domestic funds, right? So there is still sort of more risks on the domestic side, even though I think the worst is behind us. But then on top of that is what we were discussing on the global side, which is that you have the impending reciprocal tariffs that could come and hit us, which will be with us for a while before things stabilize there. And so because of all of this, we still think it may be a little too early to take broad-based exposure in the market. So we are somewhat sort of cautious in the near term. I think we are kind of much more sort of alpha focused, looking at companies and sectors where you got sort of higher earnings visibility, more stronger balance sheets, and sort of more quality bias. I think that's how we're kind of leaning within our sector allocation.
Okay, all right. That's a conversation that Prashant had with Sunil Kaul, Goldman Sachs View, coming in over there. Well, let's now put the spotlight on Ashok Leyland. Ashok Leyland yesterday announced that they'll be closing their Switch Mobility UK plant. To talk about this and, of course, other concerns, the bigger concerns around the extent of promoter pledges that were announced yesterday. The promoter entity has created a pledge, I think, worth over 6,000 crores just yesterday. We have Mr. Shenu Agrawal, MD and CEO at Ashok Leyland, joining in. Mr. Agrawal, let's actually start with the news first, which came in yesterday. You announced the consultation process for closing or restructuring of this UK facility. Just tell us what led to this decision, what are the kind of losses this unit was making, and I think you've invested about 2,500 crores so far in this UK facility. So what happens to all that?
Okay, so firstly, thank you for having me. Listen, yesterday, like we announced, that Ashok Leyland had been committed to the UK market for about 15 years now. But in the recent past, what we observed was that the market variations were just too much. And also, we could not come up with a very competitive cost structure to be able to serve the market in the right manner. We had been making losses in the UK for many years now. And after having tried several things, we have taken a decision to start this consultation process, which might lead into cessation of the manufacturing and assembly activities in the UK. Of course, we are not exiting the market. There are two things that we are working on. Firstly, we do want to continue to support our customer base in UK by providing all aftermarket services. And the second thing is also we are trying to identify an alternate location for manufacturing of these products that are that would be destined for UK and for Europe. As far as the losses are concerned, in the recent past, we have been making about 2 to 3 million British pounds of losses every month. Now, the number varies depending on how much orders we have in hand and how much we can fill up our capacity. But that is the broad range between 2 to 3 million pounds per year. And of course, once this consultation process is over, and we have complete clarity as to which way it will go, we think that most of these losses should be behind us now.
Point taken. Mr. Agrawal, if you could talk about the timeline of Switch UK Mobility, the whole consultation process and the total cost you would likely incur.
Yeah, so see, what we are estimating right now, although the final number will come once the consultation process is over, is one-time closure cost would be somewhere around 5 to 10 million pounds.
All right, Mr. Agarwal, for Switch India, as I understand, you are all set to turn EBITDA positive in FY25. By when and how do we see the company turning PAT positive? And if there is any further cash inflow likely?
So yes, like I said, Switch India is expected to be EBITDA positive within FY25, and now FY26 is actually looking much more promising. We have a very large order book in our hand, which is 1,300 plus buses we have orders for. Also, on the overall volume for buses, we think we should be able to treble that in FY26. On LCV also, although last year was the first year of the launch, but we did cross the number of 1,000 units in FY25. So that number we are hoping should also double or more than double in FY26. So it is, Switch India is moving on a very good path. We are focused on bringing this company to PAT break even, so it stands on its own legs, and that we think should happen within next 4 to 6 quarters.
Okay. Mr. Agarwal, at some point in time, considering that you're talking about a lot of the growth expectations here, would you require to raise any money, to perhaps further invest in this business?
Yeah, that is our plan in the medium term. But right now, as you know, the evaluations for the EV businesses are not very good, right? And therefore, and we are not in a hurry to raise any external funds because, like I said, company is doing fairly well. Their cash requirements are minimal, right? We don't foresee any significant amount of equity infusion for Switch India also in the near future. So we are not in a hurry at all. Ashok Leyland balance sheet is very strong. After many years, we are a negative net debt company now, and we hope to improve that situation by end of this quarter and going forward. So yes, but within a 2-3 year time frame, we will decide whether we want to go through a private public placement to raise some funds, or we want to go for straight for IPO.
Absolutely. Mr. Agarwal, last evening, there's been a disclosure of promoter creating pledge of 30 crore shares. I'm asking this concern in the market regarding the pledge and whether impacts Ashok Leyland, whether this is for meeting IndusInd Bank's fund requirements. Have you had any communication with the promoter in this regard? What have you heard?
Listen, firstly, I think you are asking the wrong person, but what I would say is that the Hinduja Group has many businesses outside Ashok Leyland, right? And many of these are doing very well. Secondly, I would say that, we are really not privy of the matter as to what is the usage of these funds. But of course, if we get to know more, we'll be very happy to share with you. And finally, I would say that, during various interactions with the promoter, we have found that they are more than committed to the success and growth of Ashok Leyland. Many times we have been into discussions with them as to how Ashok Leyland can move forward in fulfilling its vision of being in the top 10 global CV players. So I can assure you that they are fully behind the company.
All right, Mr. Agarwal, we'll have to see how things pan out for now. But thanks a lot for joining in and speaking to us here on CNBC-TV18. Well, let's get back to the markets then. We've seen a good recovery from the lows. We had a bit of a dip in the first few minutes of trade, but that dip got bought into. And the Nifty Bank, we pointed this out earlier today, that given the global uncertainty, if we need to see a pullback, the Nifty Bank needs to perform. That's precisely what's happened. Mitesh Thakkar joins in back on the show. Hi, Mitesh. Buying the dip has worked today. Levels you're looking at on the Nifty Bank, and also a fresh couple of picks?
I think, as I said, the bias and the trend was on the upside. Now, I think, this low which is there on the Nifty was around 23,412, and I said 23,400, 380 might be a very difficult level for the Nifty to get below because the structure is positive and we've had a good retracement. So that level is held. That confirms that 23,400 in the near term should be an important reference point. And with this bounce back, I also further mentioned that, we might retest the 23,750, 800 zone. So I'll maintain that bias. With that, I have two banking names on the buy list, Bank of India and Bank of India. I think both are looking very good. Bank of India is a buy with a stop at about 105 for targets of 112. And Bank of Baroda as well is a buy. Keep a stop around levels of 224.5 and 224 maybe, and look for a target of 236.
Absolutely. Mitesh, stay with us. We're going to come back to you for more questions in terms of specific stocks. The big loser, of course, on the Nifty is Tata Motors. I mean, Tata Motors is down almost 6%. The next biggest loser is Dr. Reddy, which is down barely 1.5%. So reacting to that auto news. Samvardhana Motherson is the other one which is reacting at the broader space as well. Let's revisit these. Sudarshan is here with what he's learning and understanding. So over to you.
So most of the auto stocks are under pressure, but amongst all these stocks, two stocks that are seeing a big fall are Tata Motors and Samvardhana Motherson. It's on the back of announcement by US President Donald Trump, who has announced that there will be 25% tariff on all the cars that are not made in the US, and also has talked about auto parts. Tariff on auto parts, and these tariffs would be effective April 2. Now, why Tata Motors is in focus? Because US is one of the most important markets for JLR, and North America forms nearly one third of total sales of JLR. And the most important point for JLR is that it does not have any production facility in the US. So all the JLR cars which are sold in the US are imported from other countries like UK or other countries. Now, why Samvardhana Motherson is in focus? First, it generates nearly 20% of its revenue from the US. But for Samvardhana, the important point is it basically supplies auto parts to those companies which export cars to the US, and those cars might be impacted, and indirectly it would impact Samvardhana Motherson, which impact comes around in the range of 6 to 7%. That's the reason you are seeing a big fall in these two stocks.
All right, got that. Sudarshan, thanks very much. So that's the auto impact that's playing out. Let's focus also on NBCC. Remember, NBCC announced a very big order win along with the Maharashtra entity spread over several years. Vivek is here with the details. Vivek?
Well, that's right. It's a very interesting development that NBCC yesterday updated the exchanges. So what is it that they've done? Yesterday they said that they've signed a memorandum of understanding with Maharashtra, Mahatma Phule Renewable Energy and Infrastructure Technology Limited. Now, this is a collaboration between NBCC as well as Mahapreet, as it is known as. This particular collaboration is to jointly develop as well as undertake consultancy, fee-based, EPC as well as renewable energy projects. With this, NBCC now enters the redevelopment project arena as far as the state of Maharashtra is concerned. So what are the projects that they've targeted so far? It's the cluster development project in Thane. Data centers is something that this particular platform will look at, renewable energy initiatives, as well as slum rehabilitation projects in MMR, which is the Mumbai metropolitan region. Along with that, they will also be looking at residential products under the Pradhan Mantri Awas Yojana. So NBCC yesterday has informed the exchanges that the total scope of all of these projects is close to 25,000 crore, and these projects, once they do get the orders, is expected to be executed in the next 3 to 5 years. So what we need to watch out for is the exact scope of work, what are the projects that come into place, and what will be NBCC's share as far as the entire 25,000 crore pie is concerned. But nevertheless, the stock is up on the back of this particular announcement.
Vivek, thank you very much for that 3.5% high. Wipro is the next one. Rima has got more. Rima.
Well, it's a mega order win for Wipro, which has boosted the share price today. So the company is won from UK's insurance company called Phoenix Group, a £500 million order. That's about $650 spread over 10 years, which means approximately, simple math will tell you it's about $65 million of incremental revenue, and that's pretty sizable. According to analysts, that could add about 0.6% in terms of annual revenues. But remember, TCS also has an existing partnership with Phoenix Group, and what we understand that both Wipro and TCS will be servicing Phoenix Group. But it's a big mega deal for Wipro, and that's got the street excited. Back to you.
Okay. All right, Rima, thanks very much for that. A couple of IT names in focus there. We've got Vivek back in to talk about the impending Nifty regime, the inclusions, exclusions, and of course the fund flows that can be expected. Vivek?
Well, it's the last Thursday, and it's expiry. So on the back of that, also remember earlier in Feb, the NSE Index Committee had said that there would be changes as far as the constituents of Nifty 50 are concerned. They announced a whole raft of changes for the other indices as well, but we are focusing on the Nifty 50 changes because this means that today a whole host of passive funds will be forced to make these changes on account of their changes that will be effective tomorrow on the Nifty 50. So what comes into the Nifty is Zomato as well as Jio Financial come in. IIFL Capital desk actually estimates that Zomato today could see inflows of close to $421 million. Jio Financial could see inflows of close to $221 million. On the other hand, what makes way, both the BPCL as well as Britannia will be out of the Nifty. So BPCL a little over $160 million of outflow and Britannia over $170 million of outflow. So expect these changes to take place in the session today.
Okay, all right, Vivek, got that. Thanks very much. By the way, look at the market screen. We started with such negative news, right, on the global front. But that's what we were saying, that the local news flow is very strong, both on FPI flows, on corporate action, corporate commentary. And look at the market now. The Nifty is sailing away, morning highs on the index, 108 higher. The Bank Nifty continues to lead from the front. But aside of the Bank Nifty as well, there are lots of other stocks, Hero Moto, L&T, Wipro, many names beyond the financials that are doing well. Reliance itself up about 1% trend. So it's a very green-looking screen this morning.
And the interesting thing is there is nothing extraordinary. If you just look at the Nifty top gainers, right? I mean, the gains are all 1%, 0.5%, 0.75%. So no 3, 4, 5%, no outsized moves anywhere, especially amongst heavyweights or, not heavyweights as well. It's just that broadly everything is up. You've got just about, 10, 12 names which are lower. And what is down is also down 0.5%, 0.25%, except Tata Motors, which is down sharply. So, it's the bulk of Nifty 50 names which are higher. Small gains, but most of it up. And I think that's essentially causing this nice lift which we have in our hands, about 120 points or so. Market breadth, I hope it also picks up, right? I mean, we've just flipped into the green. 1,300 stocks are higher and 1,250 stocks are lower on the NSE. So still close to 1:1. And we'll see how this one progresses as well. I think more on markets in a bit, but it's time for another quick commercial break here. So Manisha is going to be with us for some commodity chat on the other side. Stay tuned.
Expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around. And our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the U.S. or in other countries, and that would not be good, I think.
Welcome back. Let's put the spotlight on the commodity markets now. We have Manisha joining in. Manisha, morning. So what's catching your attention today?
Well, I'm looking at the gold prices right now because we are trading very close to those all-time highs yet again that we hit in the month of March at $3,057 an ounce. So holding around that 3,020 to 3,040 in the last couple of sessions now. What is important is that you have seen gains in the gold prices come ahead of the U.S. reciprocal tariffs that take place on 2nd of April. And then the U.S. Fed speeches, many of them in this week, is something that will set course. Even as we have seen a bit of a gain from the U.S. dollar index, the gold prices have continued to be in the positive, but that clearly has been the situation for most of part of this year. Interestingly, you have various reports now suggesting that the gold prices can go much higher from where we stand right now. The latest has been from Citi. We spoke to them on the channel yesterday, and they say that their base case scenario for gold is $3,200 an ounce in the next couple of months. And if there are more tariffs and the global economic slowdown concerns go higher, then $3,500 an ounce on the higher side is what they're anticipating. Bank of America also came with a report yesterday. They are putting gold as an average price of $3,063 an ounce for this year, and they're anticipating gold at $3,350 an ounce in 2026. But Bank of America also says that the investment demand, if that goes up by 10%, then in next 2 years you could be looking at the gold prices trading at around $3,500 an ounce. So higher highs coming in for gold prices from many of these banks and brokerages. And then of course you have ANZ talking about 3,100 in 3 months and talking about 3,200 for the next 6 months as well. De Beer Group has talked about $3,300 an ounce for gold. Goldman Sachs and BNP are putting forecast at $3,100 an ounce, and Macquarie has spoken about $3,500 as well in the next 12 to 18 months. So very bullish cues continuing in case of gold prices, and we have seen buying happen on every dips for this commodity.
All right. Thank you very much, Manisha, for that. We'll take a quick commercial break here. We're going to come back. It's our special Indianomics segment, Lata in Conversation with Adesh Srivastava of Global Trade Research Initiative. They talk about what could the shape, size, extent of Trump tariffs on the 2nd of April look like.
So we've made a lot of progress on two fronts, on both sections that we call them sections, but they're much more than that, Russia, Ukraine, and also the Middle East. And we'll see what happens. We're in deep discussions with Russia and Ukraine. And I would say it's going well, but it's a situation we should have never had to even think about, should have never happened. And on the Middle East,
Welcome back. While agriculture experts tell us that India's rice and wheat are too competitive to be hurt by even zero tariffs on US imports, the scene in industry is getting murkier. Trump has announced 25% tariffs on all foreign cars and auto parts. On the flip side, CNBC US has just reported that on April 2 itself, non-tariff barriers will not be counted while imposing reciprocal tariffs. That's the meaning of Donald Trump's lenient imposition on April 2nd. Now, will all this make the US less demanding on India as it negotiates the bilateral trade agreement? Or will this BTA get overpowered by these random tariff announcements that Donald Trump continues to make? For all these questions, I'm joined by Mr. Ajay Srivastava, head of the think tank Global Trade Research Initiative, and by far, as far as I know, one of the best experts on trade. Mr. Srivastava, thank you very much indeed for your time. I know this must be busy days for you. But first up, these non-tariff barriers are not going to be included. So do you think the BTA, the bilateral trade agreement that's being negotiated, is to that extent likely to be a little clement to us?
I don't want to guess on anything, but for example, so far he has spared India, and we are hit by only 2 tariffs, one on steel and aluminum. And now I just discovered by listening to you that 25% on autos and auto components. So unlike China and Canada or Mexico, he has not chosen to hit us so far. And we hope for the best for the April 2nd thing.
Okay, well, first, I want a nomenclature clarified. When we say BTA, bilateral trade agreement, is it the same as FTA or is it something less?
Great. Lata, so we have FTAs, PTAs, comprehensive economic partnership agreements, comprehensive economic cooperation agreements, bilateral investment treaties. So these are all same thing, economic policy agreement including. They all indicate to a free trade agreement. These are different nomenclature, but they basically entail giving preferences to the partner countries. Each other partner countries, they entail preferences, tariff preferences, other preferences. So this is an FTA only. BTA is a fancy word like SICA or SIPA they are.
Okay, that's important. Now let me come to what products in India you think will get impacted. Dr. Ramesh Chand tells us that our rice is very competitive, and wheat as well, because it gets MSP protection, is more or less protected. But on industry, auto parts, I don't know, I believe we don't export so much of auto parts. We export truck parts. Which sectors do you think are vulnerable?
So truck parts also cover their auto parts also. And our exports of auto parts are $2.8 billion to the US in the January to December 2024. So US global imports are about $90 billion. We supply just $2.8 billion, and US gets most from Mexico. Now imagine a scenario. He is hitting us with 25%. We're hitting everyone else also with 25%. That means everybody is at the equal disadvantage unless he gives exemption to Mexico or some other big country or a big supplier. So everybody is at equal disadvantage. So I don't think it will hit us hard. And then, auto tariffs, they are part of very tightly enmeshed global value chains. So some of the US car makers, they're assembling cars in US, but they are buying auto components from India. And I don't think it will take a hit. Second,
This is a big relief, sir, that, you're right. If all of us are going to be hit by the same thing, then, we may not necessarily have to suffer. You were going to say something else?
He also hit the passenger cars. So by 25% tariffs. So I say, please go ahead, 25%, hit us with 100%. It doesn't make any difference. Our exports to US, they are declining. They will be less than $10 million this year. So our industry will not even notice any tariff differences. We'll stop exporting to them $10 million. But the real danger is if government takes corrective steps, which means government under pressure from US cuts its own passenger car tariffs. That will be a real calamity. I want to share a small example in 20 seconds. You know, Australia had 25% tariffs on its passenger cars in late 80s. And more than 10 global manufacturers, they are making cars in Australia. Then Australia thought that 45% is too high a tariff. They cut it to 5% in the next 10 years. And every single auto manufacturer disappeared from Australia. Australia today relies on every single imported car in Australia is imported now. No manufacturers. Australia is trying to woo with subsidies that you please come and set up shop again in Australia. Nobody is coming. So we should rely from this, that auto sector is very important. It accounts for 1/3 of manufacturing GDP of India. So even though Mr. Trump hits us with high tariffs on passenger cars, we should not try to lower the tariffs beyond a point. Some, of course, from 100 to, we can cut by a certain percentage point, but we should never drastically lower it, you know, because there are no gains on this.
Okay. So, but you know, when I spoke to Mr. Bhargava, he said that even if the Tesla car came at zero duty, he says, I can compete. I don't have a problem. The problem will only be if they say that they are excused of countervailing duty, because the auto industry in India pays between 28 and, you know, even 40% GST. So long as that countervailing duty is imposed on the imported car, if it is from America, I don't have a problem. There are some people who worry that if the same thing is applied to BYD, we will have a problem. But if it is from American cars, we won't have a problem. You don't think so?
So Tesla, we are hearing it may be coming from Germany or Thailand. Okay. And we should also know what's the Chinese content in Tesla. It's not an American car. American brand is there like Apple. Apple is a brand. It's manufactured in China, or now in India and many other countries. Similarly, Tesla. How much of the Chinese content in battery is there in Tesla? I think tremendous. We need to study that. Okay. And I think I and Mr. Bhargav, listening to you, are on the same page. He's also saying some higher level of tariff should be there. He's using the term CVD. I'm using the term some tariff without telling the details what type of tariff it is.
Fair enough. Fair enough. Okay. I read your note on the FTA itself. You are saying that even after the BTA or FTA is negotiated by India, we will still be at a disadvantage because they will have more interpretation powers?
Yes. So, Lata, the issue is that, you know, in most of the US FTAs and even decisions at the WTO, they have been taken under the fast-track authority. So US Congress, it authorizes the US president to negotiate trade deals. When the deal is done, it is presented to the Congress. Congress can say yes or no, can't modify it. Today, that fast-track authority, it expired in 2021, and US president or negotiating team has no authority to cut tariffs. So they are seeking other countries to cut tariffs only. So it's slightly murky area for me. So I say we should deal with the reciprocal tariffs and not give too much energy, not waste too much energy on this FTA or BTA, whatever we call.
Oh, really? Okay, we were pinning our hopes on that. You're saying it's better to have to agree on reciprocal tariffs. But Mr. Srivastava, you said that Indian industry won't even notice. It will be only $10 billion of exports to the US.
$10 million.
10 million?
Passenger car exports to US.
Passenger car, I agree. But yes, overall, our exports is 45 billion. You know, for FY24, isn't it? I mean, overall Indian exports to the US.
So overall Indian merchandise exports to US last year were, I mean, in calendar year 2024 were $82 billion, considering Indian data, $92 billion considering US data. Okay. So it's high. But Lata, point to be noticed is this. About 90% of the industrial goods, all types of US supplying or not supplying, we already allow our FTA partners like Japan, South Korea, ASEAN, zero tariff access to India. Indian industry is well attuned to zero tariff imports on 90% of industrial goods. Everything almost except passenger cars and some more. So my theory is that we should offer those 90% industrial tariff lines to the US. We agree to make tariffs zero from day one, provided you also reciprocate and make your tariff zero from day one. So that will take care of 90% of US exports to India. So all this tariff problem will go except for the agriculture, which accounts for less than 5% of US exports to India.
Okay. No, agriculture, it's apparently only corn and soya bean where we could be very badly hurt, according to some experts. But sir, I want to come back again to the industries that may be hurt. We were told that apparel and jewelry can be hurt. Is that right?
So, apparel, all the developed countries, including US or European Union, very cleverly, they already charge very high tariffs on the apparel. All the labor-intensive goods, apparel, shoes, handicraft, they charge high duties so that they can have some controlling levers on developing countries and LDCs. So they already have high tariffs, and the tariffs are comparable, so we won't be hit. And I was talking to one of my friends in apparel industry. He was saying we will be very happy to go for zero on apparel.
Oh, okay. That's good to hear. If that's the case, we will try and invite textile experts as well, or apparel experts as well.
Yes.
Finally, Mr. Srivastava, what you're saying is that as we approach April 2nd, we should not worry much if there are reciprocal tariffs. And the BTA is not that big a deal for us.
Because BTA goes beyond tariffs. US is forced us to talk on intellectual property right, dilute your patent laws, allow access to government procurement. You dilute all your digital laws. For example, RBI mandate is there that financial data should be stored in the country. They will press us on all these issues, which we should avoid right now. Reciprocal tariff, as I say, 95% of US trade, that is industrial goods, we can absorb happily. And before April 2, now it's too late now, we should make an offer. Their team is in Delhi now. We should give a list to them. We are happy, we'll be happy to cut the tariff to zero on industrial products. From day one, you also agreed to do that.
We will broadcast your views as far and wide as we can, and hope that will form part of the arguments or thinking that the Indian team is now underway, that the Indian team is negotiating. Thank you very much, Mr. Srivastava, for your time today. It makes us happy to hear that most of Indian industry won't even notice if the reciprocal tariffs are imposed. What we should beware is that when we negotiate the BTA, we don't allow unnecessary arm twisting by the US. That's the big message from Mr. Srivastava. Yes. Thank you very much for joining us. That's it on this edition of Indianomics. Thanks for watching.
For a lot of years, centuries and centuries, it just keeps going. And we are making a lot of progress, so that's all I can report. But some very, very big talks are going and detailed talks are going on right now on both fronts.
Wipro's among the top Nifty gainers after the company announces a $650 million deal with the UK's insurance company Phoenix Group for 10 years.
Tata Motors skids more than 5% after US President Donald Trump announces 25% tariffs on cars that are not made in America. Remember, the US is a key market for Jaguar Land Rover.
Auto component manufacturing stocks like Samvardhana Motherson, Sona BLW and Bharat Forge also slip on the back of this 25% tariff imposed on auto imports for the US.
JB Pharma is under pressure after 5.8% equity changed hands by a block trade. Promoter entity KKR subsidiary Tau Investment is likely to have sold stake.
Shares of BSE climb after the company announces that it will consider bonus issues of shares on March 30th.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as you can see to the top of the screen, the frontline indices are trading well in the green. Well, the Nifty Bank, that's the one that's really pushing ahead from here on. So good going, and it's a good start, but we'll have to see where do we go from here on. Let's go across to Sachidanand Uteka to get a quick trade on the index. Sachi, hi, good morning. Well, if you bought the morning dip, you'll be very, very happy. What are the levels you're looking at both on the Nifty as well as the Nifty Bank?
Good morning, Nigel. Good morning, Mangalam. Clearly, if you look at the way Nifty is performing right now, there's a good chance that we may see a swing towards 23,700. But on a closing basis, there's a good likelihood that today's expiry may shape up somewhere close to around 23,650, 680 kind of a zone itself. So disclosure is that we are already long on the index via 23,450 call option. And here we are expecting that there could be a run up towards 280, 265 kind of a zone. So existing longs can be held on. When we look at Nifty Bank, even here, the support at 51,500 now looks very strong. Probably we may see a swing towards 51,800. And this is where we are expecting the Nifty Bank expiry as well. When we look at stocks, there are two stock ideas which are on our radar on the long side. One of them we have already recommended to our clients. Now, if you look at the structure of Hero MotoCorp, now throughout this particular series, the stock was just consolidating. In the last few trading sessions, we have seen a confident put writing action near that 3,500, 3,600 base. And there has been a breakout above that 3,700 level. So if you look at the daily RSI, it has also registered a swing breakout above its 50 level. So this is a good sign of developing momentum. We are expecting that this particular rally may extend towards 3950, and that's why we are still recommending building fresh long positions. One can keep a stop loss somewhere close to around 3680 in the April futures and continue holding longs for 3950 target. The second stock which has hit our radar is L&T. Now, the stock was consolidating well near its 200-day exponential moving average. If you look at last three trading sessions, 3,500 put writing has been very confident. Even here, there's a higher top, higher bottom sequence which has been ongoing. And on the 60-minute charts, there's a fresh breakout from a rounding bottom formation. So if you look at the pattern target, it is placed somewhere close to around 3,800. So even here in the April futures, one can deploy fresh long positions. The stop loss for the trade can be placed at 3,480. A trading target will be placed at around 3,700. But eventually, we see this particular stock scaling towards 3,800.
All right, we take that point, Sachi. Thank you so much for joining in and giving us your view on the indices as well as individual stocks. A bunch of stocks actually recovering from the lows, where you spoke about some of these auto ancillary names, right? Samvardhana Motherson, for instance, has recovered nearly 6.5% from lows, almost, entering green territory right now. Nearly all of the losses have been recovered out here, although Sona BLW Precision, though it's off the lows, still sitting with a cut of almost 3% The interesting part when, Sachi was speaking about Hero MotoCorp and Bajaj Auto, etc., it'll be very interesting whether to see, the focus shifts back to the domestic auto players itself or not, because of the uncertainty that we are seeing on account of global-facing auto players itself. On that note, let's get an idea for profit coming in from our colleagues at Money Control Pro. Jitendra Gupta joins in with a stock.
Engineers India could be in focus. The company earlier struggled with execution. However, with improving efficiency, strong orders in hand, we think recovery looks imminent. During Q3, its revenue declined by 12% on a year-on-year basis due to weak execution, mainly in the turnkey segment. However, EBITDA surged by almost 95%, aided by cost efficiency, higher consultancy margins, and of course lower employee costs that resulted in net profit jump by almost 72% on a year-on-year basis. Post this, the company has revised revenue guidance downward to around 3,300 crore for FY25. However, if one look at the order inflows and order book, visibility is quite healthy. In Q3, it booked orders of worth around 1,900 crore, which was up from 640 crore last fiscal. The order book now stands at around 12,000 crore, which is almost 4 times its annual revenue. Company is expecting execution recovery along with higher margins in the coming quarters. Besides, it is expanding into data center, coal gasification, and green energy, which should support overall earnings. In terms of valuation, it is trading at 16 times its FY27 estimated earnings, which is reasonable, considering, of course, solid order book, recovery in execution, and 4% dividend yield at current price.
All right, with that, we'll take a short break. On the other side, we'll be joined by Abneesh Roy of Nuvama.
Look, I take full responsibility. I built the group. My job is to make sure everything's coordinated. It's embarrassing, right. Yes. We're going to get to the bottom of it. I just talked to Elon on the way here. We've got the best technical minds looking at how this happened. But I can tell you for 100%, I don't know this guy. I know him by his horrible reputation, and he really is the bottom scum of journalists. And I know him in the sense that he hates the president, but I don't text him. He wasn't on the...
A couple of the microfinance companies, they're doing well. So pull up something like a Fusion Microfinance, that's picked some pace. Shipping Corporation of India as well has seen some pickup in pace. And over the last 2 trading sessions, we've seen some sell-off in Senco. Senco's picked up after a few sessions of upper circuits. And then we had 2 days of profit booking as well. Ola Electric is one of the stocks that we'll need to keep an eye out on as well. Has been on the downtrend, but today seems to have picked up, currently sitting with a gain of almost 5.5%. But the news that came in overnight with regards to leadership changes in the FMCG space, HUL has announced the appointment of Rajneet Kohli as the executive director of the foods business. Remember, he's been with Britannia earlier, Jubilant Foodworks, as well as Coca-Cola and Asian Paints as well. We're now joined by Abneesh Roy, who's the Executive Director of Nuvama Institutional Equities, to discuss this leadership change and the consumer sector in general. Abneesh, it's a very interesting move, right? You call Unilever the leadership factory, and in this, it's the first lateral hire that we've seen in a long time, and this coming in from, someone like Britannia. How do you view this as a business opportunity? You've had interactions with Rajneet multiple times as well. What do you think would be his ask here, and what are your expectations from this change?
Yeah, thanks, Mangalam. You are absolutely right. Rare to see HUL hire people from outside at such senior level. So very interesting, I think, because Mr. Rajneet does bring experience of Domino's and around 2.5 years experience of Britannia. Of course, HUL's foods and refreshment business is very large, almost 1/4 of the business and second largest after home care. So it's very important business. So I will say that currently overall urban slowdown and tea inflation and coffee inflation will be the immediate challenges. But I will say that hiring from outside from such good companies, I will say will bring a fresh perspective. And generally, we see that HUL and Britannia are always a hiring ground for Mumbai and Bangalore respectively. And here, interesting to see from Britannia this hire. I think overall it's a good development because this is an important part of the business and there are a few challenges. But leadership changes in FMCG is quite common currently. United Spirits, Nestle, Pidilite, DMart, and more, we are seeing that. So I will say that this is a good development and we'll closely monitor this.
All right, so someone from Bangalore moving to Bombay, we'll keep an eye out on that one. And since you spoke about the consumer environment, we're nearing the end of the fourth quarter. What are your initial expectations? What are your ground checks suggesting? What kind of volume growth can we see across the board? What do you think would be the outperformer here?
Yes, so 2-3 trends currently in March quarter. One, clearly the temperature has generally been on the higher side, 3-4 degrees higher than normal, and we are hitting again multi-year high this year also in terms of summer. That should benefit Varun Beverages. We expect almost 12% kind of volume growth in Varun Beverages in March quarter versus 4-5% in the past 2 quarters. So there is a step up. Same thing we are also seeing, for example, in Imami. Overall, as a company, we see a 6% kind of volume growth for Imami. And even Marico continues to do well. They are doing really well in their premium consumption in terms of the youth and digital brands. And there we expect 25-30% growth in that part of the business. Overall, in Marico, we expect a 6% growth number. In Nestle also, we are picking up slight recovery versus earlier quarter. Nestle is a company which always comes back. In most other staples companies, it will be a challenging quarter. So we expect almost flattish volumes, for example, for Unilever and Colgate, again, quite tough quarter because the competitive intensity has gone up in toothpaste. Plus, Dabur is growing faster because more rural indexation. So overall in staples, it will be challenging quarter. Alcobev, we continue to remain positive. Of course, United Breweries will see that 12 days of Telangana, no sales will be there. Still, we expect almost mid-single digit growth. So Alcobev, Varun Beverages, Imami, Berger, Pidilite, these will be the companies which will be on the top tier in terms of growth in their respective segments. Most other FMCG will be broadly in the 0 to 2% kind of a volume growth. That's our expectation. In the staple space, margin compression will remain for most companies. So that's because palm oil, tea, etc., copra, etc., continue to be quite inflationary. And FY26 will get more clarity on how the next crop will be.
All right, Avnesh, I missed your view on Trent. You spoke about a lot of stocks, but Trent, there's a big debate out there. The worst, is it behind it? And what about the stock price? The stock corrected from 8,000 to sub 5,000 rupees. In the last 1 month, it's bounced close to around 12% or thereabouts. What's your view? We have a note coming in from Macquarie today as well. They have initiated coverage. They believe it's good for more. Your take?
Yeah, absolutely good question. So we did see that high valuation stocks did correct a lot in the market mayhem, which we saw in the initial part of this calendar year. And after that, we have seen broader market come back. We remain quite positive on Trent. See, in Trent and DMart especially, always this concern keeps coming back on store addition. See, how it works in retail generally is Q4 and March month where the bulk of the store addition happens because all the regulatory approvals, etc., they are linked to slightly towards the year ending. And that's why in March, suddenly we see a big spurt for Trent in terms of the Zudio, in terms of the West Side. Similarly, for DMart also, we are picking up similar that suddenly store addition picks up every year in the March later half, and that addresses the investor concern. So we remain quite positive that in spite of Shein being launched from Reliance, etc., in our view, both can coexist. Shein will take a lot of time to scale up, plus understanding the Indian overall consumer. It takes time, right? So we are quite positive on Trent. This was a good buying opportunity in my view, and after that, as you rightly said, there is some up move in the stock. From a medium long term, I think Trent will remain on the top tier growth within the retail space. And in retail, we like Trent, we like Jubilant Foods, and we like V-Mart also. On D-Mart, store addition is picking up, but because of Zepto's overall higher discounting, because they are going after the market share, I think margins for most of the grocery retailers, both quick commerce and on this side, I think that could remain challenging.
You did mention Jubilant Foodworks briefly. You also mentioned, Paints, Berger Paints as one of your picks, and Pidilite as well. So just wanted your thoughts on the QSR versus food aggregator debate, which is currently going on. Most on the street believe that maybe the next leg of consumption recovery will come in via QSRs and not food aggregators because of their repurposing, value focus, and also at the same time them having, work towards their own delivery fleet, etc. as well. So I wanted your thoughts on that. And the second part was on Paints and Pidilite. What do you think would be your top picks here?
Yeah, I'll take the second part of the question first. So in Paints, we have a clear preference for Berger. And that's not because there is any execution issue with Asian Paint. It's just that Berger is more of rural India, more of Eastern and Central India. So there the slowdown is lesser. Asian Paints, our sense is we expect around 3 to 4% volume growth in Q4. Against that, in Berger, we expect almost 9% volume growth. This was there even in March, in the December quarter. We expect that trend to continue. Pidilite remains a very strong compounding story, and they are targeting new consumption verticals in terms of EVs and the mobile manufacturing adhesive usage. Yes, Mr. Bharat Puri has done a commendable job, but I think Sudhanshu Vats clearly last 2-3 years has got trained under him. So we remain quite positive on Pidilite. And we see that in spite of some issues of the real estate slowdown, how it works is there is a 1 year to 3 year lag between Pidilite getting that consumption and the real estate projects getting launched. So we see that next 2-3 years, I think, for Pidilite remains strong. Now, coming back to the QSR, we see more of a market share gain for Jubilant Foods. So clearly, in terms of the value offering, they have done really well, and they're gaining market share from rest of the players in that space. So it's more of a selective call on Jubilant Foods. That's why we are quite positive. And you are right, in the broader quick commerce, we are seeing more players launch, and there is a unlisted player, Zepto, which is obviously quite aggressive. That does impact discounting, which is negative for the grocery retailers and maybe some of the other food companies. But Jubilant Foods clearly going after market share expansion in pizza, plus new verticals in terms of the chicken also, they are scaling up. So we are positive selectively in QSR space.
All right, Avnish, thank you so much for joining in. See you around. We'll have a conversation with you before the result season and during results as well. Have a good one. Have a good day. Right, with that, we'll slip into a short break. And as we do that, let's get you some programming note. The future belongs to Bharat, and the Rising Bharat Summit 2025 is where visionaries show us how to lead it. Get inspired by Arvind Srinivasu, the co-founder and CEO of Perplexity, the AI disruptor redefining how the world searches for knowledge. Gain transformative insights from Vivek Wadhwa, who's the CEO of Vionix Biosciences, acclaimed academic, entrepreneur and author, on how India can lead the next wave of breakthrough in AI, science and innovation. Join us at the Bharat Mandapam in New Delhi on April 8th and 9th for a powerful exchange of ideas shaping the nation's next leap. Book your passes now. The code is on your screen.
Was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next.
Happens very frequently when you're an experimental org, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me. And also it's...
This sounds like relationship advice.
It's very important to not take things personally, as simple as that.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV.
Welcome back. Let's address some of those flashes that were up for you on the screen. Sources tell CNBC-TV18 that the Prime Minister's office, the Commerce Ministry, as well as the MEA officials, they're in active discussions to consider tariff cuts for the United States. Timsy is the one that's picking up all of that scoop. She's joining in to fill us in with more details. Timsy, tell us more.
Well, yes, ahead of the much-awaited tariff announcements by the U.S., here back in India, top officials from the Prime Minister's office, Commerce Ministry and Ministry of External Affairs, currently what we understand from sources, are in active discussions to consider a possible deal or a possible tariff cuts to be offered to the U.S. Right now, as we speak, these discussions have been going on for last 2 to 3 days. And again, the discussions are still underway. A comprehensive review of the current entire categories of imports that India undertakes from the U.S., along with the duties that are currently charged, is on the drawing board. All the tariff lines, to be precise, are under this review. And some of the items that my sources indicated which could see a duty cut include medical and scientific instruments, where the current basic custom duty ranges between 7.5% to 10%. Cruise ship, where again the current basic custom duties is at 10%. Aircrafts, where the current rate of basic custom duty is 2.5%. Spacecraft, where the current basic custom duty is at 10%. Cars, where the basic custom duty ranges between 70% to 100%. Turbojets and propellers, where the current rate of basic custom duty is at 7.5%. High-end jewelry, where the current rate of basic custom duty is 20%. Gems and jewelry, again, where the basic custom duty rate is staying at 20%. Footwear, where the current rate of basic custom duty is 35%. Plastic and polymers, which ranges between the basic custom duty between 7.5% to 15%. Organic chemicals, again, where the basic custom duty is 7.5%. Just to put some perspective here, India in the last calendar year, 2024, imported about 35 billion worth of goods from the US, which saw a growth of 6.5% during the same period last year. That is, when we compare calendar year 23 with 24, there was a 6.7% rise in the total goods imports. So let's see what happens.
Yes.
And what is that India will get in turn
yes.
when it offers this sort of is something that we'll have to wait and watch for.
All right, MC, thank you for that. We'll keep an eye out on what develops out here. With that, we are out of time on this edition of Chartbusters. Stay tuned to CNBC-TV18. As we do that, let's get you good news for our viewers. The India Business News Leader is now just a click away. This is the CNBC-TV18 app, which gives you instant access to breaking news, in-depth articles, financial world updates at your fingertips. You can download the app from either the Apple Store, the Google Play Store, or just scan the QR code, which is there for you on the screen. Wrap this edition up, and on the other side, we have the team of Trading Hour take the market action ahead.
CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Hey guys, it's Shady Vance, the Vice President, and you know there was so much excitement around Usha's visit to Greenland this Friday that I decided that I didn't want her to have all that fun by herself, and so I'm going to join her. It's really important. A lot of other countries have threatened Greenland, have threatened to use its territories and its waterways to threaten the United States, to threaten Canada, and of course to threaten the people of Greenland. So we're going to check out how things are going there. And I say that speaking for President Trump, we want to reinvigorate the security of the people of Greenland because we think it's important to protecting the security of the entire world. Unfortunately, leaders in both America and in Denmark, I think, ignored Greenland for far too long. That's been bad for Greenland. It's also been bad for the security of the entire world. We think we can take things in a different direction, so I'm going to go check.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer. And the Nifty is hovering around the 23,600 points, give or take a couple of, 10, 20 points here and there. About half an hour back, we were above that level. Now we're just shy of that level. With a gain of close to about 105 points. So we're still consolidating, but there is a positive bias. The mid-cap index in the green, small-cap index in the green. The advanced decline ratio is positive. On the way down, pharma is hurting. The Nifty Pharma Index is down over 1%, 1 1/3 lower. The auto index is weak on the back of the 25% imposition of tariffs. So names like Tata Motors have taken a big knock today. On the way up, you've got PSU banks, flying high. The Nifty PSU Banking Index is up more than 1.5%. Banks itself, on the whole, the big index is up nearly 0.7%. Defense is having a good day. Oil and gas, too, supporting the bulls.
Absolutely right. Good morning, Reema. Not too much to complain about. We would have come from overnight cues that were quite weak, and also imposition of tariffs was something that was seen as a bit of an overhang. But despite that, managing to hold out quite steady. In fact, the mid-cap, small-cap indices both doing quite well, as along with the benchmark indices. Today is an important day. Quite a few events lined up. First on the list, remember, is the NSE rejig. So NSE last month had given a whole raft of changes as far as all of the indices were concerned. We'll focus more on the Nifty. A couple of components coming in to going out a little later on the show. We'll tell you about the impact. And remember, the impact will happen today because the flows will happen today, effective tomorrow. Auto, as well as auto ancillary stocks. You did mention Tata Motors, but quite a few other stocks too, remember, that have exposure to the US market. Names like Bharat Forge, Sona, Comstar, as well as Motherson Sumi. All of these stocks have been very volatile in the session, largely with a negative bias. And one pocket of the market that's doing very well today is actually the PSU banking pack. Citi has a positive 90-day positive catalyst watch on Bank of Baroda. That stock is up over 3.5%. But other names like SBI, Union Bank, these two are supporting. On the back of that, you're actually seeing the PSU banking index outperform quite significantly today.
And if auto is under pressure, you should keep your eye out on the IT companies which provide services to the auto majors, the ER&D companies, right? So, for instance, if Tata Motors gets hit, JLR gets hit worldwide, then even a company like Tata Tech, for whom JLR is, or Tata Motors is the anchor client, could get impacted in terms of tech spends, or, that's a stock you should watch. KPIT Tech too could be, because it gets 100% of its revenues from the auto OEMs worldwide. If global auto, majors come under pressure, you should keep your eye on the ER&D, auto ER&D company names like a Tata Elxsi, Tata Tech, as well as KPIT Tech. But let's talk about the big loser, and that's Tata Motors. Stock is down close to about 5.5%. Samvardhan Motherson also in focus. Sudarshan joins in with the big story on the tariffs and how it's likely to play out and hurt these companies.
So most of the auto stocks are under pressure, while these stocks have recovered from intraday lows, but still they are down. Like Tata Motors is still down around 5%. Samvardhana Motherson is still down almost 3%, and other stocks like Bharat Forge, Sona BLW, these stocks are under pressure as well. And the reason is US President Donald Trump has announced that he'll impose 25% tariffs on all the cars that are not made in the US and also on the auto parts. And these tariffs will be effective April 2. Now, the first up, why Tata Motors in the focus? JLR has US is one of the important markets for JLR, which forms nearly 1/3 of the total sales. Basically, 1/3 of total sales comes from North America. And also the most important point for JLR is that it does not have any production facility in the US. So all the cars that it sells in the US are imported from other countries like UK, China, and all the other countries. So that's the reason Tata Motors is impacted the most. Second big name is Samvardhana Motherson. Why? Because total US forms nearly 40% of total sales for Samvardhana Motherson, but that's not the important points. Samvardhana Motherson has major auto clients to which Samvardhana Motherson supplies auto parts, and that impact is likely seen in the range of 6 to 7%, and that's one of the reasons that this stock is also under pressure. And apart from this, other stocks are falling as well.
Thank you so much, Sudarshan, for joining in and explaining to us about the impact on Tata Motors, as well as some of the auto ancillary companies that have significant exposure both to the US markets and clients that have exposure to the US markets. Let's now, in fact, also listen in to what exactly President Trump said on auto tariffs.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth. taken a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
In fact, let's also listen in to what Goldman Sachs' Sunil Kaul has to say on reciprocal tariffs and the impact on markets and sectors.
Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. Agri has the largest sort of tariff differential if you do sort of US versus India. I mean, so that could be impacted. But we think, for example, like pharma could be an area that could be impacted as well. Autos. I mean, in addition to the reciprocal tariffs, we also think that overall in the tax measures, you could see a global sort of auto tariffs. You could see tariffs on critical imports. And when we think about critical imports, electronics and components is one of the things the Trump administration has talked about. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates.
Well, moving on, CNBC's Eamon Javers also reports on what he's learned from the White House on the upcoming April tariffs. And an important point there is that non-tariff measures may not be considered.
The president, speaking to Newsmax yesterday, said in terms of the April 2nd tariffs next week, he's inclined to be more lenient than reciprocal, because if he is too reciprocal, then that could be too tough on people. So I talked to a White House official this morning to figure out what exactly that means, more lenient than reciprocal. And what I'm told here at the White House today, Carl, is that what the president is signaling here is that he is not going to take into account all the non-tariff barriers that countries raise against the United States. Remember, early on in this debate, the White House said that they would include things like a VAT tax, wage suppression, currency manipulation, those kinds of things in their calculation of a tariff attack on the United States, and therefore that would be part of the reciprocal tariff back. Now what I'm told is that they're signaling they may not go all the way to including all of those non-tariff barriers in determining what the reciprocal tariff rate should be country by country. How are they going to decide that? I'm told it's more or less going to be on a case-by-case basis, but what they're signaling is that a lot of the stuff they said they would calculate against, they may not actually calculate against. So it is a sort of lessening of the severity of the potential tariffs that we're talking about based on what they had said before. Now, there were a lot of critics who said, as our Megan Costello points out, that some of these non-tariff barriers should never have been included in a discussion of tariffs. Nonetheless, the White House signaling today they might not go all the way in including some of those non-tariff barriers next week.
That's the big story, and the countdown to April 2nd begins. But get into a break. But before that, it's that time of the year where News 18 Rising Bharat Summit 2025 is here, bringing together the biggest names shaping India's future. So don't miss your chance to be a part of it on April 8th and 9th at the Bharat Mandapam in New Delhi. Scan the code, get your passes now.
Welcome back to Trading Hour. Well, some stocks on the radar, especially stocks from the pharma pack. Remember, there too, there are worries of impending tariffs, and on the back of that, quite a few of the generic names are seeing significant selling pressure. Pharma index near the day's lowest points. Names like Zydus Life, Lupin, Aurobindo, Ajanta Pharma, all of these stocks under pressure. And other stock from the pharma pack, which is also under pressure, but due to different reasons, that is JB Chem and Pharma, a very large block deal there. KKR, has looked to sell almost 10% stake via block deals, and that particular stock, the top laggard as far as the pharma pack is concerned, down over 6%. And one stock from the auto ancillary pack that's seen a very sharp recovery is Bharat Forge. Bharat Forge has seen an intraday recovery of almost 5% and is now trading near the day's highest points and in the green. Bharat Forge is the name that we're talking about. But we'll now shift focus to the commodity space. Manisha Gupta joins in to tell us about copper.
Well, in limelight clearly has been the copper prices trading at all-time highs yet again in COMEX there, where we are holding above $5.22 per pound there. Well, US could impose 25% tariffs on copper imports in weeks rather than months is what really has led to a very bullish sentiment into the markets there. US imports nearly 50% of its requirement and imports nearly 900,000 tons of copper every year. But if you look at the quantum right now, versus an average 70,000 tons of import on a monthly basis, 500,000 tons is what is en route to US, and that has led to a very huge premium in the US markets there, where it is trading at a 19% premium to the front month, and the COMEX is now trading to a premium of 23% in the next 12 months as well. So bullishness continues, though the markets, of course, are putting out a word of caution that we have seen price disparity too huge, and if the 2nd April doesn't bring in reciprocal tariffs as the world is imagining, then you will be looking at some sharp correction coming in for copper prices from here on.
Thank you, Manisha, for that. We will slip into a very short break. We'll come back and discuss market technicals. Apurva Sheth, Head of Research at Samco Securities, will join in with his top trading bets.
Was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next?
Happens very frequently when you're an experimental org, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me.
Sounds like relationship advice.
It's very important to not take things personally, as simple as that.
IC sees China, Russia, Iran, and North Korea engaging in activities that could challenge U.S. capabilities and interests, especially related to our security and economy. These actors are in some cases working together in different areas to target U.S. interests and to protect themselves from U.S. sanctions. Under the leadership of President Xi Jinping, the People's Republic of China seeks to position itself as a leading power on the world stage, economically, technologically, and militarily, fielding advanced capabilities, including hypersonic weapons, stealth aircraft, advanced submarines, stronger space and cyber warfare assets, and a larger arsenal of nuclear weapons. Russia's nuclear and conventional military capabilities, along with its demonstrated economic and military resilience, make it a formidable competitor. Moscow has more nuclear weapons than any other nation that could inflict catastrophic damage on the United States and the world in the event of a major war that Russian leaders feared put them and their regime at serious risk. Since 2022, China, Russia, Iran, and North Korea have grown closer. Removing the accelerant of the war in Ukraine is unlikely to revert these bilateral relationships to a pre-war 2021 baseline, leaving room for new strategic priorities and world events to create new incentives or challenges to their currently high levels of cooperation.
Welcome back to Trading Hour. Well, the market continues to see strength and the Nifty once again very close to the 23,600 mark. But today is a very important day given the fact that you will see multiple rejects, multiple flows that come in from passive index managers. This is on the back of the fact that the NSE indices will see a reject, and key amongst them will be the fact that there will be two new Nifty components that will come in from tomorrow, and there will be two exits as well. Along with that, there are a whole raft of changes that the NSE announced close to a month ago, and all of these will be effective tomorrow. So let's have a look at the Nifty reject. Remember, two stocks come into the Nifty from tomorrow. Zomato as well as Jio Financials will be the entrance. So Zomato is expected to see inflows of close to $421 million. Jio Financial is expected to see inflows of close to $221 million. These flows are estimates as per IIFL Capital. On the other hand, the exclusions, that is BPCL, expected to see outflows of close to $163 million, while Britannia will see outflows of close to $170 million. On the back of that, remember, these stocks will see the flows happen in the session today. The changes will be effective tomorrow. But I'm also watching out for another stock, and that is NBCC. There was a very important and interesting development that the company announced to the exchanges yesterday. So the company yesterday informed the exchanges that they have signed a strategic MOU, or a memorandum of understanding, with Mahatma Phule Renewable Energy and Infrastructure Technology Limited. So what is this particular collaboration or MOU for? This is a collaboration to jointly undertake consultancy, fee-based EPC as well as redevelopment projects. With this, NBCC has now entered the redevelopment project part of Maharashtra. What are the projects that they will be targeting? Number one, cluster development projects, especially in the Thane region, along with the data center, renewable energy initiatives, slum rehabilitation projects in Mumbai metropolitan region, as well as residential projects under the PMAI, or the Pradhan Mantri Awas Yojana. Rima, what is very interesting? The projects, the company says, has a total estimate value of almost 25,000 crore. Remember, NBCC generally will get a PMC fee for these projects, and they also have a partner on board. So it'll be interesting to see what projects come on board and what will be NBCC share. But nevertheless, a positive development, and which is what is rubbing off on the stock today.
Big potential development, for NBCC. Stock is higher by nearly 3%. Apurva Sheth, head of research at Samco Securities, now joins in for a quick technical check on the market. Apurva, morning. Thank you for joining in. First, what have you made of the markets and the way they've moved over the last 3 trading sessions, largely consolidating? Are you sensing any kind of a breakout, or we'll have to wait for clarity, next week once the tariff situation is clearer? And then if you could give us your stock picks.
Sure. So thanks a lot for inviting me on the show. Now, markets have moved sharply for the last few days. And in the last 2-3 days, the consolidation that we have seen, we believe that this consolidation will continue for a couple of more sessions. So on the Nifty, the range for the markets to look out for would be about 23,400 to 24,000. That is the range that we are looking out for. And once the market is able to, build some base around these levels, we can expect a move in either direction. On the stocks front, Narayan Hrudayalaya is one of the stocks that we would like to recommend. The stop loss would be 1624 and target would be 1760. So the stock has been relatively very strong in the whole downtrend that we have seen since September. So it has, its relative strength is positive. It has seen a good volume based breakout last month, and currently it's forming a flag pattern. So chances of a breakout above 1700 levels are quite high, and if that happens, then we can see the levels of 1760 and even 1800 in the short to medium term. Next stock is Marico. So the stock is forming an inverse head and shoulder pattern, and the stock has a very strong support around 600 levels. So the target for Marico would be 700 and stop loss would be 620.
Thank you so much, Apurva, for joining us and giving us both a sense of market levels as well as your top stock picks. Time now for a short break. We'll get back with Sandeep Kumar Gupta, CMD of GAIL, on the other side to discuss various developments regarding the company.
Colleagues and I feel very strongly about the war planning meeting over unclassified phones. Obviously reckless, obviously dangerous, both the mishandling of classified information and the deliberate destruction of federal records are potential crimes that ought to be investigated immediately. And I want to make clear that I'm of the view that there ought to be resignation, starting with the National Security Advisor and the Secretary of Defense. Director Ratcliffe and Director Gabbard, have you participated in any other group chats with senior Trump administration officials in which classified information was shared using phones that weren't cleared for such information? Question for the two of you.
Senator, thank you for the question. I haven't, your question was, have I participated in any other group chats sharing classified information? To be clear, I haven't participated in any signal group messaging that relates to any classified information at all.
Director Gabbard?
Senator, I have the same answer. I have not participated in any signal group chat or any other chat on another app that contained any classified information.
Director Patel, you weren't in this particular group chat, but have you participated in any chats on unclassified phones with other administration officials relating to national security? And if so, on what other topics?
Thank you for your question, Senator, and not that I can recall.
So you're talking about a deceitful and highly discredited so-called journalist who's made a profession of peddling hoaxes time and time again, to include the hoaxes of Russia, 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 or the fine people on both sides hoax, or suckers and losers hoax. So this is the guy that peddles in garbage. This is what he does.
I don't know anything about it.
again, this pattern of
Welcome back. Now, the PNGRB is looking to amend the natural gas pipeline tariff regulations, and they've sought public comments on the changes by April 11th. Sandeep Kumar Gupta, Chairman and MD of GAIL, is now joining in to discuss the amendments, the impact on the company, potential tariff revision, which the company has sought a few months back, and their capacity expansion plans. Thank you very much, sir, for joining in. This is Rima here. So let's first talk about the public consultation document, the PCD, that PNGRB has come up with for changes in the natural gas pipeline regulation. One, if you could just detail, how does this impact a company like GAIL, and how will it increase gas consumption?
Yeah, good morning to all the viewers, and thank you for hosting me. I welcome this move by PNGRB, which is a very, very positive move, and will ensure the viability of the pipeline operators. Few changes which are proposed in this PCD is that there are certain isolated networks of GAIL India Limited, which will get benefited because of these regulations, where the normative capacity today is very high, whereas the actual volumes are very low. And currently, as per the current mechanism, the normative capacity becomes the divisor for tariff fixation. So we will get a great boost, because now the actual capacity will be determined, and more or less the revised tariffs will allow us zone 1 tariffs. So this is one change. The second change which they are bringing is that if the capacity utilization is greater than the normative capacity, the 50% of the benefit of increased capacity utilization will be allowed to be retained by the pipeline operator, which was hitherto surrendered fully. This is second. And the third is that now they are proposing that there will be only 2 zones as against the current 3 zones, because of which while the pipeline operators per se may not gain, but the consumption will get a boost because of normalization of the zone tariffs. These are very positive changes and will have a great benefit to the pipeline operators, and especially GAIL, who is having certain isolated networks also, so, and higher consumption in certain networks.
Okay, so let's talk about the first and the second impact, where on certain isolated networks, you will have this increased revenue boost. So have you been able to put a number to it, what the incremental revenues could come in?
No, I will not put a number, because this is only a public consultation document. Let it get finalized. But I believe your audience is very knowledgeable, and they will be able to judge that the gains are going to be handsome.
Also, could you give us a sense of the timeline, post-consultation? When can we expect the changes to come into effect? You're not able to give us a ballpark figure. Also, in terms of what could be the positive impact for GAIL?
I can give you a figure as far as the revision of our integrated tariff is concerned, for which we had filed the revised numbers in last August, that is August 24, and which are in active consideration by the regulator, we believe, where we filed a 35% increase in the tariff, which was fixed at 58 rupees 61 paisa per MMBTU. We have filed a tariff of 78 rupees. But even if we, in that filing, if we ignore the future costs and future capex, still we are very hopeful that as against 58.61, we should get somewhere around 72, which is a very, very handsome increase. And that is a substantial increase, where we are estimated to gain about 1,200 crore rupees per annum. And in some corners, there remains to be an apprehension that this delay is happening, which may be costing something to the company. I want to inform you that this does not, while timely revisions are definitely welcome, but any delay in this account is more than compensated, because we get the 12% post-tax return for the time delay also.
So what you're saying is that you want 78 MMBTU, but you're hopeful at least from 58.6 we should get to 72.
Rupees 78
Rupees 78, correct.
Yeah, definitely. Definitely.
No, but I think you said 72 rupees is what you're hoping. Did I get the number right?
58.61 is the current tariff. 78 we have filed. Even if the future capex and future costs are ignored, still we are very confident of getting 72 rupees.
Okay, so and if you get at least 72, which is a
this make it
22%
clear?
increase, you will
Yes.
get about 1,200 rupees per annum.
Yes.
Okay, and any indication, sir,
Yes.
of the timeline?
I am extremely hopeful, and maybe the very next meeting of the board, which is a monthly meeting.
Okay, so you're hopeful that in the next monthly meeting there could be some decision that could come about. Well, we'll just move on. We also want to talk to you about the Dahej Uran Dabhol Panvel natural gas pipeline. We understand that the PNGRB has approved capacity augmentation. How does this improve prospects for GAIL, and how does it impact gas consumption?
Yeah, in this pipeline, the existing capacity was 19.9 MMSCMD, which will get revised to 22.5, and this will enable evacuation from our Dabhol terminal, where we are planning to ramp up the capacity. The capacity is 5 million, but it is constrained because of breakwater and ambient air heating system. I am glad to inform that breakwater is through, and we have got the clearances also, and this monsoon it will be operating as an all-weather terminal. And with the ambient air heating system, which is slated for commissioning in next June, that is June 26, we will attain a capacity of 6.3 MMTPA of this terminal. So this evacuation from this terminal will get enabled because of the capacity augmentation of this pipeline.
Okay. Sir, what will this do to your guidance? Because you had given a transmission volume guidance of 129 to 130 MMSCMD for this year. And then you said you will add about 10 MMSCMD every incremental year, at least for FY26, FY27. Any changes to your volume guidance?
No, we are very confident that this kind of increase should come, given the good prospects of natural gas consumption in the country. With the increasing maturity of all lately authorized geographical areas of city gas distribution, the consumption in the CGD sector is going to be very robust, and we estimate anywhere between 12 to 15% CAGR going forward. This is one. Second, the peak power demand is estimated to be 270 gigawatt in this year, and perhaps it is increasing year on year. And with no more coal powered capacity coming, we believe there is a good scope for gas-based power also, which will also give a good boost to natural gas consumption. Besides, there are other sectors where refineries are getting connected. They are increasing their volumes. Steel, etc., should also start consuming with completion of a certain key pipelines reaching to those areas. So we believe that both in marketing as well as in transmission, we have got good prospects going forward.
So, the other thing we want to understand is, number one, post the reallocation of the APM gas, there was first a sharp reduction and then again a slight increase. Has there been any impact on LPG volumes? Post which, how are you looking to mitigate the impact, if any, that you have felt after the reallocation?
Yeah, definitely there is some impact because of this reallocation, because we were getting a favorably priced gas, which will now get replaced with some other volumes, and we have requested for at least new well gas allocation to us for LPG production. But we are also exploring the possibility of realizing LPG prices at commercial rates instead of the domestic rate, and we are in discussion with the oil marketing companies also in the wake of this reallocation. So there can be some impact, but we are trying to mitigate that through other measures.
So the next question is, as far as the trading business was concerned for GAIL, Q3, you saw multiple one-offs that came. Now, going forward, are any of those issues recurrent? Will Q4 see a sharp reversal from the kind of impact it took in Q3?
No, period to period, it can differ month to month, quarter to quarter. There can be variations, but on a yearly basis, we have been giving guidance of 4,000 to 4,500 crores per annum. And we stick by that commitment for this year as well as going forward.
Yeah, so your guidance was 4,500 crore, right? Are you saying now it could be 4 to 4,500 crore? The marketing guidance?
Yeah, I'm saying it is 4,000 to 4,500 crores on an annual basis is our guidance, which remains there as such for future also, for future years also.
So give us a sense of the gas sourcing strategy of GAIL. We also understand that currently spot prices for petchem is quite high. So what is the kind of strategy you're going through, and how do you expect to mitigate any margin impact?
No, we have the largest portfolio in the country, and we are increasing our portfolio. Recently also 3 deals we did for 2.25 million metric tons, taking our total portfolio to above 16 million metric tons per annum. Some of the volumes will start flowing newer contracts. Some of the volumes will start flow from the next year itself. And we will be ramping up these volumes year on year, given our market share in the country also. And we believe that we have a good portfolio, well diversified in terms of pricing also, and we will also be scouting for new volumes at attractive prices. So that should not be a concern, and we are exploring all sorts, all geographies for sourcing new volumes.
So now coming to the LNG part of the business once again, we understand that there was a slight guidance cut when it comes to FY26. Now going forward, what is the outlook as far as that particular business is concerned? And also investors want to know whether there is going to be a stated dividend payout policy in place or buyback in store.
I could not get your first question. What is that? What is the question on LNG?
The LNG guidance, was it trimmed lower? And FY26, what is the outlook?
No, I think our guidance is regarding the trading margins, which includes some secured margin business of domestic gas and also includes certain trading of RLNG. So on a combined basis, including the stable part and the volatile part, I am saying 4,000 to 4,500 crore is the guidance, not only for the current year, but for all future also. Does that make it clear?
Yes, sir. Yes, sir. And a quick update on the dividend payout policy or any impending buybacks?
No, our dividend payout policy is there on our website also, which says that minimum 30% of PAT. But then we are governed by the DIPAM guidelines also, which mandates that 4% of net worth or 30% of PAT, whichever is higher, should be the dividend. And but then we are generating good cash flows and expect to do more payout. 4% of net worth is definitely guaranteed. But in terms of PAT payout, it remains in the range of 40 to 45% every year.
Thank you so much, sir, for joining us, talking to us about impending important regulations as far as the oil and gas space is concerned, and also giving us an outlook for the upcoming year. Thank you once again, sir. We'll now take a short break. Up next, we'll discuss market fundamentals with Christy Mathai, Fund Manager, Equity at Quantum AMC.
Cavalier attitude towards classified information is reckless, sloppy, and stupid.
This sloppiness, this incompetence, this disrespect for our intelligence agencies and the personnel who work for them is entirely unacceptable. It's an embarrassment. Senator, you need to do better. You need to do better.
He's a very good man, and he will continue to do a good job.
We are looking into and reviewing how the heck he got into this room.
It wasn't classified information.
Mr. President, who told you that information was not classified?
Another
Which
question.
of your
Significant changes have been made by Morgan Stanley to both its Asia ex-Japan and global EMs focus list. Now, the stocks that have been added to this list have both been on the radar over the last few days, and those are Bajaj Finance and Hindustan Aeronautics. Now, Morgan Stanley has recently raised its target on Bajaj Finance to 10,500 after Rajiv Jain's elevation as vice chairman. For HAL2, Morgan Stanley sees an upside of almost 30% or more with that 5292 price target. Now, Morgan Stanley believes that HAL is poised to see an order pipeline of over $60 billion over the next decade, and that engine upgrades and exports is going to support its growth going forward. Now, Bajaj Finance is also its top large cap NBFC pick as the dust has settled on its leadership transition, and it also sees credit costs declining going forward. Now, moving to Goldman Sachs, they have highlighted 10 stocks that are part of its buy list from India. HDFC Bank features on top of that with a target of close to 2,100 rupees. And it is also best placed to benefit from RBI's liquidity measures and a likely 15% earnings CAGR going forward. The other financial name on this list is AU Small Finance Bank, where it sees a 31% earnings CAGR, and valuations are attractive and the cost of funds are also improving. Now, from the consumption space, Titan makes an entry here, and Goldman Sachs is banking on a 20% jewelry EBIT growth in FY26 compared to just a 6.2% CAGR that it had seen over the last 3 years. For Godrej Consumer, Goldman Sachs is expecting a price recovery in the soap segment business to aid the margins, and that new formulations of the company are aiding a turnaround. Now, India's largest port operator, Adani Ports, is also a part of this list, and Goldman Sachs believes that volumes here are likely to accelerate, valuations are reasonable. And the other one that part of the list is Indigo, which is India's largest airline, where Goldman Sachs here is expecting
Welcome back to Trading Hour. Well, Christy Mathai, Fund Manager Equity at Quantum AMC, joins us now to discuss market fundamentals as well as the top sectoral picks. First up, Christy, thank you so much for joining us. How worried are you about all of the tariffs that have come about? Which are the sectors that you're most worried about where you could see significant impact?
Right. Thanks, Vivek, for having me. So, to start off with, ever since President Trump came up in October, November, there have been a lot of tariff concerns that have plagued the market, and it is possibly one of the reasons, apart from high valuations, which has plagued the Indian markets, if you were to look at it. Now, as we enter into April 2nd, when possibly a host of items can come into this tariff, tariff regulations, there is also some sort of certainty that we are looking at. It is not as bad as fear. So if you were to look at sectorally, auto with today's what has happened, you see the auto space, getting impacted more so in the auto ancillary space. If you look at most of the large OEMs that we have, they have negligible exports to US, barring maybe few. Auto ancillary, there could be substantial, presence in US, which have to be mitigated some or the other way. Price hikes in the end market looks difficult, more so, putting a manufacturing facility in a quick, period. So there could be some bit of pain there. The other key sector from a market perspective is the pharma sector, if you were to look at it, the whole generic space. So broadly, if you were to think about the generic space, of the total pharma basket in US, generics are close to about 14%, and they do a lot in terms of subsidizing, the cost to the end consumer. And possibly the reciprocal tariff that could come in, it is still under discussion. So the Indian government may also lower some of the, it is still in the negotiation stage. The Indian government may lower some of the taxation in some of the pocket, which is close to about 800 million. Near about. So we do not fear so much more impact on pharma, and and we have seen the pharma not doing so well in the recent past, given these concerns. But because of generic positioning, it would be very difficult to put significant tariff, or even so, if it is there, they could be passing on the cost as opposed to auto and auto ancillary.
Have you done any analysis on the auto ancillary? Because there are so many companies like Sona Comstar, Bharat Forge, Samvardhan, Sansera, Ramkrishna. At Quantum, have you done the analysis? Which company gets impacted how much? And do you own any in your portfolio?
No, again, in terms of exposures, we are mostly into domestic, facing companies. If you were to look at our auto exposure, it's primarily two-wheelers. We have some bit in the CV play as well. but primarily domestic-facing companies. If you were to look at the whole basket of the auto stocks that are present, especially the OEMs, majority are India-focused. Maybe some bit of exports outside, but to US there could be, maybe you can count them on your fingers in terms of company exposure, large company exposure. See, one of the possible impacts back of the envelope is perhaps the margin impact that could come if you were to build in these costs into your estimates, right? So that there could be about 100-150 bips impact that can come in some of these auto anchor players, but it has to be, we have to look at individual names and to figure out where the exposure could be and what is the propensity to mitigate it through a price impact. So that has to be more selective.
Understood that. Christy, the other thing we want to understand is, and something that you briefly alluded to in your first answer, was the impact as far as the pharmaceutical space is concerned, especially generics. Now, within the pharma pack, where do your preferences lie? Is it domestic-facing companies, or export-oriented companies, and will it be, the generic players or the CDMO players?
Right. So we have two names in our portfolio within the pharma bucket, and broadly, if you were to look at the exposure towards US, it could range from 35 to 40-45% near about. So some bit of exposure to the export-facing. But as again said, we are not so concerned because if you were to look at the whole reciprocal taxation and how it behaves, we export close to about 8 to 10 billion, sort of every year, and we import close to about 800 million. And the taxation on the 800 million to about $1 billion is on the higher side, whereas the generic there is virtually no taxation. So it could very well be that the government, still in the negotiation stage, may lower the taxation on that. And if it were not to happen, the other impact is possibly how do they price the product in the end market, especially if you look at the certain shortages, product shortages has happened in the recent past. It is primarily because, either the facilities are getting impacted or, the cost of manufacturing certain products because of their competitiveness is very high. And so people are vacating that space. So if you were to think about, cost increases as a whole, not a lot of players would survive in that sense if you were to just look at the US market. And also, India has this advantage in terms of lower cost of production versus the US. So some of the US Indian majors have set up facilities in US, but those are very less, far and few in between. So our confidence comes mainly from the fact that the generic pricing is already at a low price. There could be a cyclical uptick that we have seen in the recent past. And, if you were to increase that further bit, chances are the companies would want to pass on that cost as opposed to people who themselves.
Christy, you all also own GAIL in your long-term equity fund. You have about a 2% holding, GSPL. We were just chatting with the management of GAIL, and the PNGRB has made some amendments to the tariff regulation. And the company was just telling us, GAIL was telling us that it will be a big positive for them, while they've not quantified the revenue impact. And they're also hopeful of that tariff revision coming through. The stock has corrected about 27-28% from its 52-week high. What are your thoughts on GAIL? Is it attractive to add at these levels, or just continue to hold on?
Yeah, again, I wouldn't want to get into specific stocks, but broadly, the utility space looks attractive to us. The way we think about it is majority of them, at least what the names that we own, are regulated equity businesses. For the capex that you do, you get your certain sort of return on equity. And while the PNGRB pricing and all is quite volatile and could be all over the place, at least we have seen in the recent, the last edition, there were a fair bit of surprises that came in. So it's very difficult to call out how, that could evolve. But in that whole matrix of regulated equity returns and the valuation that we pay to some of these stocks, if it fits the bill, we would be adding. And some of the names that we said, more recently we've been adding to some of them, especially in the utility space. Given, the price correction that you said has happened, they look probably pretty attractive to us at this point.
Thank you so much, Christy, for joining us, giving us your view on what could be likely tariff impacts as well as your sector-specific outlook. So, time now for a short break. We'll get him on the markets on the other side.
sustainable. The industry is consolidating, and its international business also has a long growth runway going forward. Another stock that has been the news recently is M&M, and Goldman Sachs here is anticipating a ramp up of its recently launched battery EV, a pickup in its farm equipment business, and potential value unlocking in its unlisted arms that is leading it to a 3,800 rupee price target here. Now, for Apollo Hospitals here, Goldman Sachs is expecting to see better hospital occupancy in FY26, and its digital business, which is Apollo 24/7, to break even soon, and it has a price target of over 8,000 rupees on that stock as well. Now, the last two names on the list are Power Grid and Make My Trip, where for Power Grid, Goldman Sachs is seeing a significant opportunity in the transition-linked grid infra and a structural need to overbuild the grid going forward, while for Make My Trip, which is listed in the US, of course, it has strong underlying travel trends, the industry structure, a favorable one that is likely to aid its margins, and it is likely to expect a $300 million free cash flow going forward as well. So markets fell, valuations corrected, and now it does look like brokerages are getting their shopping bags out for the Indian markets for sure.
Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first for the sharp fall we saw in the stock price? The promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down, and this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margin.
Welcome back. The Nifty is at 23,600, give or take a couple of points here and there. It's been a good Thursday morning so far. Earlier today, we had a chat with CLSA's Lawrence Belanco, and he believes the worst is now over for the markets. Listen in.
I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate. Looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000. If you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window. We still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But, still having a long-term upside target of 37 to 42,000, I do think India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Well, that brings us to a close in Trading Hour. Thank you very much for watching. Stay tuned. Halftime Report is up next.
Working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that. But we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around. And our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the U.S. or in other countries, and that would not be good, I think.
Frontline stocks push higher even as the broader markets are evenly balanced on advances amid declines. The positive net foreign flows help buoy sentiment even as tariff uncertainties continue to loom.
Trump announces the imposition of 25% tariff on all car, LCV and auto part imports into the US from April 2nd, spooking auto stocks. Tata Motors, that's the key loser on fears of tariffs denting JLR sales.
Wipro has bagged a hefty $650 million 10-year digital transformation deal from the Phoenix Group in the UK. The stock perks up on the win.
In a significant milestone for Maruti Suzuki, Sunil Kakkar becomes the first executive to be appointed to the company's board. Meanwhile, the FMCG leaders, HUL ropes in Britannia's Rajneet Kohli to lead its food business.
And CLSA's chartist Loris Balanko believes that the market has bottomed out and expects the Nifty to scale to 26,000. But Goldman Sachs' Sunil Kaul advises caution on tariff uncertainties and the domestic slowdown.
Hello and welcome to Halftime Report. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Hormuz. Well, Hormuz, not such a bad day, right? We woke up to the tariff news and Trump appears to be quite serious, at least on a few products, and at least for now. But that dip got bought into. And earlier this morning, we had made that one point, that if the Nifty needs to do well today, it appears that the Nifty Bank will have to lead the way. I'm glad that's the way it played out because that was the big call this morning.
Tariffs what? Is what the street is possibly asking right now. But yes, other than some specific stocks, of course, it has been a fairly okay day for the benchmark indices, especially considering the fact that it is the monthly expiry as well. And we are looking to break that 5-month losing streak on the FNO side of things, and 23,600 is where the Nifty is 100 points higher. You would take that with both hands considering the overnight developments on the tariffs front, also on Wall Street as well. Of course, there are names like Tata Motors that are still continuing to struggle, 6% lower on the stock. Even now, Sona BLW is down 4.5 as well. So there are some names that are still bearing the brunt of this tariff uncertainty. But of course, there are a lot of other names that are doing well for themselves as well in today's trading session, particularly from the broader markets. There's the fact like Capri Global, RHI Magnesita is up 8.5% as well, Nigel. And speaking of these auto names as well, and it is Tata Motors and Samvardhana Motherson, both of them, and a lot of others as well. Most of them have recovered from the lows, and that is after the US announced that 25% tariffs on imported autos. Sudarshan is here with more details and the potential impact that it could have on these companies. Sudarshan.
So auto sector is under pressure in today's trade, and most of the stocks have recovered from intraday lows. But two stocks that are still under pressure, and one is Tata Motors, which is down more than 5%, and Samvardhana Motherson is down almost 3%. And this on the back of announcement by US President Donald Trump, who has announced that there would be a tariff of 25% on all the cars which are not made in the US, and those tariffs would be effective April 2, and tariffs would also come for the auto parts. Now, why these two stocks are majorly in the focus? Tata Motors, because JLR has USA as one of the important markets, and which forms 1/3 of its total sales. Also, the most important point is JLR does not have any production facility in the US. All the cars that JLR sells in the US market are imported by other countries. That's the reason Tata Motors is under pressure. Next up is Samvardhana Motherson. So US forms nearly 40% of its total sales, but that's not the important point. Important point is Samvardhana Motherson supplies auto parts to all the major automakers which export to the US market, and indirectly it's been likely there might be impact on Samvardhana Motherson, which can be in the range of 6 to 7%, and that's the reason Samvardhana Motherson is under pressure.
Indeed, Sudarshan, thanks a lot for that. Now, in fact, let us also listen into what President Trump said on these auto tariffs.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
Well, sticking with the auto stocks then, Ashok Leyland plans to shut down its Switch Mobility UK facility. In fact, earlier today, we spoke to Mr. Shinu Agarwal, the MD and CEO of Ashok Leyland. He spoke about the UK facility shutdown and also addressed investors' concerns around the promoter pledge. Let's listen in to what he had to say.
We had been making losses in the UK for many years now, and after having tried several things, we have taken a decision to start this consultation process, which might lead into cessation of the manufacturing and assembly activities in the UK. Of course, we are not exiting the market. In the recent past, we have been making about 2 to 3 million British pounds of losses every month. Now the number varies depending on how much orders we have in hand and how much we can fill up our capacity. But that is the broad range between 2 to 3 million pounds per year. And of course, once this consultation process is over and we have complete clarity as to which way it will go, we think that most of these losses should be behind us now. The Hinduja Group has many businesses outside Ashok Leyland, right? And many of these are doing very well. Secondly, I would say that, we are really not privy of the matter as to what is the usage of these funds. But of course, if we get to know more, we'll be very happy to share with you. And finally, I would say that, during various interactions with the promoter, we have found that they are more than committed to the success and growth of Ashok Leyland. Many times we have been into discussions with them as to how Ashok Leyland can move forward in fulfilling its vision of being in the top 10 global CV players. So I can assure you that they are fully behind the company.
The management there of Ashok Leyland, multiple news flows surrounding the company there as well with regards to the promoter pledge and the decisions in the UK market, but the stock recovering from the opening lows. We'll take a short break, and just before we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is CNBC-TV18's all-new app, where you get in-depth articles, breaking news and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or you can even scan the QR code that comes up on your screen to get the app. We take a short break, back on the other side.
Important was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India, because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next?
Happens very frequently when you're an experimental log, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me, and also it
sounds like relationship advice.
It's very important to not take things personally, as simple as that.
Welcome back. Still 110 points higher on the index, holding on to the gains and respecting, of course, levels on the upside as well. We're moving on to an exclusive then. Sources are telling CNBC-TV18 that the IT ministry has prepared a cabinet note on electronics components PLI, likely to be sent to the cabinet for approval later this week. Ashmit is joining us now with more details. Ashmit, what are your sources telling you?
Well, it's been a long time coming. There's been a lot of talk, a lot of speculation in terms of which way the electronics components PLI is headed. We spoke to highly placed sources within the government. What they tell us is that finally the cabinet note has been prepared. It will be put forth. It will be sent up to the cabinet for consideration and for subsequent approval. This is a decision that had been in the waiting for a better part of the last 3 to 4 months. Now, what's important here, let's break this down as to what we can expect from this electronics components PLI. As the name suggests, it's directed at the electronics components like batteries, displays, camera modules, printed circuit boards. That's the direction in which it will be heading. This is important given that how it comes on the back of the specs scheme, which in fact ended in March of 2024. So this takes on the baton from there, the electronics component PLI. What's important is that the figure, the outlay that we're looking at is north of 25,000 crore rupees. So that's a big amount. However, let's bear in mind that the industry had sought an even bigger amount of 40,000 crore rupees. When asked on what this industry demand is, as opposed to the outlay, what government sources are telling us is that for now they're going ahead with 25,000, but they're keeping an open hand, they're keeping it flexible, they're open to the idea of reviewing the outlay subject to the response that the industry furnishes to the first round of this PLI. That's one. As far as what we can expect, what the government is expecting in terms of investments, well, the figure that we're hearing is in the range of 40 to 45,000 crore rupees of investments is what they're expecting in this electronics component ecosystem. And bear in mind, this is critical. This is part of the larger government strategy to aim for that $500 billion in electronics manufacturing by 2030. That's the pursuit that the government is after. The government's hope and aspiration is that this PLI, like it did for mobiles, will help bring the larger players come together for the electronics ecosystem here in the country, and that will eventually lead to greater localization and greater value addition from within India. Back to you.
Okay, all right. Thanks a lot for that, Ashmit. Well, let's focus on a couple of other names. NBCC, that gains after it signs an MOU for a particular project. Vivek joins us to tell us more about that. Vivek?
Well, a very interesting development and an announcement made by NBCC post-market hours yesterday. The company said that it has signed a strategic MOU or Memorandum of Understanding with Mahatma Phule Renewable Energy and Infrastructure Technology Limited. This particular collaboration is to jointly undertake consultancy, fee-based EPC and redevelopment projects, and this means that NBCC is now entering the redevelopment space within the state of Maharashtra. What are the targeted projects of this particular platform or the MOU that has been signed? Number one, cluster development projects in the Thane region, data center projects, renewable energy initiatives, some rehabilitation projects in MMR, which is the Mumbai metropolitan region, and also residential products under the Pradhan Mantri Awas Yojana. Projects, the company says, has an estimated value or a scope of close to 25,000 crore. Important to watch is what are the projects that NBCC gets into its kitty, what will be the fee that NBCC gets, and what will be the eventual targeted timeline that NBCC will eventually be able to garner from this particular development.
There's interesting developments there for NBCC, 25,000 crore rupee MOU. So you keep an eye out on that. As Vivek was mentioning, what projects will eventually fall into their kitty remains to be seen. But moving on, Aadhar Housing is another one that has been doing well in today's session, and that is after DAM Capital has initiated coverage on the stock with a buy recommendation. Vinny is here to tell us more on that. Vinny.
Absolutely. So we are seeing Aadhar Housing that has been buzzing in trade today. Like you mentioned, DAM Capital initiated coverage, buy rating, target price of 525 rupees per share. What are the key highlights that they're seeing is working out for Aadhar Housing, and why are they positive on this one? There are two key areas they believe is working well for Aadhar Housing versus peers. One is in terms of the geography that they're present in, as well as the holistic mix that is there for Aadhar Housing. Now, in terms of housing loan versus non-housing loan as well, the company has been focusing on increasing and scaling filling up the housing loan versus the non-housing loan segment. So that is something that they keep a keen eye on. Other than that, growth target given by the company, 20 to 22%, is something they believe would continue for the company going forward. And also in terms of the ROAs, that's the return on assets, are quite high compared to the peers. ROE is also at doing quite well for the company in terms of peers, what other housing is seeing, and especially peers like Aavas Finances is something they are much better in terms of the ROEs and ROAs as well. Other than that, the company is also in terms of the stock that is trading at in terms of valuation, it's 2 times its book for FY27 and 13 times its book for FY27 in terms of earnings is what they're keeping an eye out on. They expect ROEs to be in the range of 16 to 17% over the next couple of years and could be at 18% in terms of the peak level that they could expect over there. So quite positive on this one is the view coming in from DAM Capital.
Okay, all right. Thanks a lot for that, Vinny. Well, time to slip into a short break. On the other side, Aditya is waiting for us to give us some trading strategies. Don't go anywhere.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that. But we spend about the same as others. And that is a function of both, I think, 2 big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around. And our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher.
Welcome back. Wipro is buzzing in trade on the back of a big order win from UK's Phoenix Group. Rima joins us to tell us what are brokerages making of this big order win. Rima?
Thanks so much for that. So indeed, Wipro's won a mega deal, 500 million pounds, which is about 650 million US dollars spread over 10 years. So incrementally, it could add close to about 0.5, 0.6% to Wipro's top line. And remember, the company that they won the order from, UK's Phoenix Group, already has a long-standing relationship with TCS. Actually, that's what makes Kotak very bullish. So they're saying this deal is notable because it marks Wipro's entry into an account which has been a strong hold for TCS. Also, this is the second mega deal that Wipro has won in the last 4 quarters. According to Kotak Institutional Equities, the deal will ramp up from December of 2025 quarter, that's Q3 FY26, and fully ramp up by the end of FY26. Initial profitability of the deal will be low, as is the case typically with mega deals. But according to Kotak Institutional Equity, Wipro will be able to make up for the margins and hold on to margins of about 17.5% through the duration of the entire deal. That said, even though Kotak is enthused by this mega deal win by Wipro, they still have a sell rating on the stock with a target price of 265. They're cautious because, a turnaround requires many things to go right at the same time. It is challenging, and while Wipro's growth, underperformance versus peers will continue to narrow, it will still underperform its peers. Morgan Stanley too, acknowledges that this deal should support expectations of a pickup in revenue growth for Wipro in FY26, especially in a volatile macro environment. They too have an underweight call on the stock, and their target price too is 265.
Every time there are positive developments on Wipro, it somehow just does not manage to convince the street at all. And even though one of the few Nifty stocks that has more consensus sell recommendations than buy recommendations, but still holding on to gains of around about 2% is Wipro. It'll be interesting to see what the numbers look like when they come in a couple of weeks' time. But for now, shifting focus back to the markets, the Nifty is exactly where it was at the start of the show. 23,600 is where the index stands. Where is it headed now after that bit of a hiccup that we had in yesterday's session? Aditya Agarwal of Invest for Edu is joining in on the show now. Aditya, good afternoon. Thank you for joining in. We got to 23,800 but failed to cross it. Had a bit of a hiccup yesterday, but then that dip has been bought into today. What are the charts indicating now for the index and also for the Nifty Bank as well, because that's the one that's keeping the index higher? And what are your stock recommendations this afternoon?
Hi, afternoon, Ormus. Thanks for having me on the show. Afternoon, Nigel, as well. Oh, that was a blip, I think so, in the sharp up move that we had seen for the last 7 trading sessions. Yesterday was just a pullback. Maybe I would call it more as a breathing space, giving traders an opportunity to go fresh long on the index. 23,400 on the downside will continue to act as a very strong support area. I believe market is poised towards the 200 DMA, which is somewhere around 24,000 on the upside. So maybe come next week or the week after that, we will definitely see Nifty inching closer towards 24,000, and I don't have any doubts towards that because markets have become a little comfortable now. The negative news is out of the way. It's getting priced into as well. So I believe one should look at fresh long additions both on the Nifty and the Bank Nifty. For the Nifty, 23,400, as I mentioned, is a good support area. Can test levels of 24,000, 24,100 on the upside, which is where the 200 DMA is. And as you mentioned, Bank Nifty is the main driver in this up move, and I think it is likely to continue in the coming trading sessions as well. On the upside, easily 52,300 to about 53,000 is something which I think Bank Nifty can easily scale past. And within this, I think it will be the PSU lot, Hormuz, which will take the Bank Nifty higher. Especially, I think SBI is one stock which should be on the radar of all the traders, and it can easily see 5 to 6% upside from current levels.
What about specific stocks?
So I've got a couple of buy recommendations. One is GAIL. I think this entire space, energy space, is buzzing around, and GAIL is one stock which is looking interesting to me at current levels. So I would go ahead and buy for a target of 190, place a stop loss at 172. The second sector which has been buzzing around and looks very interesting is the cement space, and I think there are pocket full of stocks which still offer good upside potential from current levels. Looking at Shree Cement, this is one stock which has broken out into an all-time high territory from a good consolidation phase. Risk to reward is in favor of going long at current levels. As we speak, stock is making new highs. So I'll buy for a target of 34,000 on the upside, place a stop loss somewhere around 29,500 on the downside.
Okay, all right, Aditya, good to see you in after a while. Looking forward to catching up with you in the time to come. Thanks a lot for those calls. Well, today's expiry day, so things will get even more volatile from here on if it's not volatile enough. So let's tell you about a couple of levels that we are tracking. This morning we had mentioned that, the Nifty ended at around the 100 EMA Hormuz. And in fact, the 200 EMA is the line in the sand, which is at around 24,000 odd. If we can get past that, I'll tell you what, the bulls will feel very, very good. Looking at the options data, the sense you're getting is that the lower levels, 23,450 can get protected. Why do I say that? Because we have aggressive writing that we're seeing at around this 24,600 put as well as 23,500 put or thereabouts. So that's going to be important, 23,500 put. On the call side though, the 23,600 call, well, that's seen aggressive writing as well in today's trading session. And that's going to be the important one. So that's telling you at higher levels, we can see some kind of a resistance out there. So the range you're getting is on the downside, 23,450. On the upside, 23,650. As of now, positioning is such that we don't get past the 23,650. But that's going to be important. If by chance we can get towards that level, you'll see a massive bounce in the final hour of trade. So that's going to be important. Reference on the low side you have. And as we mentioned earlier today, the Nifty Bank, that's the most crucial index for today. Given the global uncertainty, you want to look at a sector that seems reasonably protected from this tariffs and the likes, and also where valuations are pretty okay. And with the FIs showing us the money, the most of their holding here in the Indian markets is financials as well as bankings. So that could be the sector that could lead the way from here on if we need to get up. The 100 and the 200 EMA, that's the closest support level that we have, the reference point on the downside.
Indeed, and you keep an eye out on the Nifty Bank because that has been the outperformer in the recent past as well. That has ensured that the Nifty stays higher as well. The Nifty, as you mentioned, 23,450 was the level that Nigel was mentioning on the downside. 23,412 is the low of the day. And 23,650 on the upside, we've reversed from, or we are finding some bit of resistance around 23,625, which is the high of the day as well. By the way, when we started the show, we spoke of Capri Global. That was up 10% at the start of the show. It's up 14% now on very strong volumes. We had to determine what's causing this surge. The stock was up in a very strong move yesterday as well. So Capri Global, top gainer on the Nifty 500, 13.5% higher there. But Bharat's growth story is being driven by leaders transforming policy into real progress, and you can hear directly from them at the News 18 Rising Bharat Summit 2025 on the 8th and the 9th of April at the Bharat Mandapam in New Delhi. This is an exclusive opportunity to hear straight from Nitin Gadkari, the Union Minister for Road Transport and Highways, on infrastructure-led economic transformation, Hardeep Singh Puri, the Union Minister of Petroleum and Natural Gas, on shaping Bharat's energy resilience and global positioning, and Ashwini Vaishnav, the Union Minister for Railways, Information Broadcasting and Electronics and IT, on advancing digital infrastructure, mobility and communication. You can get your tickets today for the summit that defines what's next for Bharat. You can book your passes right now with the QR code on your screen.
Our biggest cost is R&D.
Yes.
They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar. at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda.
Welcome back. Now, there has been a lot of uncertainty around the Trump tariffs as we have been talking all through the day, and the markets have remained on the tenterhooks. Now, to dive deeper on this tariff issue, our colleague Prashant caught up with Sunil Kaul, the global emerging market equity strategist at Goldman Sachs, and spoke to him to get a broader understanding of the impact that it will have on India and other global markets. Listen in.
Our sense is that, look, India will be one of the many trading partners that will likely get sort of be included in the reciprocal tariffs. I think the Office of U.S. Trade and Representatives, they sought inputs from 19 other trading partners. Out of those, 15 have trade surpluses with the U.S., which covers close to 90% of the U.S. imports, right? So India would be one of the 15 trading partners we think that could come in the reciprocal tariffs. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates.
You and I are talking about it, and people around dealing rooms and in institutions are talking about this. You are talking to clients as well. So in a way, if this becomes the view that, well, start with a big number and then walk back, will markets react in a very negative way? Maybe we get a bit of a dip globally, and then that gets bought into?
Yeah, I mean, that's a great question, Prashant. I think the way this has been sort of getting sort of asked in our conversations is that, is April 2nd the clearing event in that sense? Is that, okay, so they announce stuff and then the market sort of looks beyond it, so now it's already announced and that's a clearing event for the markets. Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. So I think the way we sort of think about it is that you probably continue to have some uncertainty related to tariffs over the next sort of 30 days before things start to get 30 to 60 days before things start to get clearer in terms of what the final tariff rate would be for each of the countries. And so I think this will be something which will be an overhang for us for the next couple of months.
Here in India, there have been some news reports. Reuters reported that India is looking to cut tariffs on half of its sort of imports, US imports into the country. So it's fluid out there, right? I mean, so this is also obviously a little bit of posturing. I mean, showing the other side that we're willing to work even before and preempting some of this. So any thoughts there?
Yeah, I mean, exactly as you said. I mean, as we know, the U.S. Commerce Ministry was in Washington a couple of weeks back, and obviously there have been talks with India, similar to the other countries as well. So I think it's all a part of the deal or the negotiating tactics, as we just mentioned, Prashant. And so, I mean, it could very well be that, as you said, India would reduce tariffs on some of the imports well ahead of this. Or even sort of post the actual announcement, because the announcement, as I said, the implementation would be delayed, right? So India could still kind of implement these things post the April 2nd announcement. They could sort of also increase the purchases of sort of defense, energy related imports from US. And so I think each of the country will probably try to negotiate, probably try to lower tariffs in some categories where it's too high compared to what US is charging. And then also sort of increase some of the spending in areas of defense, energy, which US is keen on. And so all of this will be probably part of the countries showing US that they are willing to work with US and come to a more reasonable deal.
Sunil, what about, let's talk about sectors. I mean, agriculture is a big area. Any thoughts there?
Agri is a big area. I think agri has the largest sort of tariff differential if you do sort of US versus India. I mean, so that could be impacted. But we think, for example, like pharma could be an area that could be impacted as well. Autos. I mean, in addition to the reciprocal tariffs, we also think that overall in the tax measures, you could see a global sort of auto tariffs. You could see tariffs on critical imports. And when we think about critical imports, electronics and components is one of the things the Trump administration has talked about. So you could see autos, you could see electronic and component sector, you could see pharma getting impacted as well. In addition to, I think the agri and the textiles, their tariffs are one of the highest. But if you think about the more likely products, I think things that are sort of more in critical imports categories that are more in sort of autos and pharma could be impacted more.
Is it possible to form a view on the markets with all of this uncertainty? Do you have one? The 1st of April, we'll also have these middle class tax cuts which come into force, effect perhaps a few months later. 9th of April is the RBI, maybe a rate cut. What's the view on the market itself here?
Look, I think, Prashant, as you may recall, so we had sort of downgraded the market from overweight to market weight back in October, so about 6 months back, and the view there, and it was largely on the back of the cyclical growth slowdown, right? So fast forward, we already seen markets have come off, valuations for the large caps have come off, but our general sense is that on the domestic side, your growth has kind of bottomed out, but it's still sort of going to be a gradual recovery in here. You still have policy, especially on the fiscal side, which is somewhat restrictive. We still have earnings cycle, which is still seeing more downgrades than upgrades. So we still think there is a couple of quarters of downgrades left. We still know that small and mid caps have much higher valuations, and the positioning there is still not cleaner, especially within the domestic funds, right? So there is still sort of more risks on the domestic side, even though I think the worst is behind us. But then on top of that is what we were discussing on the global side, which is that you have the impending reciprocal tariffs that could come and hit us, which will be with us for a while before things stabilize there. And so because of all of this, we still think it may be a little too early to take broad-based exposure in the market. So we are somewhat sort of cautious in the near term. I think we are kind of much more sort of alpha focused, looking at companies and sectors where you got sort of higher earnings visibility, more stronger balance sheets, and sort of more quality bias.
In India Business Hour, live every night on YouTube with me, Shireen Bhat.
India Business Hour, live on YouTube at CNBC-TV18, weeknights at 7 p.m.
one is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation.
Welcome back. Well, a good time to get you a strong technical voice. We have CLSA's Lawrence Blanco, who believes that the Nifty will move towards 26,000 mark. He adds that private banks can lead the up move in the market. Let's listen in to what he had to tell us earlier today.
I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000 banks as a key sort of relative ratio. And, in the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks. But, just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen ICICI trade back to its all-time high. So, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance and other sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now.
That has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. And I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the U.S. or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
Welcome back. On to some commodity action then. Citi is now saying that gold prices can go up to $3,500 an ounce if concerns on US growth remain higher due to these reciprocal tariffs if they are implemented by President Donald Trump. Manisha Gupta caught up with Citi's global head for commodities, Max Layton, and spoke to him on precious metals and their outlook going forward as reciprocal tariffs loom. Listen in to that exclusive conversation.
We think gold price is going to keep going up. Bottom line is we're in the underlying drivers, the physical and we would say fundamental drivers of this gold bull market remain in place and will continue to drive gold all the way up in our base case to $3,200 an ounce over the next couple of months, and then potentially up as high as $3,500 an ounce if we're in more of a concerning US growth environment than what we have in our base case.
Max, also, where do you see all of this buying coming in from? I mean, we do understand that the central banks are buying and ETF buying has also been quite strong. The kind of gold that we've seen being shipped from UK to US is yet another story. But to take the prices from where they are to 3,200 and 3,500, where is this new buying going to come from?
Yeah, I think you've named all the core recent drivers. We think a lot of them remain in play. In particular, President Trump and his team, they've mentioned some pretty high headline tariff figures on April 2, on Liberation Day, as President Trump's calling it. And these kinds of tariffs, if delivered, even if half of them are delivered, are going to be concerning from a global growth perspective, but also from a US growth perspective over the next 3 to 6 months. So that would kind of cement, in our view, a continuation of what we've seen over the last couple of years, which is a very gradual slowing in US economic growth. Around that, in the past, we've tended to see savings rates rise, ETF demand rise alongside that, with the driver of both being precautionary savings from households. And we think this is kind of going to take you that next leg higher over the next quarter or two.
Max, also, what is your sense on the silver prices? Because the prices have had strong fundamentals, the industrial demand deficit, but we haven't seen $34 an ounce break on the higher side. How are you looking at fundamentals and the price move from here?
Yeah, I think stepping back, this silver price is fantastically high versus mining costs relative to, even if you take a 50-year silver chart, this is a pretty high price by historical standards. So, silver's done well. It's doing well. It's up, it's trading in the low 20s. Bit over a year ago. So, the price is doing extremely well. It perhaps has, disappointed some of the kind of, stronger bulls. It hasn't exactly significantly outperformed gold. So it hasn't been the leveraged kind of play to gold that a lot of people were looking for. And really, that all comes down to the soft global growth environment. So, we think silver, it's got a lot of exposure to a bigger than expected China easing, for example, or and it continues to kind of probably give you roughly the same, maybe less return than gold over the next couple of months. I think the thing that's stopping us getting super excited about silver, and we are modestly bullish from these price levels over the next 3 to 6 months, getting up to $34, $35. The thing that's stopping us is this tariff threat from President Trump. So less tariffs than expected, together with some China easing, and silver can come in more in line with our bull case scenario towards the $40 mark.
We've spoken so much about tariffs, Max. Going forward now, what is the worst case scenario or the best case scenario when it comes to tariffs going forward?
I would say one of the worst case scenarios is that the reciprocal tariffs that U.S. Commerce Secretary Lutnick said that their finding was what would raise $700 billion, that those are enacted fairly immediately, and that those are not redistributed. On top of that, that you have a higher headline number than the $700 billion because because the administration might want to negotiate down from an even higher number. So kind of worst case scenario for me on April 2 is a 15 to 30% tariffs across the vast bulk of the imports, implemented immediately and not redistributed to people either through no tax on tips or to kind of middle income and lower income people on incomes less than $150,000. I mean, if that happens, that's the worst case scenario, I think. The best case is for me is, something like 5 to 10% tariffs, which would still be a pretty big headwind for global growth, in my opinion, and for metals and commodity markets more broadly, and that they are kind of either phased in or industries with complex supply chains are given time to phase in, and that the revenues raised are near immediately redistributed. That would kind of minimize the impact of the shock. On top of that, China and Europe stimulate to kind of offset the impact on their economies. And in that scenario, I think, you can be looking at what U.S. Commerce Secretary Lutnick mentioned about, President Trump and their team owning the economy from the fourth quarter of this year, which would be essentially that the fourth quarter growth outlook is better and even better into 2026. So that's probably the best case. And even then, we've got some pretty serious adjustment to global trade coming over the next 3 months.
An exclusive conversation there with Max Layton of Citi on gold and all things commodities. But with that, we call time on this edition of Halftime Report. From Nigel, me and the team that put this show together, thank you so much for watching. We leave you with the Nifty still at 23,600. Business Lunch takes the action forward.
Teen's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over.
Frontline stocks push higher even as broader markets are evenly balanced on advance and declines. Positive net foreign flows help buoy the sentiment even as tariff uncertainties loom. Trump announces the imposition of 25% tariff on all car, LCV and auto part imports into the US from April 2nd, spooking auto stocks. Tata Motors is a key loser on fears of tariffs, denting JLR sales. Wipro bags a hefty $650 million 10-year digital transformation deal from Phoenix Group UK. The stock perks up on the win. In a significant milestone for Maruti Suzuki, Sunil Kakkar becomes the first executive to be appointed to the company's board. Meanwhile, HUL ropes in Britannia's Rajneet Kohli to lead its food business. CLSA strategist Lawrence Vilanco believes that the market has bottomed out and expects Nifty to scale to 26,000, but Goldman Sachs' Sunil Kaul advises caution on tariff uncertainties and the domestic slowdown. Hello, good afternoon. You've tuned into Business Lunch coming live from CNBC-TV18 Motilal Oswal Studios. I'm Winnie Motiwala and thank you so much for tuning into CNBC-TV18. Markets have recovered from the day's lowest point, right? We're seeing green coming in for the Nifty, Sensex, Bank Nifty also holding on to good gains as well. And Nifty did open up in the red, right? Look at it on the chart. The markets had opened up in the red, then at the day's highest point. As of now, 23,600 is what the Nifty is holding on to. Nifty Bank also similar charts, that pattern that we're seeing coming in for the Nifty Bank as well. Right now, trading at the day's highest point is what the Nifty Bank is doing, up 0.8% in today's trading session. The mid and small cap, we're seeing green on the screen, but it's not outperforming the benchmark indices. So mid and small cap managing to hold on to green, bit of an underperformance on that front. Look at the sector that is doing well other than banks is energy. That's managing to hold on to gains of 0.8%, as well as FMCG, some bit of a gain today coming in on that front as well. Other than that, pharmas, autos are not doing well, trading in the red. Both are down almost 1% in today's trading session as of now. Advanced decline ratio, like we mentioned in the headlines as well, that it's, just in the middle. There's not much of an advance, not much of a decline. It's somewhat at the similar levels. Advance is at 1,231 stocks, while a decline is at 1,402 stocks. But yes, that's what the market setup is looking like. But let's talk about an important sector that is in focus today, that is the auto. And specifically in auto sector, we have Tata Motors that is in focus. And why is that so? And other than that, Samvardhana Motherson also. Let's put the spotlight on both these stocks right now. What is the reason? Trade, we're seeing that US has imposed that 25% tariff on imported autos. Sudarshan is joining in with us to give us more details on this front. Sudarshan, both these stocks see the most amount of impact?
That's correct. So first about the news, US government, basically US President Donald Trump has announced that he'll impose 25% tariffs on all the cars that are not made in India. Also, reports suggest that tariffs will also be imposed on auto parts, and these tariffs will be effective of April 2. Now, why Tata Motors will be impacted? Because if you remember, JLR has one of the important markets, that's the US, and US currently forms 1/3 of its total sales. The important point is JLR does not have the production facility in the US, and all the cars being sold by JLR in the US are imported from countries like UK and China. The second company that is going to be impacted most is Samvardhana Motherson. Why? Because Samvardhana Motherson Motherson's total revenue comes around 40% comes from the US. But the important part is it supplies parts to those automakers which export their cars to the US. So indirectly, there might be an impact of Samvardhana Motherson in the range of 6 to 7%. And that's the reason you are seeing a big fall in both the names.
Okay, Sudarshan, thank you so much for the update there. But in fact, let's listen into the President of the United States, Donald Trump, on what he said on auto tariffs.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
And a short while ago, President Donald Trump also announced that larger tariffs could be placed on European Union and Canada. The president, in his post on Truth Social, wrote that if EU and Canada do economic harm to USA, large-scale tariffs will be placed on both of them. Now, staying with this news, CNBC's Eamon Javers has a report on what he's learned from the White House on the upcoming April tariffs.
President, speaking to Newsmax yesterday, said in terms of the April 2nd tariffs next week, he's inclined to be more lenient than reciprocal, because if he is too reciprocal, then that could be too tough on people. So I talked to a White House official this morning to figure out what exactly that means, more lenient than reciprocal. And what I'm told here at the White House today, Carl, is that what the president is signaling here is that he is not going to take into account all the non-tariff barriers that countries raise against the United States. Remember, early on in this debate, the White House said that they would include things like a VAT tax, wage suppression, currency manipulation, those kinds of things in their calculation of a tariff attack on the United States, and therefore that would be part of the reciprocal tariff back. Now what I'm told is that they're signaling they may not go all the way to including all of those non-tariff barriers in determining what the reciprocal tariff rate should be country by country. How are they going to decide that? I'm told it's more or less going to be on a case-by-case basis, but what they're signaling is that a lot of the stuff they said they would calculate against, they may not actually calculate against. So it is a sort of lessening of the severity of the potential tariffs that we're talking about based on what they had said before. Now, there were a lot of critics who said, as our Megan Costello points out, that some of these non-tariff barriers should never have been included in a discussion of tariffs. Nonetheless, the White House signaling today they might not go all the way in including some of those non-tariff barriers next week.
Now, even as Trump's tariff threat looms, sources told CNBC-TV18 that the ongoing bilateral trade agreement talks between India and the US are going well. The Indian industry had expressed concerns about the impact of these tariffs on companies and job operations and seeks an early bilateral trade agreement with the country. Their aim is mainly to avert or delay the tariffs that will begin next week. Now, sources add that the industry has written to the government to protect them from the impact of reciprocal tariffs. Sources tell CNBC-TV18 that Prime Minister's office, the Commerce Ministry and the MEA officials are in active discussions to consider tariff cuts for the United States. And Tim C is joining with us to give us more details on this one.
Well, yes, as you rightly mentioned, what we are picking up from sources is that the top officials from the Prime Minister's office, MEA and the Commerce Ministry are in active discussions to consider tariff cuts that can be extended towards US. To be precise, no list has been finalized as yet because it is the entire goods list, that is the commodity side that we import from US, is all on the drawing board along with what are the current rates. And exactly based on that, government is looking at various permutations and combinations as to what can be offered to the US. As we speak, the comprehensive review of the current import categories and duties is currently being undertaken and the discussions are still on. But Sources indicate that even as there is no final decision that has been taken, but some of the commodities, some of the goods that could see a tariff cut could include medical and scientific instruments, where the current basic custom duty is at 7.5% to 10%, cruise and ships, where the current rate of basic custom duty is 10%, aircrafts, where the current basic custom duty is 2.5%, spacecrafts, where the current basic custom duty is 10%, cars, where the basic custom duty ranges between 70% to 100%. Also, when it comes to the next categories, turbojets and propellers, where the current basic custom duty is 7.5%, high-end jewelry, where the basic custom duty is 20%, gems and jewelry also is on the list, where there could be a cut, where again the basic custom duty is 20%. Footwear, where the duty is at 35%. Plastic polymers, where current basic custom duty is between 7.5% to 15%.
Right.
Organic chemicals, again, where the basic custom duty is about 7.5%. Just to put things in perspective, India in the last calendar year, that is 2024, imported about 35 billion worth of goods from US, which was a 6.5% of growth when compared to the calendar year 2023. So let's see what happens finally. What is the decision that has been taken by the top Indian government? Back to you.
Absolutely. Thank you so much for that, Timsy. But let's also listen into what Goldman Sachs' Sunil Kaul has to say on reciprocal tariffs and its impact on the Indian market.
Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. Agri has the largest sort of tariff differential if you do sort of US versus India. I mean, so that could be impacted. But we think, for example, like pharma could be an area that could be impacted as well. Autos. I mean, in addition to the reciprocal tariffs, we also think that overall in the tax measures, you could see a global sort of auto tariffs. You could see tariffs on critical imports. And when we think about critical imports, electronics and components is one of the things the Trump administration has talked about. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates.
Okay, on that note, we're going to step into a very short break, but here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screen.
So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would not be good, I think.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups.
Welcome back to Business Lunch on CNBC TV18. Now let's move on. Days after the Atlantic revealed that the Trump administration discussed plans to attack Houthi, a target on the Signal app group. The publication has released additional chats that took place on the group as well. And apart from that, the revelation have caused massive furor in the Washington DC, with both the Democrats also in focus as well as the Republican as well. But let's move on and talk about Wipro, because Wipro is in focus as well and is among the top Nifty gainers after the company announces $650 million deal, a UK insurance company, and this is the deal what is there. Rima is joining with us to give us more details on this one.
Thanks so much for that. So indeed, Wipro's won a mega deal, £500 million, which is about $650 million US spread over 10 years. So incrementally, it could add close to about 0.5–0.6% to Wipro's top line. And remember, the company that they won the order from, UK's Phoenix Group, already has a long-standing relationship with TCS. Actually, that's what makes Kotak very bullish. So they're saying this deal is notable because it marks Wipro's entry into an account which has been a strong hold for TCS. Also, this is the second mega deal that Wipro has won in the last 4 quarters. According to Kotak Institutional Equities, the deal will ramp up from December of 2025 quarter, that's Q3 FY26, and fully ramp up by the end of FY26. Initial profitability of the deal will be low, as is the case typically with mega deals. But according to Kotak Institutional Equity, Wipro will be able to make up for the margins and hold on to margins of about 17.5% through the duration of the entire deal. That said, even though Kotak is enthused by this mega deal win by Wipro, they still have a sell rating on the stock with a target price of 265. They're cautious because, a turnaround requires many things to go right at the same time. It is challenging, and while Wipro's growth, underperformance versus peers will continue to narrow, it will still underperform its peers. Morgan Stanley too, acknowledges that this deal should support expectations of a pickup in revenue growth for Wipro in FY26, especially in a volatile macro environment. They too have an underweight call on the stock, and their target price too is 265.
Okay, and a quick look at the market as well. We're seeing the green across the screen, but one stock that is falling in trade is Capri Global. We've seen a sharp fall coming in for the stock in just the last half an hour, so keep an eye out on Capri Global. But my colleague Prashant is in conversation with Joe Taylor, the CEO at Ontario Teachers Pension Plan. Let's go across and listen into their conversation.
Ontario Teachers Pension Plan is one of the world's largest and most influential institutional investors, managing nearly $200 billion in assets globally. Their investments in India stand at over $4 billion and are growing, with a diversified portfolio that spans infrastructure, private equity, real estate and tech. Ontario Teachers is known for its long-term patient capital and disciplined investment approach. Today, I have the pleasure of sitting down with Ontario Teachers' CEO, Joe Taylor. Joe, welcome to the program. Thank you very much.
Thank you for having me.
For markets globally, it has been a time of change, some confusion, but lots of opportunities ahead as well. So with that short preamble, let me dive straight in. Joe, once again, how are you liking your Mumbai trip so far?
It's always nice to come here. I find the optimism in India really encouraging, and there's good reason to be optimistic. Lots of good things happening in the country.
Although right now, a lot of the focus is on what's coming next week, 2nd April. Trump tariffs, reciprocal tariffs day, or as President Trump has been calling it, Liberation Day for the U.S. I mean, as a patient, long-term investor, Joe, how are you thinking about this? Do you think, I mean, do you go with the this too shall pass attitude, or you think it'll do some durable damage?
We're probably a bit in the middle. So we are a very long-term investor. You know, our liabilities go out 40, 50 years. So the first thing you want to do is not overcompensate. And some of the impacts of the tariffs isn't really fully understood yet. Second thing to say is we try to plan to have a very diversified portfolio, both in terms of the asset classes we hold and actually where we hold it around the world. So really what we're trying to do always is to be agile, but also to be thoughtful about what we might want to bring in as new investment activity and where we probably feel a little bit more exposed. But coming back to the US, we probably have around 30 billion of investment there. So it's a material market for us, and it's also been a very profitable market for us over 20, 30 years.
You said I don't want to overcompensate, but is there a risk of underpricing the risk?
Well, our job's not to do that. You know, we do take risk and we're willing to do it. We're a mature plan, so we have to be careful. Our contributions out exceed our payments in every year. But what I think I would say is that you can overreact sometimes to news flow and things that look like they could be a material impact on your activities without really fully thinking through how it's going to land. I think we're honestly still in that mode of still trying to evaluate what to do. But certainly, if you're based in Canada at the moment, there's a lot of reflection. We've got an election coming up. We've also got quite a few initiatives that have been developed about how we continue to invest in Canada ourselves, but also how do we help trade where it may be going less into the US than it did before. You know, you sit on top of one of the largest sort of institutional investing assets globally. My question is, which way are you leaning? Do you think this will be a bit of a break from the past, what is being proposed, you know, America first, tariffs, and it looks like they really believe in it. It's not like a negotiating tool and then you sort of propose something and walk back all of it. So we will find out. But without going into specifics, do you think it's on many fronts, not just from a market standpoint, it's a bit of a break from what we've had so far for a few decades, actually? It does feel something different. We're actually trying to plan for something that is enduring, because that's the easiest way to be sure of probably the one with the biggest implications for an investor like ourselves. The thing I would stress is, and you did it in your introduction, so thank you for doing it, is, you know, we are an international investor.
Yeah.
We do look to try and have a diversified portfolio around the world. That's why I'm here in India. That's why we have a team on the ground here. And sort of my job is really to say, if it gets a little bit more tricky in some markets or some asset categories, what do we do? And that agility and that willingness to innovate and try some other things out has really stood teachers out for a little while.
The other, I mean, you know, so for example, America first.
Yes.
Making in the US has been a big sort of theme. We got this 25% auto tariffs on cars not made in the US, right? I mean, that's just one example. What about capital itself? Will capital allocation strategies change because of what is happening? You know, US versus the rest of the world. I mean, actually, in many ways, US has been the only game in town for the last few years. Will that continue to be the game in town, or you think, I mean, how are you thinking about the whole thing?
Sure. Well, it is an attractive market. If you look around the world and you look at the risk-adjusted return, America has a lot of positive things going for it. That probably means we'll try to continue to see other ways of having exposure to the US. And probably if we're not able to do that, maybe because of sort of more of an American first mentality, we'll then have to really try and work out other destinations for some of our capital. I think you also think about two other things which are very important to us. So one is, it's not the new deployment of capital, it's what you already own down there, which actually, how do you make the most of those businesses in terms of maximizing their value? And secondly, we're very, very keen ourselves as an organization to invest in companies, not only to get a return for our members, but to get do it the right way, so we improve those businesses as we own them. So to be a good custodian of the asset, making sure it's a better business when we sell it. Now, if that's not possible because we have a different outlook to some of the American states, then that might be problematic for us.
And are we going in that direction, to your mind?
It depends what we're investing in. So I would guess if we would say we're investing in something around healthcare, that might be a little bit more controversial than trying to help on electricity, power and transmission, which I don't think is that controversial, but there is clearly a need in the US for more power to serve the growth in demand from data centers and other activities.
What about sort of regions like Asia, India in particular, China, for example? I mean, with this America First stance, what does a money manager do as a global investor? I mean, if you're in one country, if you're an Indian investor, and mostly you can only put your sort of money in India or in the US for that matter, it's different. But you have money everywhere. How does this change things for you, especially with regards to Asia and India?
Sure. Well, we've been investing in Asia for a while. It was a deliberate decision to actually give us that access to higher growth, interesting markets where there's a lot going on in technology and sort of new areas, as well as some of the more traditional fields. We've paused our investing activity in China. We did that a couple of years ago. We actually made that choice because we felt we couldn't necessarily see the growth in that market in the way we had seen hitherto. And also, from our point of view, we trying to compare what we could see as a new investment opportunity there with other parts of the Asian region even. I think it's very dangerous to see India as a substitution for China. It isn't. It's a different business. It's a different market. There are different businesses here. But what we do see here, I think, is a country which is, let's say, disappointed with 6% growth. I mean, I'd be delighted with that in Canada at the moment, to be quite honest. But it also has a very supportive government for inward capital like ours. It has a stable and growing economy. It has the right currency in terms of it being stable to the Canadian dollar, which is one of our other considerations. And we've made co-investments with the Indian government in things like the National Infrastructure Fund, where it's allowed us to navigate what's actually coming up as investment opportunities in the near future. So we've invested in a number of toll roads as well as hospitals and other growing sort of tech businesses in the region, and they seem to be performing very well.
Okay, an interesting chat there that Prashant is having with Joe Taylor. But on that note, we're absolutely out of time on this edition of Business Lunch on CNBC TV 18. Thank you so much for tuning in. Mid-Cap Radar comes up next.
Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV 18 and CNBC-TV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
one is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would not be good, I think.
Firm in their resolve are the bulls that they want to end the March series on a high and snap this 5-month-long jinx that the bulls have been facing in terms of monthly returns. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon. And the Nifty looks like it's going to end the monthly expiry on a high as of now. The broader markets too, not too bad.
Not too bad, not too much to complain about. It's expiry, so especially in the last hour, last 2 hours, there could be some volatility that we'll have to face, especially given the fact that there'll be quite a lot of rollover activity. Quite a lot lined up on the show. Let's start off with the top headlines. Frontline stocks push higher on D Street, while mid-caps underperform relatively. Financials and defense gain, while pharma and auto index trade with cuts.
Donald Trump has announced the imposition of a 25% tariff on all cars, LCVs and auto part imports into the US from the 2nd of April. That has spooked auto stocks. Tata Motors is a key loser on fears of tariffs denting JLR sales, along with stocks like Sona BLW.
IRM Energy buzzing in trade as company secures a 5-year contract with Shell Energy India for the supply of regasified liquefied natural gas.
And we'll be in conversation with the management of IRM Energy in just a bit. But NBCC too has surged in trade as the company has signed an MOU with Mahaprate for projects in Maharashtra with an estimated value of over 25,000 crore rupees. And these projects will be executed in a phased manner over the next 3 to 5 years.
JB Pharma is under pressure after 5.7% equity shares get exchanged via a block deal. Promoter KKR's subsidiary TAU Investment is likely seller in this particular block deal. Welcome to Midcap Radar. Well, the markets have found a little bit of steam, especially in the last half hour of the session. A couple of stocks that are doing very well. Paytm, now this particular stock, especially in the last half hour, has surged and in fact now trading near the day's highest point, almost 3% higher for Paytm. And like we mentioned a little while earlier, the entire banking pack is doing very well, and now HDFC Bank is the other name that's up almost 2% in the session, 1.8% higher as far as HDFC Bank is concerned. But this is our special segment, Midcap Movers. Hormaz has gone to the wall. Hormaz, take us through the list of mid-caps that are moving around in the session.
Well, looking at how we started off the day with all the tariffs and the uncertainties, the handover from Wall Street, it's not bad going on the street, even if we may not be surging hammer and tongs, but it's good going anyway. We'll start off with the gainers then that are in the broader markets in today's session. RHI Magnesita, 9% higher in today's session. The top gainer on the Nifty 500. Gujarat Pipavav, Adani Energy Solutions too doing well for itself at the highest point of the day, and Welspun Corp too having a good day at the office today, 4.5% 1.5% higher in today's trading session. Some of the newsmakers in today's trade, there are plentiful of them. Of course, you start off with the auto ancillary names of Sona BLW at 6.5% lower at the lowest point of the day now. JB Chemicals, as Vivek just mentioned, because of the block deal at one point was down 7 to 8%, but still down 6. BSC, of course, is going to consider a bonus issue over the weekend. And GAIL, we spoke to the management earlier in the day, some very positive commentary coming in there. The stock at the highest point of the day. Some of the others that are moving around in today's session with the shareholder lock-ins ending. Unimex, some very interesting price actions here. Unimex, of course, down 4.5%, but look at Manba Finance, the spike that it saw, and now coming off those highs, still at gains of around 2%, and Yatra Online too, 3.5% lower. These three have seen their shareholder lock-ins end in today's trading session. Stocks that are doing well on the back of volumes and not too well as well. Look at Capri Global. At one point was up 10% just a few minutes ago and is now down 5.5%. By now, that stock has had 10 crore shares traded in volume, and the last 3 sessions has had volumes of anywhere between 1 to 2 lakhs. Nugent Software, Aadhar Housing, GSFC2 having a good day in terms of very strong volumes. And lastly, some stocks that are not doing well in today's trading session. Some of the losers, the AU Small Finance Bank at the lows, Sundaram Finance is at the lows as well. So some of bit of NBFC seeing some bit of profit booking, and KPIT Tech too seeing some bit of red in today's session, Vivek.
Thank you so much, Harmal. You just mentioned Capri Global. If you could pull up the intraday chart of Capri Global, the intraday high was almost at 230 rupees a share. It's cooled off significantly. At one point of time, like you mentioned, up almost 10%. It's cooled off significantly from the day's highest points. Capri Global is the stock that we're talking about. But it's a good time to welcome Nagaraj Shetty of HDFC Securities for a technical check on the market. Thank you so much for joining us, Nagaraj. What are your views on the index levels at the current juncture, and especially going to expiry? Do you expect volatility to continue?
Hi, good afternoon. If you look at last 2 weeks chart of Nifty, the overall sentiment has been changed significantly from the downtrend to uptrend. Now the Nifty is in a strong upside momentum. We have seen a couple of sessions of sizable decline, and the Nifty facing a resistance around 23,800 levels, and 23,400 is going to be the support. So I'm expecting upside momentum to continue from here onwards. Once Nifty moves above the hurdle of 23,800 levels, the next upside target would be around 24,200 levels, and the overall chart pattern is looking positive. I'm expecting more upside in the near term. So I have 2 stocks from the different sectors. First one is the EPL Limited, Nelco Limited. Chartically, if you look at the Nelco, it was in a strong downside momentum over the last many months, and recently it has formed a base around 750 level, which is a strong support and bounce back. The overall chart pattern is indicating a formation of good, strong support and bottom reversal for the stock price. Currently trading around 918, 920. One can look to buy at this point of time, and the upside target would be around 975, 980, and one can place a stop loss at 880 levels. And second one is Majgaon Dock. This stock has been in a range bound action over the last few months, and recently made an attempt to move above the range movement. Currently trading around 2700 levels. One can look to buy at this point of time. 2850 is going to be the immediate target, and one can place a stop loss at 2600.
Nagaraj, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. Majgaon Dock, one of his recommendations there. We'll take a short break, get you more on the markets and specific stocks on the other side. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
Welcome back to Midcap Radar. Well, as promised, Manoj Kumar Sharma, Chief Executive Officer of IRM Energy, joins us now. The stock is a significant mover in the session today. This on the back of the fact that the company yesterday made an announcement to the exchanges that they had executed a long-term regasified liquefied natural gas purchase agreement with Shell Energy. So first up, sir, please take us through the contours of this particular agreement. What is the agreement totally about? What is the kind of spends that will have to be made, and what is the incremental revenue potential from this particular agreement?
Yeah, very good afternoon. Thanks for calling me over here. Actually, this entire Shell agreement is somewhere around securing the energy supply going forward, is getting minimal APM gases. So in that scenario, going forward to secure our growth, which is to be secured through RLNG now. So that efforts have been taken, and we have entered into the agreement with Shell Energy. For this, we'll be in a position to secure our industrial and commercial customers to a great extent. And of course, for our PNG demand and CNG demand, we will continue to see the government's move and allocation. And some more arrangements we are going to do going forward. So we are at advanced stage of another long-term agreement for 5 years with one of the reputed supplier. With that, our up to 2029-30, to a great extent, we'll be in a position to secure our sourcing portfolio strategically.
Mr. Sharma, good afternoon. Thank you for joining in. If you could tell us who are you in conversations with, if you are at the liberty to tell us that, and by when do you expect this long-term agreement that you just mentioned to be completed? And coming to the Shell bit as well, by when do you expect the supplies to start coming in from there?
The supplies from Shell will begin very shortly from 1st of April itself. And we have phased out our entire demand and supply positions in such a manner, starting from 1st of April 2025 up to 31st March 2030, we will be in a position to start our supplies. And for the another supply sourcing, I can assure you, in a couple of days, maybe within 31st March itself, you will be in a position to hear that from us.
Okay, Mr. Sharma, a couple of important points, if we could get it out of the way. We are ending, nearing the end of FY25. Where will you end FY25 in terms of volumes, both for the PNG as well for the CNG segment? And also, could you give us a sense of the kind of impact you've seen on volumes on account of, the reduced gas allocation from the APM?
Yeah, gas allocation, the last question first I can answer. This has
Sure.
come down from 80 odd levels to 50 odd levels now, and going forward also we don't find that much of light is coming as a support from the sourcing of domestic gases. So under those circumstances, the PNG and CNG, both targets we are trying to grow. Of course, this year, because of lower allocations, some sort of hit will be coming, but not to that extent. Last year we had grown 19% on CNG front, and this year we are estimating around 10 to 12%, something of that kind. Overall, PNG, CNG, domestic and industrial, we believe that last year was a negative year for us in the terms of growth, but this year definitely we'll be in a position to reach up to 12% growth this year.
So when you say this year, you mean FY26, is that accurate?
No, FY24-25 estimation I am sharing with you. Of course, next year also we have got ambitious targets. Since the visibility of sourcing is coming up and some domestic sources are also very much visible, we will be targeting around 20% plus growth level year to year.
20% growth level in FY26, that's as you mentioned, quite ambitious as well. But Mr. Sharma, how are things shaping up on the volume front on ground, sir? In the quarter, you just announced your 100th CNG station as well. What is the expansion pipeline that you're looking at by the end of FY26? Would you look to double that count?
Not double exactly. Actually, by the time I'm talking to you, we have not only crossed 100, we have reached 105 now. And next year, we are trying to at least gain a growth of 50% more. Over the whatever we are doing now. So in that condition, we expect that 150 around we will be able to reach next year. That will be a good, growth as far as CNG stations are coming, sir.
Okay, so could you help us with a range for the guidance where you will end in terms of EBITDA per SCM for FY25, and also what is it that you're targeting for FY26? Secondly, for FY26, will there be any payment of license fees to the promoters? The street saw this as a bit of a negative surprise a couple of quarters ago. Will that continue or will that overhang go away?
So discussions are going on with the promoters. They are actively considering. I am not privy to that level that I can share anything on the license fee account. But at least I can assure you that in spite of a license fee or without license fee, going forward next 26 FI onwards, we'll be in a position to give a better, much better results. We are focusing more on our volumes, margins and operational efficiency. That side we are focusing much, and the few appropriations that we are leaving it to promoters also. They have got a big repute. Cadila is one of the biggest promoter behind us. So some fair deal will automatically come. That much I can assure you, sir.
All right, Mr. Sharma, thank you so much for sparing time and joining us today. Wish you good luck for the next financial year as well and your expansion plans that you're talking about, and I hope that you could tell us more about the agreement, the long-term one that you have signed. You're in the course on the verge of signing in as well. Thank you so much for joining in today.
Finish up that line, I can very well assure that we have chosen a very good partner, and with them we can be comfortable. And since they are operating here in Dahej only, within Gujarat only, and most of our volumes are coming from Gujarat, more than 49% of our volumes are from CNG sector, and industrial sector also contributes a huge deal for us. So from all that angle, this particular contract which we have signed is going to strengthen our sourcing and also the margin part. So we are very hopeful and we are thankful to you for giving this opportunity to explain our deals. Thank you very much.
Thank you so much. Thank you so much for joining us, Mr. Sharma. There is a management there of IRM Energy. They're 8% higher on the stock after the deal. And another one is in the works as well, as the management just mentioned. And a small programming note for our viewers now, CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can scan the QR code and submit your entry for the SME Champion Awards Season 2. Take a short break. Back on the other side.
important was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next?
Happens very frequently when you're an experimental org, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me, and also it's.
This sounds like relationship advice.
It's very important to not take things personally, as simple as that.
Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug?
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact.
Welcome back. The index is still at around 23,600, still holding on to gains of around 120 points, but cannot take your eyes off Capri Global. At one point was up around 13% just an hour ago. and now that stock is down 26% from the highs of the day, trading 12% lower, and it has come, this fall has come on very, very strong volumes. Almost 10.5 crore shares already traded on Capri Global. The yesterday's trading volume was around 4.75 crore, so nearly 5 crore shares traded yesterday when the stock was up around 15-16%. And now, and if you take a look at the volumes over the last few days, it is anywhere between 1 to 3 lakh shares daily. So it is very, very significantly high volumes on which the stock has fallen now, almost 25% off the highs of the day, 12% lower on Capri Global, now the top loser on the Nifty 500 from the top gainer in just a matter of 30 minutes. But with that, we call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. MF Corner on the other side.
Supply chains already, we can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D, so that might affect medicine costs in the U.S. or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive.
Hello, good afternoon. Welcome to Mutual Fund Corner on CNBC-TV18. I'm Vinny Motiwala, and thank you so much for tuning in as always. Now we are just near 31st of March. Financial year end is coming in. But overall, the mutual fund industry, have you seen that significant growth that we've seen in the last 10 years for the industry? Asset under management, that's AUM, that's grown around 5 times. And GDP has also witnessed an extraordinary growth in terms of the rise that we've seen. But how should one be considering this volatility that we're seeing in the market? What does it mean for your investments? How should you strategize it? What is the approach that you should make? Wealth creation, right? All of us want that. How is that going to be playing out for you all FY26 and onwards for this industry? What are we expecting? To discuss all of this, we have a very special guest joining in with us this afternoon. We have Vishal Kapoor, CEO at Bandhan AMC, joining in with us to talk to us about that. And Vishal, you have a vast experience in terms of the financial markets, in terms of how you've seen the growth coming in over the years. And I want to just start by talking about the basics in terms of the industry. Like I was saying right now, the last decade for India has been fabulous. We've become a powerhouse coming in from this industry as well. So your thoughts coming in on the industry, mutual fund industry versus the globe, and what are you seeing in terms of the outlook going forward for our industry?
So firstly, thanks for having me. It's a great pleasure. And diving straight into the question that you posed. See, I think India is benefiting and the fund industry is benefiting from 2-3 very large structural shifts that we are witnessing. The first is that India was always an economy of savers. We had very high savings rate. Credit came late into our sort of into our ethos, and with a high savings rate, we were largely dominated by real assets like gold and real estate, and then financial assets were very, very conservative. So therefore, the role of capital markets, mutual funds within the overall savings pie was very, very small. Now that shift has been going on for almost like the last two decades, and that always builds up. So if that keeps going, which is people are saving a fair bit, even if it's coming down, but a larger proportion is coming into financial assets, within which a larger proportion is coming into mutual funds, then the growth, opportunity for us, the headroom is still several times where we are. Just to share with you, for example, mutual fund assets as a proportion of the GDP, AUM to GDP ratio, has moved up from roughly about 9 or 10% to now 18%, right? But another way to look at it is just 18%. Developed economies like the US are 130 odd percent. Global average is closer to 75%. So even if you come to global average, you're looking at 18% of GDP going to 70 odd percent of GDP, of a GDP which itself is growing so rapidly. So then you do the math and say, there is just so much more headroom that is available. So the asset AUM numbers, some of us think these are remarkable numbers, but another way to look at it is that the journey has just started. So there's miles to go.
It's just the beginning of the journey. So when would you think that maybe our industry is possible to reach that? Is it going to be sooner than expected, given that how we are growing as a country as well, right?
So, we would certainly hope so. But I think it's also important to not get ahead of ourselves. And I think there are some good things that have happened which have led to this growth. First is investors' trust. This is a savings product. It is people's hard-earned money. And we have to be able to deliver to the promise. And therefore, how we communicate the promise, how do we deliver to the promise, and therefore, were people actually able to make the wealth that they were targeting? Were they able to meet their financial security needs, affluence needs, etc., through our product? I think that the broader answer would be yes over the last 2 decades, and we hope that that can continue over the next 2 decades as well. So that will, I think, precipitate that growth that we're looking for.
Vishal, what I also want to understand is that now, while we're talking so much about growth, the opportunity that is there, as an investor, if I'm investing in the mutual fund industry, what is the best way now to start right now and approach this strategy as a wealth creation opportunity for an investor, right? There must be a lot of new investors coming in as well. It's the beginning of this new financial year. So what is it that as a wealth creation journey that one should start with?
Right. So I would look at it as, let's say, 2 parts to what you would want to do. The first thing is that I'm a saver, and I'm used to a certain set of financial products, maybe at bank deposit, etc. Now, when you come into the world of mutual funds, there's a lot of new terminology, the way it works, NAVs and in fractional units, there's an account statement, there's no certificate, it's all online, there's a distributor. So there's a lot of terminology, the nuts and bolts of the product that takes some time sometimes to get used to. It's like, the first time you buy a share, you have to get used to a demat account and a custodian and this and that. So, you have to get used to that. I would say just put, even if it's 100 rupees, 200 rupees, whatever, get started, put it. And, it doesn't matter where you put it. It can be a fixed income fund for all that matters, right? Because you're just getting used to how the product works, in a sense, right? Then you look at, okay, I understand how the product works. Where should I invest? That's where you get into what we would advise is allocation. Now, those things come later on if you're just getting started. The safe and simple thing to be done is that if you can save X rupees, take a proportion of that, ideally a high proportion of that, and put it into an SIP. Now, which SIP? You can start with a moderate risk product like a hybrid product. If you're okay with some risk, you get into an equity product SIP. So there's a range that we offer.
A wide range. That is also overwhelming sometimes to see so many options now that are there.
That's right. Choose any one or two or three, and the average tends to be that people start with 2 or 3 SIPs, two or 3 different companies, so that your basket is a bit more diverse. These would still work very well. It used to work 20 years back. It still works very well. So why disturb a classic?
Absolutely. Right now, the current scenario, when anyone looks at it, right, last couple of months, or let's say the new year that we've seen in Jan to March right now, volatility has been something that is persistent in the market, right? As a new investor, what is it that you watch out for, right? You have seen so many cycles, and sometimes people start fearing. The recent AMFI data showed that the stoppage ratio, that's seen a sharp spike up as well, though overall the SIP number did remain around the 26,000 crore mark. But that worry comes in for a new investor that now what should I do? So how should a new investor look at all this, and what should their strategy be through such volatile periods as well in this industry?
Right. So firstly, I think we must all recognize that if we are investing, volatility is part and parcel of that investing game. Now, if it is one-sided, if it's a straight line, it's not an investment. So if you want growth,
we all cross our fingers for that one-sided move always.
Right, that's right. But that's not real. It's not going to happen. And if, as they say, if it's too good to be true, it's probably not true. It's going to come down, and therefore beware if it is a one-sided move, right? So volatility is natural, normal. It's almost a relief to have sanity come back to some extent in the market, saying, okay, this is not a one-sided market. There are buyers and sellers. There are differences of opinion, views, which is what causes some bit of this market to get discovered. So it's healthy to have volatility. It's nothing abnormal, right? Now, when you look at your own assets, your own wealth, and it's very natural to get worried that, I put in 1 lakh and only worth 90,000 rupees, I've lost 10,000 rupees. One, if you're anticipating it, I think start with how much risk can you absorb? And I see a lot of my distribution friends, partners tell people up front that, if you're putting 1 lakh, can you absorb 50% loss, 40% loss, 30% loss? What is your risk appetite? I think if the moment you know that I can risk up to so much rupees, as long as it is less than that, you're more comforted. Personally, what I follow is that don't look at your statement so often. Why do you need to look at it so often? Unless you need your money. Sometimes ignorance is bliss. And in investing, I would certainly say that, if you put your money away, the market is doing well. You can look at it periodically to say, is it largely in the right place or not? But looking at it every day is just going to help your doctor, not your portfolio.
That's true. It would surely help your doctor looking at that stress that you have suddenly that your portfolio is down. It's a lot of anxiety that creates. But, talking about the point in terms of a market that we're looking at, the uncertainty that is there, we are saying about a smaller end of the market, the broader end of the market, that has been more uncertain. And that's where sometimes the worry comes in. Are there any, checklist sort of a thing that a viewer can maybe ignore or avoid to avoid the big mistakes when they're entering right now in such a market? Or do you think that there is value across board, given that we're seeing some bit of a correction?
Right. So I think the first thing I would advise is that seek independent advice. If you try and do it on your own, you have to be in it 24 hours. It's a profession, right? So like with any other profession, how many of us try and do it ourselves? And, sometimes we want to save a few basis points of fees here or there, etc. And really in the long term, you have to ask yourself, is it worth it or was it worth it, right? Because the quality and ability for someone independently to look at your portfolio and give you unbiased advice can yield a significant difference over the long period of time, much more than what the fear of paying someone something is, if that is holding you back a bit, right? Second is that, diversification is one of those freebies that the industry offers you. It doesn't cost you anything, right? And, sometimes in a phase that we've seen over the last 3-4 years, we can almost ignore the reason for diversification and many of these concepts to be still around, because you think, no, I'm smarter than the market. And then a Jan Feb comes in and, knocks you on the head once again saying, hello, volatility is real. So please look at the downside risk that you have in your portfolio. Don't get carried away. Yeah. And maybe sometimes in a market that can happen, we get carried away, we get, we take more risk than our appetite. Some amount of correction actually gets us back to ground.
Absolutely. And, Vishal, there's a point that you highlighted also, asset allocation, right? What is the importance and in journey, how has that been for you as well overall? The key to go through maybe this industry is also diversifying your portfolio, but with that right asset allocation is also something that we should do. Help our viewers through this asset allocation journey.
Right. So firstly, when we look at selecting a product, often, and maybe all of us are guilty of that, we spend just an inordinate amount of time just looking at which product and which fund house and which scheme and which manager and fees and past returns, etc. And there have been scientific studies done 4 or 5 decades back, which are still true, which will tell you that actually all of that does not matter much to your eventual portfolio outcome. The single biggest factor that will determine the outcome of your portfolio, did you make wealth or not, more than 90% of the outcome is based on the simple allocation that you actually decided on. So everything around, did you get the timing right? Did you get the fund manager right? Did you get the pricing right? Did you get the, the sector or the strategy right? Doesn't matter, actually, in the long term. 90% plus of your portfolio depend on how much of what did you get. So as an example, I got a multi-bagger in my portfolio. I doubled my money in this stock, let's say as an example, right? But it's 1% of my portfolio. Yeah. Okay, so 1 became 2. The remaining 99 was still 99. So how much money did I make? Doesn't matter. It's just to illustrate that had you got this multi-bagger or this strategy right, with 60, 70, 80% of your portfolio, that's when you really get it right. So it's not really the stock or the strategy that you got right that mattered, it's the amount that you put in. So spend a lot of time thinking about the allocation, which is where a bit of risk balancing, a bit of, getting to see where growth is coming, what do you want to do about it, etc. comes in. All the other things are important, but not as important, and therefore, therefore your time spent can be in proportion, and get some professional help to help you do that, because there are good studies, models, etc. available which will tell you what happens when you combine different assets. The sum of the parts is actually smaller than the whole that you create because of the benefit of correlation you get between assets. So that's for a longer conversation.
Absolutely, a longer conversation that we'll have. But right now we're going to slip into a very short break, viewers. We'll be back with this discussion in a short minute from now.
Award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube. With me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
one is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think.
Welcome back to Mutual Fund Corner on CNBC-TV18. We still have with us Vishal Kapoor, CEO at Bandhan AMC, to discuss the mutual fund industry, the outlook going forward, what you all should be doing as well. Vishal, we were talking about asset allocation, right? And the importance of someone looking at asset allocation, how you highlighted certain points. What, according to you, is the best proportion, right, between, in the current scenario, equity, debt, or fixed income, other fixed income opportunities, commodities? What is the best allocation strategy that one could have right now?
So this is almost like a nutrition plan. So what's the best nutrition plan?
You're the best doctor, no? So I have to ask you for the best nutrition plan then.
No, that will really depend on the individual. And I think, generalization over there can be, a bit tricky. But by and large, I think if you were to use certain rules of thumbs, which are used, now it's a rule of thumb, therefore it's not going to be accurate. It's generally believed that when you're younger, you should take a bit more risk, provided your income is reasonably stable, and therefore the riskier assets or growth assets, which are things which are overweight equity, can be a larger proportion. So a lot of people will advise that when you're younger, you may have 70–80% of your assets in equity-oriented products. The remaining is the shock absorber, the buffer you have in fixed income and cash. But as you get older and your earning years become lesser, you will need to depend a lot more on the savings and the wealth pool that you've created. You keep reducing your equity proportion and bring it maybe closer to a bit more balance in accordance with your age and risk appetite. So by and large, that is what will happen. Now, we are talking about a retirement corpus, by and large, which is the most popular, the largest part of your savings. However, if there are, smaller needs, you want to buy an asset 5 years down the line, then, it'll have to be a very different journey. Using the same rule of thumb that you can afford more growth with volatility when you're far away from that target, and as you get closer, you reduce your volatility by going into fixed income and more stable assets as you get closer.
Absolutely. Thank you so much for that update coming in over there in terms of just a basic rule that one follows, not any specific percentage. Everyone has to go according to their financial goals as well, I believe, and how much time they want to achieve such things. But, Vishal, let's talk about the options that we have, right? Lump sum, SIP as well.
Right.
What sort of a market is better for a lump sum one? If you have enough investments, is it always better the money is there, then is it always better to go for lump sum than an SIP?
Right. Interesting one. And I think, as in to me, if you find real good value in the market and you're convinced that this is going to be, it's very cheap, it's going to go unidirectionally up from here. Then I would say, why spread out through an SIP? Because if your expectation is the market is going to keep going higher and higher, then you're averaging up through an SIP, in which case a lump sum makes sense. But of course, it has to be dependent on whether you have the money. And therefore, the first question has to be, what's your cash flow situation? So if you're sitting on cash and the market is really cheap and your expectation is that it'll go unidirectionally up, this is the bottom I'm trying to catch, etc., then lump sum may make a lot of sense because you're trying to catch the bottom. Keep in mind, very difficult to do, almost impossible to do consistently. But if that's the call you're taking and that's the risk you want to take, then that still works. For most of us, we are not able to predict the market. We are not able to see, how volatile it will be, whether it's going up or down or sideways. We really don't know. And that's where the beauty of something called rupee cost averaging, which is a mathematical concept, comes in, which is that when things are expensive, you buy less of it. When things are cheaper, you buy more of it. And that works beautifully for an SIP or an STP for that matter. And that therefore works most for people who are unsure, which is the majority of us. It also, I think, ties in very beautifully with people who have a monthly income. So if you're going to save monthly, why don't you keep investing it monthly as well? Don't let that money lie idle, and benefit from rupee cost average as well as the sort of process alpha you get through an SIP as well.
Vishal, what's the best way to go forward in FY26 now in this industry? What should the investor be looking at? What are there are so many options right now. We have the 250 rupees SIP option that comes in. There are so many NFOs that come in. Yeah. What is the best way, right? When you have so much, how do you pick the right option?
Yeah. So first thing I would say is, look, don't panic with volatility. Accept it as very, very natural. It's like seasons. This will come and go. So this is something you just have to accept. If you're not panicking in your investment journey, I think the first battle is already won, right? Second is, if you're not panicking, you're not going to make any knee-jerk reactions to your portfolio, buy something just because it looks very attractive. Maybe it's very well marketed. Or buy or sell something because suddenly the mood has changed against it. Don't do that, right? Which is where I think if you have each of your savings goals or set up properly, it just helps anchor your thought of why am I doing what I'm proposing to do now, right? So I would say, therefore, if you have a goal for different objectives that you have, it just helps you anchor, gets your thinking become much clearer. Talk to your advisor, talk to whoever you think can act like a sounding board for you, right? And definitely don't disrupt your SIPs, STPs just because the market is going here and what is the world telling you about what is going to happen, etc., etc. Because those are times when the best opportunities also emerge. Just a few weeks back, everyone was thinking and talking about apocalypse. This has already come down so much, it's going nowhere, etc. Look what the market has done much. So it's just a reminder that, look, please don't try and predict every day, every month movements. If you're investing for a long-term goal, and that is still very, very visible, then why make any sudden changes? Your cash flows, your earnings have to be matched in proportion to that goal. You just need to do a bit of refinement once in a while, maybe 6 months, maybe every 12 months or so, but that's about it.
6 months or 12 months, one should at least review their portfolio, right, and go through it. Do not panic. Please do not panic and get out of your investment strategy. That is important as well to continue to maintain it. Vishal, the trend that we saw in the last year or so was thematic funds, sector funds. We had so much that was happening because our market was also at such a phase where you used to see these specific sectors, specific themes doing well. As a strategy option for an investor, maybe who's starting out, how should they be looking at thematic options, and how do you see thematic funds, sector-specific funds go from here on in 2026, 2025, 2026?
It's a great question because I think, clearly thematic funds are not meant for new investors, right? So if you're a new investor, I think sticking to the more well-discovered ideas, the broad-based funds, the hybrid funds, etc., is a better starting point, right? Thematic funds are, I think, meant for more evolved investors who are looking for sharper growth, sort of opportunities, right? So you've got your the vanilla strawberry options there. It doesn't mean that the sprinkles are not good or the other combinations are not good. They're good, but that's not your mainstay. And they will mean, in the case of investing, that you are taking more risk because you're pursuing a higher growth strategy with an idea or one construct or one strategy, etc. There is no free lunch. So if you are looking for more growth, it will be more volatile. It may be more cyclical. It may be structurally something that you are not so sure of, etc. Now, because our industry now has a fairly sizable, seasoned investor base, I think for them the question had become that what next, what more? I want to take more risk. In which case, of course, the industry will innovate and try and look at themes that may be more sharper to serve your needs. By and large, these are seen as what are called satellite products, satellite to the core. The core still has to be a mainstay, product which is more diversified, more stable, and therefore adding a bit of growth spurt, adding a bit of masala, the spices on top, is what the thematics should be around.
Absolutely. That's a great one there, Vishal. Thank you so much for joining in with us on the show. It's a pleasure having you, understanding the journey for an investor in terms of what they should be doing. So thank you so much for that. And thank you so much, viewers, for tuning in to CNBC TV 18. With that, we'll wind down this edition of Mutual Fund Corner.
Both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the U.S. or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news.
Go beyond market headlines to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
Look at the Taiwan index, that's down 1.3%. Hang Seng is down almost 2/10 to 0.3%.
And frankly, friend has been oftentimes much worse than foe.
President Trump announces a 25% tariff on all cars which are not made in the US.
If the Nifty needs to fight back today, I think the Nifty Bank needs to play a role.
He's inclined to be more lenient than reciprocal.
23,435 first rate, 23,400. About a third of a percent down.
I think to make a short answer to the question, I think the worst is over.
There will be sort of room for negotiation, and it won't be sort of implemented immediately in India's case.
We have been making about 2 to 3 million British pounds of losses every month.
It's the mid-cap index in the green, small-cap index in the green. The advanced decline ratio is positive.
Cabinet note has been prepared. It will be put forth. It will be sent up to the cabinet for consideration and for subsequent approval.
Markets have found a little bit of steam, especially in the last half hour of the session.
Well, that is the day so far, and yes, I mean, the recovery came through initially. I mean, very, very quickly the recovery came in, and we've been trading with a 100-point gain, triple-digit gain for a while now. This is Closing Bell. We're coming to you from the CNBC-TV18 News Online studios. I'm Prashant. With me, not very well, Reema Tendulkar. Reema, hi.
Hi. But, March series, we're counting down to the March series, 1 hour to go. And it's been a series of repair, of recovery, and quite a rebound. So I was just calculating, the Nifty is up about 4.5%. The mid-cap index is up more than 5% so far in the March series.
Absolutely. And it's, the only question is just this hump, so as to speak, the 2nd of April hump, whether that is still even a factor. I think it is still a factor. We'll find out. But for now, I mean, I think the market is trading just fine. A 0.5% gain, 0.8 in the Nifty Bank. Mid-cap index is flat, almost nothing on it. Small caps are doing a little better. The Nifty Micro-Cap index is doing a little better. So, yeah, I mean, there is enough activity after a little bit of sort of, slow sideways down 2 days we had, which is, Tuesday and Wednesday. So this Thursday, it's looking much better overall. Nifty, the market breadth should come up on your screen as well, and that'll give you a sense of how we're looking. Lots of stories from Delhi, which we will sort of focus on in the next 60 minutes or so. So the government here in India, and actually not just the Indian government, but at least 3-4 other governments around the world are preemptively, talking about lowering tariffs on US goods ahead of the 2nd of April deadline. Our colleague Timsy has been reporting on what the plans here are, and we'll get her in just a bit to talk about it. So, I mean, I think, that is very much still front and center, whatever you say, in terms of what's going to happen when we come back next week after a long 3-day weekend. Reema.
Well, let's get to where the action is today. On the way down, it's autos and pharma. The Nifty Auto and Pharma Index is a cut of close to about 1%. Tata Motors is the top Nifty gainer, down more than 5%. Auto ancillaries are selling off. And then you've got names like Sun Pharma, HCL Tech, weak in trade. On the way up, banks are providing that support. So while the frontline indices are up nearly 0.5%, the Nifty Bank has a gain of about 3/4 of a percentage point. HDFC Bank has been a big mover on the way up. Bajaj Finserv, Bajaj Finance continuing to hit fresh 52-week highs, and Hero MotoCorp completely domestic facing, not getting impacted by any potential tariffs. That's actually the top Nifty gainer today, up close to about 3%. And then you've got the Nifty changes which come into effect from today, but the flows the impact of the flows will be seen today. Zomato, Jio Financial Services, remember, enter the Nifty, while BPCL and Britannia will make an exit. We'll talk more about stocks, but let's find out how you should position yourself in the last hour of trade. Mitesh Thakkar is now with us with a few closing strategies. Mitesh.
So, good afternoon. One, I think both the indices have recovered nicely from the lower levels. So I think, the last couple of hours have been sideways for both the Nifty and the Bank Nifty. But my sense is that today's low could be an important marker as to, in case the Nifty chooses or the Bank Nifty chooses to consolidate, today's low will possibly form the lower end of the range, and on the upside, the highs which you made on Tuesday, I think that could be the upper end of the range. So overall positive bias on the index, but tactically, I think my sense is that we might take a breather over here, especially to absorb the rally which happened in the last 8-9 sessions before Tuesday. And therefore, I think it could be a consolidation. And idea should be, if you're playing the index and playing with the range, try to buy near the lower end of the range, which is the low today, and try to sell near the Tuesday's high. On the stock side, I have a buy on Coforge with a stop at 80.70. And here I would look for targets in excess of 82.40, 82.50 to begin with. Eventually, even I'm suspecting some more higher levels. And from the banking side, Federal Bank is on the buy side. Keep a stop below levels of 190, 1.5. Look for targets of 200.
Those are individual, sort of trading ideas coming through. Mitesh, just a few other names if you want to kind of weigh in. BEML is a name we've not discussed in a while, about 6.5% higher. Almost back to the high that we saw on Tuesday. Almost retraced the last 2 days worth of correction. There's a sharp spike, and I think most of it has come in the last 30-40 minutes of trade. Any thoughts here?
So BEML, in fact, it was one of the stocks which was slightly late to the rally, but today I think the candlestick pattern and the indicator setup suggests that the move has actually started today or gained momentum today. The traction has come in today, and they should see good follow through. One, I think if somebody wants to trade with a very tight stop, 28.85 is what I recommend. A deeper stop is around 2800, but 28.85 should suffice. And I think this stock, now that it's giving some kind of a reversal sign, the first near-term target is around 3100, and in a good case scenario, even 3200 can be tested.
Got that. Adani Group stocks are actually having a pretty good day. So Adani Energy is now moved to the day's high. Adani Green has a gain of nearly about 4%. Adani Energy, as I said, up nearly 6.5%. Power is up close to about 2%. So it's been a good day for these Adani Group stocks. But let's talk about the other story that we've learned from Delhi. Sources say IT Ministry has prepared a cabinet note on electronic components PLI, which is likely to be sent to the cabinet for approval this week. Ashwin joins us on the phone line with what he's learned.
Well, it's been a long time coming as far as this PLI is concerned, the electronics components PLI. The latest that we're picking up from sources within the government is that the cabinet note has been prepared and that it will be put forth before the cabinet. It will be sent up to the cabinet for approval. Now, this has been a long time coming. There's been a lot of speculation. There's been a lot of conversations over the last 3 to 4 months over the nature, shape and form of this PLI scheme. Let's break down the details. Now, as far as the details are concerned, the PLI, as the name suggests, is aimed at electronics components like batteries, displays, PCBs. That's the main thrust of this electronics PLI. In terms of what the outlay looks like, what we're given to understand that the figure in mind that the government has put forth is 25,000 crore rupees. That's a large figure, but not as large as what the industry had sought. The industry had made a pitch for 40,000 crore rupees. The concern, however, is that the government is now saying that they're okay with 25,000 crores for now, and they're open to some amount of flexibility to increase the outlay at a later date should there be an overwhelming response from the industry. So 25,000 for now can go up even further. As far as what the likely investments are, well, the government is estimating that this PLI could attract investments worth over 40 to 45,000 crore rupees. So that's the kind of figure that the government is working with. The government is quite clear. It's excited. It's keen on the mobile PLI that has performed well. Now it is hoping that this PLI will bring in the ecosystem here, the components ecosystem, and thereby adding for more localization and value addition here in India.
Thank you, Ashmit, for those details. Deven Choksi, Managing Director at DR Choksi FinServ, is now with us on the show. Deven, Dixon, Amber, Sirma, any of these, Sirma SGS, any of these EMS companies which look attractive to you?
Yeah, good afternoon, Rima. Well, I think those companies are doing fantastically good job as far as I think the business and the model is concerned. And they continue to grow well. I think that is a good part. However, I think all of them, though the price correction has taken place in most of them in the last 2 months or so, I still believe that I think they are adequately priced or fairly priced given the prospects that they are assuming. Even if one has to assume that the PLI scheme benefit has to go to them, probably I think they are fully priced in at this point of time, I think, on the possibilities. So wouldn't be in a hurry to buy any of them. Maybe I think the market always gives an opportunity, I think, when the price correction takes place. And if not price correction is enough, I think that probably the time correction in which I think these counters can be bought, but not immediately, as in my viewpoint.
No, absolutely. And that's an important point. Just a quick word on just one name, Capri Global will come up on your screen. It's, I think it should come up, it's down 15% actually right now. It's the number one volume-led gainer, loser, beg your pardon. Number one, humongous volumes right now. And the day high today was made at about 1240 or so. The high was about 230. From 230, the stock's now at about 166. I'm not sure if there is any news flow that I missed, but that's a big casualty which is coming through right in the top of the sort of losers kind of list coming through. Have you ever looked at this one, Deven? Any thoughts?
Not really, Prashant. I haven't seen this company.
Okay, from the day's high, it's down 28%. Oh boy. The entire auto space, Deven, any thoughts? Sonacom is down some 7% as we speak. I mean, we've been talking about the others, Samvardhana, Motherson, Tata Motors, etc. But any thoughts?
So Tata Motors, I think, may be slightly a concern, largely because of the JLR portfolio, but not the domestic portfolio of passenger vehicle and commercial vehicle, where this kind of tariff impact, I think, directly affecting them. In fact, I think I would remain relatively more optimistic on the possibility of Tata Motors probably getting the advantage of some global manufacturers shifting their base into India, and I think this company aligning with them. That is a good possibility on which I will remain a little bit more optimistic on that particular possibility. But the auto ancillaries in particular, I think they may probably see some kind of adversities in at least near future, if not for full, because I think their exports to the European Union, and I think that may come into trouble if the European Union finds themselves in a tough spot because of the hike in the tariff on their vehicles. So that is where probably I think your exports might come under some kind of a threat. Not completely sure. This is only a guesswork at this point of time because none of the companies are ready to even speak on this particular subject. But I would think that domestic market story is not changing any which way. It is basically, I think, going to remain firm as I see it. One will have to be a little bit more careful and selective because the market momentum can swing the price in which way. So I would like to wait for a little more time to buy into some of the quality names like Tata Motors and companies like Bajaj Auto.
You should also keep your eye out on the auto ER&D companies, the tech companies which service many of the global auto OEMs, because if there is pressure on account of tariffs, will tech spends get impacted? So names like Tata Tech, Tata LXC, KPIT Tech. So for Tata Tech, for instance, Tata Motors and JLR are the anchor clients. So you should watch for even these particular auto-related IT ER&D companies for any sort of an impact. Today the big mover is actually Wipro, and they won a large deal, £500 million. And they won it from a company which has traditionally given or is doing a lot of work with TCS. It's a big deal, and it's the second big deal under the new management. It's had a few false starts. A couple of times it showed a lot of promise, but then after 2 good quarters, the third quarter disappointed in terms of numbers. Where would you stand on Wipro and the turnaround that it's undertaking?
Well, yes, a distinctly good possibility for turnaround. I think they are right on course as I see it. However, whether it is all translating into higher amount of numbers immediately, my guesswork or my answer is probably no, because I think that part, I believe that I think is going to take some time. Good part is that I think some of the large contracts are already coming in, and that is, I think, a very good point to observe here. Maybe I think if this particular situation accelerates further, and I think many of the IT companies also starts receiving the larger orders, then probably I think you're likely to see surprise in some of the IT companies' stock prices going forward in financial year 25-26. So keep an eye on that possibility. As I see it, I think it's a distinctly good possibility going forward.
Rima, the other autos are down, and sorry, just going back to the other one. But the sector-specific tariffs, right? The other one is pharma. And the index is down about 1% or so. And he's, Trump has said many times that tariffs, pharma is also in his sort of crosshair in that sense. So who knows? Shireen asked Eli Lilly's CEO yesterday on tariffs. He said, well, for their business, because they're an innovator company, it doesn't matter. But for generic companies, if the tariff is imposed, which is what most of Indian companies do, it is going to push up the cost for US consumers in that sense. But I think it's again brought the spotlight very much on sectoral tariffs. There is overall tariffs and then there are sectoral tariffs as well. Are there been any thoughts on the pharma space?
So, Prashant, I think I probably would like to believe that most of the Indian pharma companies are very well positioned into the US market per se. Even if one is to assume that I think a fourth of the total business goes to US market in form of exports in general. I believe that I think they are likely to remain firm on that path because it's an essential product, definitely going into the market where it is a requirement. And I don't think that I think any kind of a tariff mechanism, any country would ever disturb them. So from that perspective, I remain relatively more confident about the prospects going forward. Maybe I think we'll have more clarity coming up as we travel 2nd April and thereafter, in which I think we'll come to know about how exactly the tariffs are going to be implemented. But we remain relatively more confident about pharma as a whole because of, I think, whatever the market sentiment is. But I think we remain fundamentally comfortable with most of the companies.
You remember the conversation with Lupin also? They had spoken about how, manufacturing in America is almost 8 times as much as, manufacturing in India. So if there are tariffs, they perhaps will just have to pass it on because it makes no business case to manufacture in America.
No, that's a strange thing. You can very well make a case that, well, this doesn't just make any sense. Why would they do it? But then you also go back and read those comments about, in the State of the Union address, Trump said, well, we should be ready for some short-term pain. So is this a short-term pain? Who knows? So uncertainty at this point.
Uncertainty. All right, let's get to the other related story. Sources tell CNBC-TV18 that the Prime Minister's office, the Commerce Ministry and the MEA officials are in active discussions to consider tariff cuts for the US. Tim C is here with the details. Tim C.
Well, yes, as you rightly said, sources have told CNBC-TV18 that the top officials from the Prime Minister's office, Commerce Ministry and Ministry of External Affairs are in active discussions to consider tariff cuts for the US. The government is undertaking a comprehensive review of the current import categories, and sources, however, told us that there is no final decision that has been taken so far, but the government is looking at a host of categories where this review will actually help them finalize as to what could be the tariff cuts that can be offered to the US. Now, according to sources, some of these categories could include medical and scientific instruments, cruise ship, aircraft, spacecraft, cars, turbojet and propellers, high-end jewelry, gems and jewelry, footwear, plastic polymers, organic chemicals. And just to remind our viewers, the basic custom duty, say, for example, on cars is 100%, which is levied on cars priced at above $40,000, and those below $40,000 see a levy of 70% currently. So these are the basic custom duties on whole host of these categories which are under review. And also, to adding a perspective here, the total goods imported by India from US in the calendar year 2024 stood at $35 billion, which is 6.7% higher than the imports in 2023 calendar year. Now we'll have to wait and watch for more developments on this front, especially as to what is it that India offers and how soon, and in return, what it gets from the US.
Absolutely, and many of these sectors will be, I think, closely watched. In terms of actual listed companies in each of these spaces, I'm not sure how much is there. There are a few companies everywhere, but medical instruments, aircraft, but again, will this make that much of a difference? Is the question that one needs to ask. The sensitive subject is, of course, agriculture, where tariff differential are some of the highest there, but then that gets into a different realm altogether. But these are some of the sectors, as Timsy pointed out. Devin, what do you make of it, the story, and anything comes to your mind in terms of implications?
Not really, Prashant. We've been trying to put across our thoughts in different companies and have been trying to even understand from many companies. But I believe that I think not everybody is clear about it, and they are right. So because I think they are not yet clear in coming out with how they're going to implement the tariffs. So I would rather like to wait and see how exactly things pan out. But I don't see immediate threat of the direct impact on many of the companies at this point of time. Maybe some of the indirect impact, I think, which might come on some companies which we have not been able to figure out. I think that could be the area where one would give a little bit more concern about. We'll evaluate it, I believe. I think we don't have immediate answer to it, but we are evaluating as a team right now.
Naveen, thank you very much for joining us this afternoon. We will slip into a break on that note. We'll come back and get chatting with Pramod Gubbi, co-founder of Marcellus Investment Managers, on the other side.
Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes.
Okay, welcome back. You with us here in closing bell. 120 higher on the Nifty, 23,600 plus is where we're at. We have Pramod Gobi now joining us, co-founder of Marcellus Investment Managers. Pramod, speaking to you after a while. Thank you for your time. Prashant here. I was reading some of your views. Private financials is where you find a lot of comfort. I think that view in a way kind of sort of remains unchanged. What else? I mean, let's just start with actually private financials and what's the view? Because you are going to, on the 9th of April, perhaps we're going to start the first of maybe a few rate cuts from the RBI. Commentary from corporates, etc., that we speak to regularly for Jan to March has not been all that great. It's going to be another slow quarter. A rate cut hits margins. At the margin, what's the push factor here of private financials?
We've been recommending private financials for a while now, and a large part of the reason was the more reasonable valuations that they were trading at rather than superior growth prospects. In fact, there are pockets in the market which have equally good or better growth prospects, but most of that was priced in. To that extent, preferred private sector financials, and it's done well, really. It's no longer that attractive, but I reckon it's still one of the few pockets which is trading at reasonable valuations, and that remains the primary reason, particularly in a market environment like this where there is immense amount of uncertainty, both in terms of domestic macro as well as global macro. You would need that extra buffer of margin of safety from a valuation perspective. And I would think even after this outperformance, private sector financials still remain one of the few pockets with reasonable valuations.
There have been, banks, right? Large banks. Because if you go down the curve, there have been lots of accidents as well. So it's a tricky zone. It's not all clear.
No, absolutely. Quality is imperative. For us as a house which focuses on quality, that's on a cross-cycle basis, but I think market as a whole is already looking at quality, particularly in a market situation like this. This is nothing new. It always happens. When there is fear, people migrate to quality, and quality is clearly delivered not just in private sector financials, but across the board, but more so in private sector financials, because totally by your point that not everything needs to be painted with the same brush. Banks which have delivered consistent growth, consistent asset quality, particularly over long periods of time, will be sought after, and that's what the market is showing.
Pramod, hi. Afternoon, Rima here. Have you all done any analysis of Trump's 25% auto tariff? What's the advice if someone holds Tata Motors or any of the auto ancillary stocks in their portfolio?
I think there's very little exposure amongst the OEMs other than Tata Motors, and that too through JLR. To that extent, yes, I think the market is clearly reacting to that effect. Outside of that, I think OEM exposures have been fairly minimal. On the component side, I think there have been a couple of names which are disproportionately exposed to the US. But I think even we are waiting for the fine print to understand how exactly the component makers are exposed as opposed to the OEMs. But clearly, like I said earlier, this is going to be weighing on the market. Today it's auto, tomorrow it could be something else. But that means that uncertainty is the order of the day, which also means you need to have that extra comfort in terms of valuations through a margin of safety across the board, not just with autos.
No, got that. Well, I think you like commodities as well, Pramod?
No, I mean, we don't generally look at commodities.
Yeah, that's what I was thought. I thought because you've largely been in things, not in commodities in that sense. What else? Specialty chemicals is another area which has come up in conversations now and then with people here. Maybe a sector which has been down in the dumps, maybe turning at the margin. Or anything else top of mind really for you, Pramod?
Yeah, I mean, specialty chemicals is clearly, had a tough last couple of years just when the market was doing really well. It is making a comeback, but I would recommend caution here because unlike the 2018 to 22 rally, which we saw in specialty chemicals, both in terms of earnings growth as well as stock prices, this time around, it will be a little more discerning because you don't have China fiddling with its, supply chain because of environmental reasons. In fact, you might have excess capacity coming from China should there be any tariff measures coming from the US on Chinese chemical makers, which could mean for Indian specialty chemical makers who are going head-to-head with China, it may not be a great time. So you need to be careful about that. But there are Indian specialty chemical makers who perhaps will benefit from this regime, where the US might see an alternative sourcing country where the Indian chemical makers could benefit from it. So it's going to be a little more discerning call rather than a broad-based, which is the case with the market as a whole. I think finally we're getting a market where it is a stock pickers market. You'll have to take a more bottom-up approach. There are no obvious themes. There are no obvious places where across the board valuations are attractive. Like you rightly brought up the point, even within private sector financials, there's a clear spectrum in terms of quality, despite the valuation comfort.
Where do you stand on pharma? Last year, the Nifty Pharma Index was the best performing sectoral index. It went up close to about 35–40%. Now, this year, it's facing the heat of potential, tariffs and the threat coming from tariffs. What's the call that you're taking on pharma on the whole? And then if you have any preference in the subsegments?
I think healthcare on a whole, we are still constructive, particularly hospitals and diagnostics. Again, pharma, you can throw in that bucket. Healthcare more from the defensive standpoint, given everything that we've discussed so far. It is an uncertain economic environment, both globally as well as domestically. So you would want some defensibility in terms of revenues and earnings in your portfolio. And healthcare generally provides that. It's not too cyclical. Having said that, I think the pharma sector also benefited from a lot of recovery last year. I don't think anybody should expect similar sort of returns. So more from a defensive perspective, healthcare as a whole finds its way into our portfolios. Within that, we prefer hospitals and diagnostic providers. as opposed to, I mean, we do have pharma and API companies, but predominantly in hospitals and diagnostics.
No, absolutely. By the way, from your published portfolio, would you want to give us a sense of what the portfolio looks like right now?
So, like I said, we are, as it is, bottom up. We don't have any predominant themes here. The way we are constructing the portfolio is trying to look for either earnings visibility or valuation comfort, ideally both, but in a market like this, it's not easy to find both. And to that extent, we've built enough defense and safety in the portfolio. In mid caps and small cap portfolios, we've actually increased cash allocation. That's where we're a little more circumspect, given despite the correction, we don't see valuation comfort in small and mid caps.
No, I mean, is it largely consumer heavy? Is it, where is the, what's this, just a quick sense?
No, like I said, this is a market where there's no obvious theme. So we're constructing the portfolio.
So the top 5 holdings, Pramod?
Financials, we do have big exposure. We've talked about it. We do have a couple of healthcare names. And yeah, I mean, that will make up. Of course, consumer has always been part of our portfolio. It still remains so.
Okay, we'll leave it there. Thank you very much for joining us, and good luck. Appreciate your time here on CNBC-TV18. We'll just quickly look at the market, which is starting to come off a little bit as we get into the last 30 minutes of trade. So from being up 120 odd points, we are now about 40 points off that level on the Nifty. So not a slight come off, nothing dramatic. At this point. Well, we'll take a break. Discover the power of Young Bharat Rising India Bharat Summit 2025, where innovation, ambition and vision converge. This is your exclusive chance to gain insights from global visionaries. Jeffrey D. Sachs, one of the world's most respected economists. Borje Brende, President and CEO of the World Economic Forum, sharing their insights on India's role in a changing global order. This is at the Bharat Mandapam, New Delhi on April 8th and 9th. You can book your passes now.
$14, $15 years, we're about half of that, but we spend about the same as others. And that is a function of both, I think, 2 big trends. One is hard to change, which is that science builds on itself. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions
on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
30 minutes to go to wrap up today's trading session and the March series, which has seen the Nifty gain about 4.5% and the mid-caps gain more than about 5%. The Nifty is currently around the 23,600 mark, a gain of about 100 odd points, picked up a few points in the last few minutes. Mitesh Thakkar is now with us for a few BTST calls. Mitesh, your thoughts on where we could end this expiry and then your stock calls.
Difficult to guess the expiry level, it's always tricky, but on the stock side, Adani Ports is something, which I like. It's come near the day's high. BTST here with the stop at 1188. Look for a target of around 1215. And earlier we had Federal Bank, which did very well. Now I think it's DMart, which is moving towards the day's high. So DMart is a BTST with a stop at 4039 for targets of 4120.
Okay, thank you very much for that. Adani Enterprises, the other Adani Group stock, which is moving up 2.5% higher on Adani Enterprises. Big spike at 3 o'clock, starting 3 o'clock. But let's talk about Tata Motors and the auto component manufacturers like Samvardhan Motherson, both lower after the US has imposed a 25% tariff on imported autos. Sudarshan is here to tell us the impact.
So it's the one sector which is low in today's trade despite market moving higher, and the reason auto stocks are under pressure because of the announcement of tariffs that came from US President, who announced that there would be a tariff of 25% on all the cars which are not made in the US, and also as per reports there would be tariffs on auto parts as well, and these tariffs would be effective April 2. Now first starting with Tata Motors, why the stock will be impacted. First, JLR has US as one of the biggest markets, and it forms nearly 30% of its total volume. And also the important point is JLR does not have the production facility in the US. So all the cars that JLR sells in the US are imported from other countries. Talking about its impact on Tata Motors revenue, its impact can be of 70% on consolidated revenue, and due to tariffs, it puts risk on Tata Motors revenue of that is 20% plus. Now coming to Samvardhana Motherson. Samvardhana Motherson is not directly impacted, but it's indirectly impacted because it supplies parts to those automakers which exports cars to the US. And here impact is seen in the range of 6 to 7%. Now coming to Balkrishna Industries and Sona BLW, if US President decides to impose tariffs on auto parts. For Balkrishna Industries, 17% revenue comes from the US, and for Sona BLW, 43% revenue is contributed by the US. And last set is, if US government decides to impose tariffs on bikes and trucks, then impact will come on Eicher Motors because 2% of its Royal Enfield volumes come from the US. Second in that list is Bharat Forge, where North America forms nearly 40% of its standalone revenue, and for Ramkrishna Forgings, 26% revenue is contributed by North America. So these are some of the major stocks which might be impacted once the tariffs come in on April 2.
Absolutely. So thank you very much for that. Let's actually listen in to those comments from President Trump on auto tariffs.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We started off with a 2.5% base, which is what we were at, and we go to 25%.
Okay, that's the big story. But back to the markets then. Earlier today, we had a chat with CLSA's Lawrence Belanco, and he believes the worst is now over for the Indian markets. Listen in.
I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000 banks as a key sort of relative ratio. And, in the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks. But, just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen ICICI trade back to its all-time high. So, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance and other sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now. If you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window. We still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But, still having a long-term upside target of 37 to 42,000, I do think, India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Well, the mid-cap index is picking up. It was nearly flat about 30 minutes back, now up nearly 0.4%. Pull up these stocks. Bajaj Housing Finance, big spike, stock up nearly 9%, rising on good volumes. And now it's managed to erase its losses on a year-to-date basis. That's one. The second one is Firstsource, and that's up 10.5%. Again, it's highly indexed to the banking sector. It's an IT company indexed to the mortgage business in the US. So the street will watch for Fed rate cuts. Firstsource is moving up quite smartly. And then you've got some of these new age tech companies like Swiggy, Ola Electric, also rising very, very rapidly. Sagility too, another company, like a health tech BPO sort of a company catering to the US, that's up close to about 2.5%. NTPC Green Energy, 3.5% higher. Appears to be all the 3 p.m. expiry related up moves in individual mid-cap names. Anand Tandon is now joining us in the last leg of this show. Anand, thank you very much for joining in. What have you made of this recovery that we've seen in the last 7 days? Convinced? Have you been buying? If yes, what?
Well, the recovery has been quite strong, obviously. And, does that mean that you see valuations now quite good and therefore there is a growth prospect ahead? Not really. In fact, I'm beginning to get worried about India's growth prospect overall. I may be sounding like a complete bear at this stage. The reality is I don't think we are factoring in the effect that reduced IT hiring will have on the rest of the economy. So I'm actually looking for a downgrade in terms of the overall economic outlook itself, because, roughly for the consumption in India, 50% of that for most practical purposes comes from the people that are hired in IT. That means real estate, that means tourism, that means travel and all of that. And as I see it, that is now coming under severe stress because of the fact that AI will actually cut off the need for hiring a lot of people. Overall, therefore, I think, there is a question mark in terms of where we are going to supplant that growth from. And without that, I think the earnings numbers that you are projecting for the next year are again likely to be too bullish.
Where you are, Anand, GCCs are sprouting like mushrooms.
So let's look at the numbers a little longer term. In 2020, the total number of refresh hires in the industry was 3 lakhs. Out of that, GCCs were hardly 50-60,000. Today, the total number of hires for this year estimated is 1 lakh from GCCs. So yes, they are sprouting, but the overall industry hiring net is likely to be 1,20,000. So that's come down from 3 to 1.2. And my assumption is that going forward, because of AI, you will have more productivity per engineer. The need for fresh hiring will come down dramatically. Now, please understand, 50% of real estate office demand comes from IT, the incremental hire. So again, 2020 figures, 3 lakh people hired, which means 3 crore square feet of office space required. Total A-grade office space leased out and sold 5 lakh crores. If you're looking at what's happening in Hyderabad specifically, I can give you some data. Google has been given 250 acres of land by the government for setting up data centers. They have built 50, they are building another 50, and they have returned, or they are wanting to return 150 acres back. Same thing is happening with Microsoft. So, these numbers are something that we are choosing to ignore because of the overall flow of money out of the US. But the reality is that we are not in a good shape.
AI will do the job of engineers too. What will that mean for IT companies? If they need to hire less and the work is getting done, will that not mean better productivity, lower costs in general?
For the near term, yes. There is also a shortage of AI engineers. But like I said, the argument I'm making is not about the margins. The argument I'm making is that domestic consumption, which is largely fueled because of high-paying jobs coming out of the IT industry, is now under threat. And this is something that nobody is talking about for some strange reason, because like I said, it's 50. So today, already over the last 2 years, real estate demand, which was 60% coming from IT, has fallen to less than 25%. In cities like Bangalore, Hyderabad, Bombay, Pune, and Delhi, which I would call as IT centers, almost 40% of footfalls in malls comes from IT employees. So if you're not getting incremental people coming through, the question is not about margins. Like I said, yes, the margins may improve. You may actually have some people being hired who are being paid more than what they are being paid currently. But for every 2 jobs which are being paid more, there will be 8 which are missing.
No, absolutely. And, that IT money has been has I think, been the building blocks of, boom in so many sectors. Housing, of course, is one clear-cut area, as we've seen in Bangalore and some other cities as well. Anand, stay with us. We're going to slip into a quick commercial break here. Maybe, as Anand says, more discussion and reflection needed as this is sort of gathering pace with given developments in AI, etc. We'll get you some more opinion. This is about, of course, tariffs, which are upon us. Sunil Kaul, emerging market strategist at Goldman Sachs, with his thoughts.
I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates. Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. Agri has the largest sort of tariff differential if you do sort of US versus India. So that could be impacted. But we think, for example, like pharma could be an area that could be impacted as well. Autos. In addition to the reciprocal tariffs, we also think that overall in the tax measures, you could see a global sort of auto tariffs. You could see tariffs on critical imports. And when we think about critical imports, electronics and components is one of the things the Trump administration has talked about. Our general sense is that on the domestic side, your growth has kind of bottomed out, but it's still sort of going to be a gradual recovery in here. You still have policy, especially on the fiscal side, which is somewhat restrictive. We still have earnings cycle, which is still seeing more downgrades than upgrades. So we still think there is a couple of quarters of downgrades left. We still know that small and mid caps have much higher valuations, and the positioning there is still not cleaner, especially within the domestic funds, right? So there is still sort of more risks on the domestic side, even though I think the worst is behind us. And so because of all of this, we still think it may be a little bit too early to take broad-based exposure in the market. So we are somewhat sort of cautious in the near term. I think we are kind of much more sort of alpha focused, looking at companies and sectors where you got sort of higher earnings visibility, more stronger balance sheets, and sort of more quality bias. I think that's how we're kind of leaning within our sector allocations, within our stock ideas.
Or does it feel like, where did the last 10 years go?
When you're on a treadmill, you're running so fast, you forget how long has it been. So it's been that kind of a journey.
Between then and now, of course, 24 to 34, suits, I can see both of you are dressed in suits now.
When we started, we used to wear t-shirts and used to go to bank branches and ask for payment gateway. At some point, we started keeping beards as well, right?
We used to stay together till at least 3 years back. 2 years back? 2 years.
2 years back.
And then what? You decided some separation
We
is
got married. So I still spend a lot more time with Shashank outside work than I spend inside work.
He's responsible for all things tech, you're responsible for all things business. So that's how the separation has worked.
That's the broad boundaries. And we have a principle internally in the company called disagree and commit. That once you have decided and you fought, you have put your best effort, and we decided this is the call that we are going with, then you disagree and commit to it.
Who's the more aggressive of the two of you?
We have a joke in the business team that if you come to Shashank and say, hey, we have done this, he says, congrats, how do we do 2x next time?
Build India's largest startup platform. It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Okay, welcome back. We've been in conversation with Anand Tandon. 100 points higher, by the way. 23,588 is where we're at. Anand, two names, Bajaj Housing Finance seeing a big move. Aadhar Housing, I saw a note from DAM Capital, 5.5% move. Any thoughts here?
That's one of the most stable spaces, obviously. And given the fact that, supposedly the affordability is actually better now than it was 5 years ago, that's an area that will continue to grow. Obviously, housing finance is also the lowest margin. So if you are looking for companies that you want to buy, you should be looking for those which will have the lowest cost of borrowing. And I would imagine that, besides the bank, something like Bajaj would probably be the better bet.
Some of the PSU banks are moving up. Bank of Baroda, PNB, Union Bank, all these spiking up as we speak. So, Anand, what would you recommend buying, at this juncture, given your view on the economy, the slowing economy, and how, job losses are going to hurt now?
So right now, purely from a financial point of view, obviously the only sector which looks somewhat relatively cheap is the banking sector. And there again, I would favor some of the private sector banks more because their liability side are usually better done, though some of the public sector banks, especially those like SBI, etc., have now started doing quite well in terms of the technology. For the rest of it, I'm not sure that there is much of a case to be made, especially on the valuations. If you're looking at pure order book, yes, CapEx will do well for the next few months. So will defense. Now that HAL has started getting engines, they can actually start putting out some planes. But other than that, I don't see a compelling reason to be rushing in to buy in almost any of the sectors.
Any thoughts on BEML? 15% surge today. So low was about 2350 actually was the low on the 3rd of March when the market also made a low. 3100 today.
I don't, I think you should ignore many of the market moves because there is a bit of FOMO that is happening. And again, the question is, many of these companies are not necessarily ones that will benefit from anything specifically other than the fact that, there is a general move back towards small and mid cap. That's a sector which I continue to remain somewhat skeptical about. But, I don't have a specific comment on BEML. I'm just saying, hold your horses. There is no need to rush in and use up all your cash.
By the way, Bajaj Housing, Hormus tells us, is a Nifty Next 50 inclusion. So according to Nuvama, it could see inflows of $17 million.
Some chasing happening there maybe. The other one is AG's Logistics. As a business, you have a view there. Again, big move. Low was $600. Stocks at 900 plus now. It's got the same view as BEML or anything, a business view? Anand?
No, I don't actually.
You don't? Okay, all right. Fair enough. We'll leave it there for now, Anand, but stay with us because we'll talk more in markets forward. Just wrapping up things in terms of where we are. 120 points higher is what the Nifty is looking like, 23,600. And the sectoral lay of the land is up on your screen. PSU banks are up 2.6, real estate 1.7, oil and gas is up 1.6, metals 3/4. Actually, across the board, there are gains upwards of 0.75% at least. Private bank index actually, if anything, is up only about 1/3% or so at this stage. I don't think we've really brought up what's happening in the PSU bank space at all. So maybe I can just quickly look at what really moved here.
Big moves. Bank of Baroda,
yeah, 5%. PNB is up 4%. Union is up 3.5%. Canada Bank is up 2.5%. And Bank of India up about 2.5% as well. So, yeah.
Well, that's what was up. What was down were the auto and pharmaceutical names. So Tata Motors, top loser, 5.5% down on Tata Motors, 670 in terms of a closing level. Eicher Motors exports a very small percentage, but that got impacted today. M&M too, weak in trade, ending in the red. Pharma names like Sun Pharma, Apollo Hospitals, Dr. Reddy took it on the chin, and Bharti Airtel was another drag. The mid-cap index ended with a gain of nearly 0.5%. The advanced decline ratio split evenly down, right down the middle. Gainers include a Bajaj Housing Finance. You had an Ola Electric. We had GAIL, which also, saw pretty good volumes. Then PSU banks that we spoke about. RHSI, Magnesita up and about. On the way down, Jayaprakash, it's a 3 rupee stock now. IRFC, Ashok Leyland, Indian Hotels, many of the auto ancillaries like Samvardhan, Madison ending with a cut of about 2.5%. IREDA2 ending down about 0.5%. The closing bang at the 23,600 mark on the Nifty.
Absolutely. And we come back tomorrow on Friday, last day before a 3-day long weekend. So not a bad way at all. Actually, a pretty healthy screen all told, with broader markets really providing all the activity and fireworks. It's a wrap on this edition of Closing Bell from all of us here. Goodbye, but stay with us. Markets forward. We'll pick up on all the action in just a bit. Winnie and Surabhi will take you through that. Stay tuned.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere, so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18.
Nifty and Sensex end the March series on a healthy note. The Nifty reclaims 23,500. The market snaps a 5-series losing streak to record its biggest gain in a series since September last year.
Donald Trump announces 25% tariff on all cars shipped to the United States with effect from 2nd April. Reports suggest that the levy will be imposed on car parts as well. Tata Motors is a key loser on fears of tariffs denting JLR sales. Other auto stocks also fall.
Wipro clocks gains of over 1% and is the top Nifty winner. This after it bags a hefty $650 million 10-year digital transformation deal from Phoenix Group in the UK. Hello and welcome to a brand new edition of Markets Forward, your go-to show where we get you all the key data points from the day gone by, and of course then we gear you up for next day's trade as well. I'm Surabhi Upadhyay. With me is Vinny Motiwala. And Vinny, what a good show, a good feeling, right? As we read out the headlines after many months, it's been a good series in March. We had yesterday, of course, there was a wobble, but again today we had green on the screen and India outperforming a lot of the markets around the world.
Absolutely, Surabhi. You know, when you started the day, you saw that red in the Asian markets as well, US markets. So you were a bit worried, is what I thought at least, that maybe would we be in the red again. But an interesting day coming in for the Nifty 50 as well. Only sector that didn't do well today, a couple of names. One is auto, obviously, because of the tariff announcement that came in from Donald Trump. And other than that, pharma. You know, the worry comes in that, you know, will we see some tariffs coming in on these pharma names also is something that is a bit of a fear. But PSU banks, they did quite well in trade. So look at a Bank of Baroda, Canara Bank, all of them managing to hold on to very strong gains. And so that outperformance came in from the broader end of the market. That Nifty small cap side did quite well. A lot of names on the small cap front, Aegis Logistics, we had Credit Access, Action Construction, Aadhar Housing Finance. There was a brokerage note that came in on this front as well from DAM Capital initiating coverage. So that is also keeping the stock a buzz, and all of them are seeing strong gains, closing with gains of more than 5% as well.
No, absolutely. And the mid-cap index, there was this last little bit of adjustment in, you know, volatility right towards the end, but for what it's worth, the mid-cap index also did really well. Managed to close very firmly in positive territory there. That's what I'm talking about. Just last sort of, few seconds of selling coming through. Otherwise, we were practically at the highest point of the day. And the advance decline ratio was fairly even, Steven, steady. One stock advancing, one declining. And you'll take that with both hands on a day like today when the tariff news from the US was so negative. So let's tell you what we've lined up for you over the next 20-odd minutes or so. We'll, of course, dive a little deeper into today's market action, all the movers and shakers of the day, coming up with Vivek in just a bit. Now, auto stocks, including, of course, Tata Motors as well as Samvardhana, Motherson, they were in sharp focus, and many of these companies face a potential business setback following that 25% tariff order on auto imports into the US. That's in focus. Wipro, as we told you in the headline, good news coming in. They have won a significant order from the UK, so we'll tell you more about it as we go forward. But of course, we wind it down then with some of the key market events to watch out in tomorrow's trading sessions as well. So it's a packed 20 minutes. Let's get started. Over to Vivek with the stock-by-stock account.
Well, good afternoon. You know, absolutely right. You know, first thing that you need to keep an eye out for, and you need to remember that in today's trading session, quite a lot of passive ETF flows too came in this on the account of the fact that you actually saw, the NSE index rejig taking place in the session, especially in the last hour. You saw the flows coming in both in Zomato as well as Geofin. On the other hand, outflows from some of the other names that are exiting the Nifty, like BPCL and Britannia. But the list of individual stocks is what we need to keep an eye out on. Like you mentioned at the start of the show, the PSU banking index was the one that did very well in the session. Have a look at Bank of Baroda, Citi initiating a 90-day positive catalyst watch. That stock high by almost 5%, and the rest of the PSU banks too followed suit. The other set of stocks that did quite well was JK Cement. The entire cement pack, in fact, did quite well. Within that, JK Cement stood out. Jeffrey's note today morning, after meeting the management, indicating that they're about to exit FY25 on a very strong note. That gave a fillip to the entire cement pack. Dilip Bilkon, another stock in focus, quite a large order win coming in from BSNL BharatNet Phase, over 2,600 crore order win. That stock higher by 5%. And RHI Magnesita, not a stock we discuss too often, but that particular stock today, one of the top gainer as far as the NSE 500 index was concerned. And lastly, have a look at Glenmark. Especially in the last hour of the trading session, this particular stock saw quite a sharp spike up, over 3.5% higher on a day when some of the other pharma stocks were actually laggards. On the other hand, long list of losers can't go beyond the entire auto ancillary pack. Quite a few stocks saw significant negative reaction. Tata Motors top amongst them. KP Global, another stock. Remember, this particular stock at one point of time lost almost 30% on an intraday basis on very strong volumes, ending lower by 15% at one point of time, was actually the top gainer on the NSE 500. Sundaram Finance, another stock, surprisingly one of the top laggards on the NSE 500 index, was 6% lower. And AU Small Finance Pack gave up most of the gains that it made the last few trading session. Again, a negative catalyst watch by Citi, and that particular stock lower by over 3% today.
Okay, Vivek, thank you so much for that. Important stocks that, surely saw a lot of move in today's trading session. But let's go across to our guests. Now we have market expert Anand Tandon as well as Ruchit Jain of Motilal Oswal Financial Services here to answer some of our, doubts on the markets and talk to us about the markets. Ruchit, right now what you're looking at in terms of the Nifty, today it closed 23,591. So just below the 23,600 levels. What are we watching out for in terms of levels for the Nifty, as well as the Bank Nifty, if you could talk about that as well?
Yeah, hi, very good afternoon, very good afternoon to everyone. Well, if we see last 2 or 3 trading sessions, we have seen some consolidation in the index. But overall, that high top, high bottom structure, I think on the lower time frame chart still continues. And 23,400 was a very important support level today, which was not breached. So the overall trend still remains on the positive side, and the sectors which have taken the leadership, such as banking is there, NBFC space is there. We have seen some of the other names from such as defense, which has been doing good. So I think overall market breadth is still looking quite positive. So I think since the leadership continues from the heavyweights, we should see a continuation of the movement and of the momentum. And 23,400, 23,300 would continue to act as a very strong support on any kind of minor declines. Now, as far as Bank Nifty is concerned, clearly, it has been one of the outperforming sector in this leg of up move since last 15 days, and still there are no signs of trend reversal happening yet. So I think this momentum should continue towards 52,500 to 52,600 mark, where the previous swing high resistances are there. So we are advising to our clients also to continue to trade with a positive bias as far as short-term trading is concerned until any important supports are breached.
Okay, all right, got that. Gentlemen, let's now kick it off with analyzing what happened with auto stocks today. Many of them were down quite a bit, and this was after US President Donald Trump hit out the sector with the 25% tariffs on auto imports that are coming into the US. Now, Tata Motors, Samvardhana, Motherson, these are some of the stocks that were taking it on the chin. Tata Motors was down throughout the session. From the morning, from the word go, it was down over 5% or so. We have Sudarshan joining in to talk about what these, tariffs, the new US tariffs, what they could mean for these companies. Sudarshan.
So it was a weak day for the auto sector, with sectoral index falling almost 1%. Now, this came on the back of announcement made by US President Donald Trump, who announced that he would impose tariffs of 25% on all the cars that are not made in the US. And also reports suggest that tariffs will be imposed on auto parts as well. And these tariffs would be effective April 2. Now, coming to the companies that will be impacted from this, first one is Tata Motors. US is one of the important markets for JLR, which forms nearly 30% to its total volumes. But the important part is JLR does not have the production facility in the US, and most of the cars that the company sells in the US market are imported by other countries. Now, JLR forms nearly 70% to Tata Motors' consolidated revenue, and the impact due to this tariff will be of more than 20%. So that's the reason Tata Motors was down more than 5%. Now, next up is Samvardhana Motherson. This company will not be directly impacted by tariffs, but there would be indirect impact because Samvardhana Motherson supplies auto parts to those automakers which export cars to US market, and here the impact is seen in the range of 6 to 7%. Now, coming to the stocks that can be impacted because of the tariffs on auto parts, and in that list, two names that come up are, first one is Balkrishna Industries and second is Sona BLW. For Sona BLW, more than 40% revenue comes from the US, and for Balkrishna Industries, it's almost 20%. And last in the set is, if US government decides to impose tariffs on bikes and trucks, in that case, the first company that will be impacted is Eicher, because Eicher's Royal Enfield, 2 to 3% of its volumes come from the US market. Second in that list is Bharat Forge, for which North America contributes 40% or a bit more than that to its total standalone revenue. And for Ramkrishna Forgings, nearly 30% of the revenue comes from North American market. So these are some of the major auto companies that can be impacted by US auto tariff.
Right, Sudarshan, thank you so much for that, on giving us a roundup in terms of who maybe could be seeing that impact coming in. Today we've seen that fall for Tata Motors as well as Samvardhana. Anand, taking this to you, other than Tata Motors, let's talk about these auto anch names, right? Whether you look at something like Balkrishna, Sona BLW, anything on that front that you would look at right now, or maybe you would be avoiding this pack as a whole?
First of all, the tariffs are not likely to have the kind of impact that the direct top-line numbers suggest, simply because if the now tariffs are across the board, you still need to buy those parts. And if everybody is, anybody who's supplying to the US is probably one of the lowest cost of quality parameters or highest quality parameter. They are the ones that are meeting that criteria. So if the OEMs are buying it from them, they are not likely to be able to change because the impact of the tariffs will be on everybody. So you may have to give up some of the margins more, but you're not likely to change, to chase away business. What is more likely to happen is that the cost for these cars and vehicles in the US will actually go up to the final consumer, and that may impact overall demand. So it is actually the impact will be transferred to the consumer in the US over a period of time, and therefore they are the ones that need to be worried about. Our outflow will come from the point that you may actually have a lower volume sale happening from that point of view. So for now, I think the better thing is to just wait a little bit. It's not that these stocks are particularly cheap. If they do give you a chance to re-enter at a lower price, that would be the time to look at it, because as I said, the outcome finally is likely to be a lot less than the top line numbers suggest.
Absolutely. Outcome may be a lot less than the top line number suggests, and if there's a fall, you can look at buying these stocks. But let's move on to the next stock for today. We had Wipro that was soaring in trade. 1% and is what it was seeing an uptick of among the top Nifty gainers coming in. And this is after the company had bagged a $650 million deal with UK insurance company. Let's go across to Rima, who's here to give us details on this one. Rima.
Thanks so much for that. So indeed, Wipro's won a mega deal, £500 million, which is about $650 million US spread over 10 years. So incrementally, it could add close to about 0.5–0.6% to Wipro's top line. And remember, the company that they won the order from, UK's Phoenix Group, already has a long-standing relationship with TCS. Actually, that's what makes Kotak very bullish. So they're saying this deal is notable because it marks Wipro's entry into an account which has been a strong hold for TCS. Also, this is the second mega deal that Wipro has won in the last 4 quarters. According to Kotak Institutional Equities, the deal will ramp up from December of 2025 quarter, that's Q3 FY26, and fully ramp up by the end of FY26. Initial profitability of the deal will be low, as is the case typically with mega deals. But according to Kotak Institutional Equity, Wipro will be able to make up for the margins and hold on to margins of about 17.5% through the duration of the entire deal. That said, even though Kotak is enthused by this mega deal win by Wipro, they still have a sell rating on the stock with a target price of 265. They're cautious because, a turnaround requires many things to go right at the same time. It is challenging. And while Wipro's growth, underperformance versus peers will continue to narrow, it will still underperform its peers. Morgan Stanley, too, acknowledges that this deal should support expectations of a pickup in revenue growth for Wipro in FY26, especially in a volatile macro environment. They too have an underweight call on the stock, and their target price too is 265.
Okay, all right. That explains the move on Wipro today, Rima. Thank you very much for that. Let's move on and focus on one more name. Aadhar Housing Finance was up 4% today after brokerage firm DAM Capital bet quite big on the stock. Vinny, you went through that note. So what is DAM Capital saying?
Absolutely. An interesting note coming in, right? When you hear those concerns coming out on that MFI front or, on the housing loan front issues. Now, what Aadhar Housing has been doing is that, they're shifting their mix in terms of loan from a non-housing side to the housing portfolio, which DAM Capital is saying is a positive coming in for them. Other than that, the geography-wise in terms of granularity versus peers, it is much better than the peers. The second point is the holistic mix in terms of sourcing channels. That are the two key important areas that are working out well for Aadhar Housing. They expect that growth, to continue for Aadhar Housing, 20 to 22%. That is something they expect will go ahead for the company. Other than that, return on assets, return on equity is much better than peers. The stock is trading at 2 times FY27 book and almost 13 times FY27 earnings. And what DAM Capital is expecting is that the return on equities expected to be somewhere around 16 to 17% over the next couple of years, and could even maybe see a peak of 18% as well, is what they are highlighting. So that's why initiating buy on this one, target price of 525, and the stock closed at the day as a higher point as well. It should be.
Okay, all right. That was Aadhar Housing in focus today. Well, just a quick word, Anand, going back, not just Aadhar, I don't know if you look at this particular stock or not, but overall financials are getting very well bid now. the big boys like Bajaj Finance themselves. What's your thought in specific on housing financiers like maybe an Aadhar, and otherwise what would you pick from the NBFC space?
So I would still prefer banks to NBFCs. I think by and large the argument for looking at banks is far stronger. The valuations are cheaper than many of the NBFCs. If you look at some of the leading public sector banks, for example, they are trading at minuscule valuations compared to what the NBFCs are trading at. If you actually expect it to become a little more competitive in terms of being able to source liabilities, then obviously you will again have those the banks benefiting. So net banks, and after that insurance companies is the way I would look at playing the financials. But from a housing perspective, clearly housing finance is one of the more secure forms of lending. Here again, the question is, the larger companies are likely to benefit because they'll have cheaper funds and therefore their NIM is likely to be higher. The quality of loan portfolio for the smaller companies is going to be a little more challenging. That doesn't mean they cannot make money, because this is still an area where there is a fairly large market and is still growing fairly strongly. So I don't specifically want to talk about Aadhar or any particular company, but if you're looking at housing finance, be prepared for a slightly lower NIM and at the same time a little more robust portfolio is the expectation.
Okay, got that. Ruchit, same question to you as well. Financials are definitely finding momentum in the market again. What would your top bet be?
Well, certainly the Nifty Financial Services Index is around its all-time high. And it was the first index to form a high top, high bottom structure when the markets were bottoming out. So I think that relative outperformance could continue, and we can clearly see some of the stocks that have taken the leadership includes Bajaj Finance, the Bajaj Finance, Bajaj Finserv. Stocks such as Shriram Finance has also witnessed very good price volume action. So I think these names should see a continuation of the momentum, and the relative outperformance over medium term can be seen from these NBFC stocks.
Sure, Richard, thank you so much for your view coming in on the NBFC side as well. But thank you so much, Anand and Richard, for joining in with us on Markets Forward. But we're going to step into a very short break now, and we will leave you with CLSA's Lawrence Blanco, who believes that the market has bottomed out and expects the Nifty to reach 26,000. However, Goldman Sachs' Sunil Kaul advises caution due to tariff uncertainties and the domestic slowdown. Take a look.
I think the worst is over. There were two things we were looking at. One is, in the fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate. Looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000.
I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates.
CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India.
Welcome back. Here with us on Markets Forward. Let's quickly get you some of the corporate highlights that we picked up from the course of the day. First up, GAIL's management has said that the PNGRB proposals to amend natural gas tariffs are positive for pipeline operators, particularly if they go through, as they would benefit companies with isolated pipelines. The management highlighted that their proposal for a 35% tariff increase is currently under active consideration by the PNGRB. The firm also added that it is any delays in the tariff announcements is usually compensated.
Next up, commercial vehicle maker Ashok Leyland Shenu Agarwal said that company's EV subsidiaries, which UK has been incurring losses of around 2 to 3 million euros per month for several years and has now initiated a consultation process to close it. However, he added that FY26 outlook is looking more promising for the Switch India, and which is expected to turn positive in terms of the profit after tax.
Last but not least, Suzlon Energy's management says that the wind energy industry is on track to achieve its target of 8 gigawatts of annual installation by FY27. Suzlon, as a dominant player in the sector, holds a significant 31% market share in installed wind capacity. The management adds that as of the third quarter of the current fiscal, the company's order book stood at a level of 5.9 gigawatts. All right, so those were some of the major corporate highlights from the day. But Vinny, tomorrow's Friday, but it's also a trading day and lots of action as always. So tell us what to watch out for.
It's Friday for sure, but we are beginning the new series as well. So that's something interesting to watch out for. But on the global front, let's keep an eye out on the UK's GDP data. Important to watch out for that. And the US will be keeping an eye out on the core PCE price index data over there. So important data points on that global front. Domestic front, some corporate movements that we'll be seeing in action. Ex-dividend companies, we'll be watching out for matrimony.com, TVS Holdings, Samil, as well as Motherson Sumi Wirings. That's the one we're keeping an eye out on. Important stocks to watch out for. Nifty index reject that we're talking about. So obviously, that inclusion of Geo Financial Services, Zomato, that will continue to be in focus tomorrow, as well as exclusion of BPCL and Britannia. So keep an eye out on these names. And lastly, IndusInd Bank. That's an important one to watch out for. We have seen a lot of action happening here. So bank's external auditor with PwC is likely to table a report before the bank's board, and that's going to be tomorrow. Any key updates that we get in on that front is key to watch out for in tomorrow's trading session. But on that note, we're going to wind down this edition of Market Forward on CNBC TV 18. Thank you so much for tuning in.
Drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around. And our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the U.S. or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Indian equities erase initial weakness comfortably and close in the red for a major part of the session. The Sensex and the Nifty gain over 0.5% each. US President Donald Trump says all cars shipped to the US starting the 2nd of April will face 25% tariffs. Reports say the levy will be imposed on car parts as well. As the EU and Canada slam the move, Trump doubles down, threatens further tariffs if EU colludes with Canada to cause economic harm to America. New York Times reports that the U.S. government agency responsible for administrating civilian foreign aid plans to halt the over $1 billion funding to Gavi, the global alliance that provides vaccines and life-saving care to developing nations. Gavi's chief executive says that surprise halt in funding would have a disastrous impact on global health security. CNBC-TV18 learns that officials from the PMO, the Commerce Ministry and the External Affairs Ministry are in active discussions on cutting tariffs on imports from the U.S. Sources say several categories, including cars, medical equipment, gems and jewelry, under review. No final decision has been taken so far. Sources say a note from the Electronics and IT Ministry proposing a 25,000 crore rupee PLI scheme for electronic component manufacturing is likely to be sent to the cabinet soon, indicate that the government may be flexible about hiking the outlay depending on industry's response. A day after announcing a ceasefire and attacking energy infrastructure, both Russia and Ukraine accuse each other of breaking the terms. Russian forces launch a mass drone attack on 2 cities in Ukraine, killing over 10 people. Ukraine reports downing 56 of 117 drones launched by Russia. Prime Minister Modi writes a letter to Bangladesh's chief advisor Mohammad Yunus, wishes him on his country's Independence Day, calls for stronger bilateral relations based on mutual sensitivity to each other's interests and concerns. This is the Prime Minister's first official correspondence with Yunus since the Nobel laureate assumed office after the ouster of Sheikh Hasina. Dalal Street ended the March series on a healthy note, with the Nifty reclaiming the 23,500 mark today. The Nifty and the Sensex gained nearly 0.5%, with banks outperforming. Auto stocks did hit a roadblock this after US President Donald Trump's tariff announcements that came in. However, for this series, the market has snapped its 5-series losing streak to record its biggest gain in a series since September of last year. 100 points higher on the Nifty, the Sensex closing 300 points higher, 200-point gain there for the mid-cap index, and a 360-point uptick for the Nifty Bank. Prashant is standing by to wrap up the day's trading action for us. Prashant, holding, that's the market sentiment at this point in time.
Well, last 2 days, markets were a little slow, even sideways. Today, well, that turned. And the market looked much better, despite, of course, waking up and coming in to the headlines that Trump is imposing 25% tariffs on automobiles and auto parts which were not made in the US. So there was a knee-jerk reaction, but that got bought into, and then we never really looked back. It was not a big day on the upside. Market breadth was kind of mixed, but nothing to complain really. The Nifty was up about 0.5%. The Nifty Bank was up in that zone as well. The small cap index really stood out 1.3% higher. Mid caps were a little more subdued, really coming in today. I think declines outnumbered advances by just a tad bit, but that kind of tells you that even as the market was up a half, it was not showing up everywhere in the broader markets. Now, I'll just start with the large caps here. So gains coming through in Hero MotoCorp, which was up 3.5%. Bajaj Finserv was up 3%. IndusInd Bank was up about 3%. Adani Enterprises, Trent and Wipro were some of the other names which were up about 2% apiece. On the downside, Tata Motors, of course, was the standout loser from the word go. Of course, tariffs do make a difference for Tata Motors, especially for the JLR business. Sun Pharma, Kotak Bank, Eicher were the other losers. I mean, this is actually just 4 names with losses in excess of 1%, so nothing very dramatic at all. I'll start with what was down in the broader space since declines outnumbered advances. There was Capri Global, which saw a 28% turnaround from the day's high. Number one volume-led loser, down about 16% on the day. Tata Motors, as I said, JB Chemicals was down 5.5%. Of course, there was a block there. Sona Comstar was down 6%. Again, the tariff news. Sundaram Finance was down 7%. There was Idea Forge down 4%. Power Mesh was down 5%. Rolex Rings down about 5% or so. But this is largely the bulk of the volume-led losses that we saw across the board in the markets today.
Right, Prashant, many thanks for joining us. In the energy market, crude oil prices nearing a 1-month high on renewed concerns over a trade war and tightened global supply. Trump's 25% tariffs on Venezuelan oil buyers also supported prices. Brent crude hovered near the $74 per barrel mark, and that's where it is currently. The big global story that we're tracking this evening, President Trump has announced tariffs of 25% on all cars shipped to the United States. Reports suggest the levy will be imposed on car parts as well. Now, the new tariffs will come into effect post the 2nd of April. Speaking at the Oval Office, Trump said he expects auto companies to relocate to the United States and build new sites or expand its existing ones. The U.S. imported $474 billion worth of automotive products in 2024. Mexico is the top supplier of cars to the U.S., followed by South Korea, Japan, Canada, and Germany. The White House has said that these tariffs will be imposed in addition to the existing levies on goods from Canada and Mexico.
For doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country. What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at.
Sanjay Suri joins us now from Washington on the challenges that the U.S. may face while implementing these tariff changes. Sanjay.
Another round of tariffs from President Trump before the big one due on April the 2nd. Trump has announced now a 25% tariff on all car imports into the U.S. that he said will go into effect on April the 2nd, and that he would begin to start charging the following day. These tariffs would be on top of the tariffs already in place and already announced. The U.S. administration believes that this tax on automobiles will bring in at least $100 billion of new revenue every year. And Trump has said these taxes on automobiles will be permanent. And to follow will be tax benefit offers to American buyers of cars built in the U.S. But this is not going to be a simple and straight tariff. A lot of the cars imported into the U.S. come from Canada and Mexico, and these have components made in the U.S. And that, he said, will be proportionally factored into the 25% tariff. The tariffs will be reduced in proportion to the value of an imported car's American-built components. This opens up a nightmare world of certification and accounting. On the other hand, to add to this, the tariff will apply to non-American components of cars built in the US. This would then be a decision particularly hard to implement. It is not clear who will police this, who will carry out inspection and certification of every car or even every lot of cars along these lines, and what the cost of all this would add up to.
Well, that certainly is right. Certainly not the ease of doing business there. Sanjay, many thanks for joining us. The European Union, Canada and Mexico have slammed the tariffs on automobile imports. European Commission President Ursula von der Leyen has expressed regret about the US's decision. She said the bloc would continue to seek negotiated solutions while protecting its economic interest. The European Auto Manufacturers Association also voicing its concerns. The association has urged President Trump to consider the negative impact of tariffs on domestic manufacturing as well. And, of course, the impact on the American consumer. Meanwhile, Canadian Prime Minister Mark Carney called new tariff announcements a direct attack on Canadian workers. He added that the tariffs were a betrayal of the trade pact between US and Canada. President Trump doubled down following the EU and Canada's reactions. In a post on Truth Social, President Trump said that larger levies would be imposed if the two work together to harm the US economically. Remember, Canada is already working towards providing industrial support for Europe's rearmament push. India's automotive industry has not been immune to the US tariff announcement either. Shares of Tata Motors, Samvardhan Motherson and Sona BLW declined in trade today. Sudarshan is standing by to explain to us what these tariffs could mean for Indian automakers and auto component makers. Sud.
Auto stocks were under pressure in today's trade on the back of announcement by US President. He has announced that he'll impose 25% tariffs on all the cars that are not made in the US. Also, as per reports, tariffs will be imposed on auto parts as well, and these tariffs will be effective April 2. Now, the first up on the list is Tata Motors, which will be impacted by this tariff. And the reason is US is one of the important markets for JLR, which forms nearly 30% of its total volumes. The most important part is JLR does not have production facility in the US, and most of the cars that JLR sells in the US are imported from other countries. And JLR forms nearly 70% of Tata Motors' consolidated revenue. And due to this tariff, its revenue can be impacted by more than 20%. Next up on the list is Samvardhana Motherson. This will not be impacted directly by tariffs, but it supplies auto parts to those automakers which export cars to the US. So here the impact can be seen in the range of 6 to 7%. Now, if US government decides to impose tariffs on auto parts, two major companies that can be impacted are Balkrishna Industries and Sona BLW. For Balkrishna Industries, 17% revenue comes from the US, and for Sona BLW, US contributes nearly 43% to its total revenue for the fiscal. Last in the list is, if US government goes ahead and imposes tariffs on bikes and trucks, then some of the companies which can be impacted in that list are first, Eicher Motors, for which US forms nearly 2 to 3% to its total volumes of Royal Enfield. Second in the list is for Bharat Forge. 40% of standalone revenue comes from North America. And for Ramkrishna Forging, 26% revenue is contributed by North America. So these are some of the companies which might be impacted by the tariffs that are announced by US President Donald Trump.
All right, so many thanks for joining us. And speaking of tariffs, the government is in active discussion to consider cutting tariffs on key American imports. Sources tell CNBC-TV18 the government is assessing potential duty cuts on specific goods. Timsy is standing by with more. Timsy, take us through the categories that the government is looking at a potential tariff reduction at.
Well, sources have told CNBC-TV18 that the top officials from the Prime Minister's office, Commerce Ministry and Ministry of External Affairs are in active discussions to consider tariff cuts for the US. As we speak, comprehensive review of the current import categories and duties is being undertaken, and on the drawing board is to see in what permutation combinations tariff cuts can be offered to the US. Given this, sources said, even as no final decision has been made, still, some of the top categories where there could be a tariff cut includes medical and scientific instruments, cruise ship, aircraft, spacecraft, cars, turbojets, propellers, high-end jewelry, gems and jewelry, footwear, plastic polymers, organic chemicals, etc. Just to add some perspective here, total goods imports by India from US in the calendar year 2024 stood at $35 billion, which is a growth of 6.7% from the imports undertaken in the calendar year 2023. Let's see what India has to offer and how soon, along with what India gets in turn as a deal from the US, something that we'll have to wait and watch for.
Timsy, many thanks. Meanwhile, Tesla stock fell 6% yesterday on the back of data from Europe hinting at a slowdown in sales. That's last month. Tesla sales in Europe have fallen by 49% in the first 2 months of the year compared to last year. This even as all battery electric car makers saw a growth of 29%. There have been complaints about an aging lineup of vehicles from Tesla. Significant backlash against CEO Elon Musk's association with the Trump administration has also hurt Tesla's demand. The Trump administration is planning to stop its funding for Gavi, the global alliance that provides critical vaccines to developing countries. The New York Times has obtained a U.S. Agency for International Development document, which has a list of foreign aid projects that the administration plans to continue or terminate. As per the document, Trump has decided to end over 5,000 U.S. aid awards and continue with just 898 programs. In a statement, Gavi said it hasn't received termination notice for the grant and is engaging with the White House. It added that Congress approved $300 million for Gavi in its FY25 budget and has signaled the intent to ensure that the funding continues. In a conversation with me earlier this month, the Gavi board chairman had said he hoped that the U.S. would continue to be a donor to the organization.
Look, until now, the moment we are speaking, we have not received any negative reference to Gavi from the new administration. And the last time we've got the interaction with the United States, the previous Trump administration, in fact, it was a bipartisan support to Gavi. It was a very generous support to Gavi because it was during COVID in the transition from the Trump to the Biden administration. So I hope that the same commitment will last.
Well, an uncertain future, therefore, the Global Vaccine Alliance if the U.S. does decide to withdraw a significant amount of the funding. The U.S. president also said he may cut tariffs on China to help seal a deal for TikTok to be sold by its owner, ByteDance. Trump also said he was willing to extend the deadline for ByteDance to find a non-Chinese buyer. China swiftly rebuffed Trump's offer. The country's foreign minister reiterated Beijing's stance that acquisition should be decided by companies. In a major crackdown on visa fraud, the U.S. Embassy in India has cancelled over 2,000 visa appointments and suspended the accounts linked to those. Officials say the appointments were made by bots and violated the embassy's scheduling policies. This comes amidst the mounting backlog of U.S. visa appointments in India. Here's a CNBC-TV18 exclusive. A note from the Electronic and IT Ministry proposing a 25,000 crore rupee PLI scheme for electronic component manufacturing is likely to be sent to the cabinet soon. Sources tell us that the government may be flexible in hiking the outlay depending on industry's response. Ashmit joins us now with the details. Ashmit, this has now been in the making for several months now. When can we expect the approval?
Well, it's been a long time coming as far as this PLI is concerned, the electronics components PLI. The latest that we're picking up from sources within the government is that the cabinet note has been prepared and that it will be put forth before the cabinet. It will be sent up to the cabinet for approval. Now, this has been a long time coming. There's been a lot of speculation. There's been a lot of conversations over the last 3 to 4 months over the nature, shape and form of this PLI scheme. Let's break down the details. Now, as far as the details are concerned, the PLI, as the name suggests, is aimed at electronics components like batteries, displays, PCBs. That's the main thrust of this electronics PLI. In terms of what the outlay looks like, what we're given to understand that the figure in mind that the government has put forth is 25,000 crore rupees. That's a large figure, but not as large as what the industry had sought. The industry had made a pitch for 40,000 crore rupees. The concern, however, is that the government is now saying that they're okay with 25,000 crores for now, and they're open to some amount of flexibility to increase the outlay at a later date should there be an overwhelming response from the industry. So 25,000 for now can go up even further. As far as what the likely investments are, well, the government is estimating that this PLI could attract investments worth over 40 to 45,000 crore rupees. So that's the kind of figure that the government is working with. The government is quite clear. It's excited. It's keen on the mobile PLI that has performed well. Now it is hoping that this PLI will bring in the ecosystem here, the components ecosystem, and thereby adding for more localization and value addition here in India.
Ashmit, many thanks for joining us. Up next, Prime Minister Modi writes a letter to Bangladesh Chief Advisor Mohammad Yunus, wishes him on his country's Independence Day, calls for stronger bilateral relations based on mutual sensitivity. That and more when we return.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
You're watching Business 360. Prime Minister Modi has written a letter to Bangladesh's Chief Advisor Mohammad Yunus wishing him on his country's Independence Day. In the letter, Prime Minister Modi has called for stronger bilateral relations based on mutual sensitivity to each other's interests and concerns. The government is planning to launch a ride-hailing service modelled after Uber and Ola called Sehkar Taxi in the coming months. Under the initiative, cooperative societies will be able to register two-wheelers, taxis, rickshaws and four-wheelers. While speaking in the Lok Sabha, Home Minister Amit Shah, who also holds the Ministry of Corporation portfolio, said the profit will go directly to the drivers and not to the intermediaries. Both Russia and Ukraine have accused each other of breaking the ceasefire a day after agreeing to pause attacks on energy infrastructure. The planned ceasefire in the Black Sea is in jeopardy. This after the EU refused to agree with Russia's demand to reconnect its state bank to the international payment system. Europe said that this would not happen until Russia withdrew from Ukraine. Meanwhile, Russian forces continue to attack Ukraine, launching a mass drone attack on two cities. At least 25 Palestinians have been killed and 82 injured in Israeli attacks carried out across Gaza in the past 24 hours. Hamas said its spokesman has been killed in northern Gaza. Meanwhile, the Israeli military continues its assault across the occupied West Bank, raiding a town in North Bethlehem.
It's been a tough week for companies looking to go public after regulatory scrutiny intensified. Indira IVF has withdrawn its IPO papers. SEBI has put WeWork India's IPO on hold, while Star Agri Warehousing is facing disclosure-related troubles. Rachna is standing by with the details. Rachna, take us through what's happening in the IPO market and specifically for these three firms.
Well, Indira IVF Hospital has withdrawn its draft IPO papers, while SEBI has placed WeWork India's IPO in abeyance, raising concerns about regulatory scrutiny and market conditions. These developments highlight the market regulators' increased oversight on transparency and compliance. So let's start with Indira IVF, which had planned to raise about 3,500 crore via a fresh issue and an OFS. The company filed its draft papers on February 13, but has now decided to withdraw them. The timing has sparked specific speculation, especially with a Bollywood biopic on its founder Ajay Murdia releasing on March 21. This movie stars Anupam Kher and Isha Deol in lead characters. But this was almost a month after Indira IVF submitted its draft papers to the Securities and Exchange Board of India on February 13th. However, the company has denied regulatory interference, saying the withdrawal was a commercial decision. Meanwhile, WeWork India's IPO process has hit a roadblock too. SEBI has placed the company's filing in abeyance, meaning the issuance of regulatory observations has been put on hold. WeWork India, backed by the Embassy Group, had filed its IPO papers on January 31st, proposing for a fresh and an OFS component and to sell about 4.3 crore shares in the OFS. SEBI, however, has not disclosed any specific reason for this decision, adding to the uncertainty around the company's listing plans. But it's not just these two. There's also Star Agri Warehousing's 450 crore IPO that is facing regulatory challenges. SEBI has flagged issues with key performance indicator, the KPI disclosures, and a lack of clarity on fund utilization because the company seems to have a lot of cash on their hands for now. The company had filed for an IPO with a fresh issue component and an OFS of 2.69 crore shares, but concerns over financial transparency have put its plans on hold. What's clear, however, is that SEBI is tightening its grip on IPO-bound companies, demanding more detailed disclosures and stronger compliance measures. With this heightened scrutiny, companies looking to list will have to ensure greater financial transparency to clear these regulatory approvals.
All right, Rachna, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
As infrastructure safety continues to evolve, collaboration, innovation, and proactive policies remain key to addressing emerging challenges. Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future, brought together thought leaders to connect the dots between past learnings and future roadmaps, shaping a safer electrical infrastructure for the nation. The grand finale discussions continued with Infra Safety Unplugged, connecting the dots, cross-learnings and roadmap ahead, where experts analyzed key insights from previous dialogues and outlined strategic steps to enhance electrical safety measures.
So let's start with you, Shruti, because over the discussions that I've had with MEP consultants, with the policymakers, regulators, and developers, all folks in the ecosystem, some of the issues that have come about when they look at the key causes for electrical safety issues being dismissed is, say, faulty installation or substandard electrical equipment. So maybe we'll start with a headline statement from you on the key cause of electrical safety still lagging in India.
Electrical safety, actually, we should have it designed right, installed right, and maintained right. If these three things are met, then these people are happier when they have lesser calls.
You have bandwidth free for other more important
yes,
issues
because
to take care of.
Base of fire, actually seat of fire, either is the electrical short circuit, which happens when two different type of wires are mixed together without a circuit breaker. Or when there is, even if their seat of fire is not electrical, if the seat of fire is suppose here, but there is a conduit going, so it will take the fire along the path where it is going. So we have to be careful because electrical wires are like nerves in a human. They are
Make
everywhere
sure that
in
the
the
wire
building.
is safe. It will cause a lot of other
Yes.
headaches to be prevented.
Yes.
That's the headline
Yeah.
statement coming from Shruti. Fantastic. Puneet, your thoughts, chief causes for electrical mishaps, and what's the headline statement coming from you?
So coming back to this important topic, actually the problem is use of substandard, the materials, which is readily available at a low cost in the market, and clients and the user are getting fascinated and they are buying such products at a cheaper price.
They see the cheap cost
Yes.
and then they just go ahead
and
with it.
they do not know the repercussions later. So what happens while we put ourselves under safety on the fire and electrical risk, because certain substandard products will lead to the problems with related to electrical shock, like a poor insulating value. There's a short circuit current which comes in, so it causes a lot of issues, and we keep on investing this money, and later we find a problem with this. One of the matter is like this. Second point is like 1 weak failure, 1 weak link can lead to a major failure in this whole system. Third point is that non-conformance to the standards. So there are codes which are already laid, like National Electric Code, which talks about electrical installation methodology for various equipments, even drawing a wire, how we should do that, how do we put the cables, what are those areas, how do we cover it. So basically it is seen through my experience over a period of time that we are forgetting, we are not referring to the codes and standards. It is basically a jugaad.
I see Mr. Rajput is taking notes, and I would love to pick his brains on what his response has been to what Shruti and Puneet have said, Mr. Rajput. And also the point that since the Central Electricity Authority, it's not just managing, it also looks at developing, pushing the envelope forward. There, a lot of talk has come in these panel discussions on the need for a trained workforce, the need for certification, which is critical for improving electrical safety. So what measures is the Central Electricity Authority taking in this regard? So first, your response to what Puneet and Shruti have said, and then your point on what is the CEA doing in terms of skill upgradation and certification.
Thing is that it is basically our mindset that we have to be safe. We purchase the vehicle which is of the best class. But when we comes to the electrical appliances, electrical wires, electrical switches, electrical fittings, we somewhere or the other we try to compromise. Maybe there are exceptions. Those who realize the importance that the electrical fires basically should not take place because of the poor quality or the inadequate size of the conductors and the plugs. So those are the major causes. What can be done is, one thing is that we review our standards,
all right,
tighten the standards. Quality control orders are also there. Quality control orders, most of the electrical items are covered under the quality control order, means they have to be strictly as per the Indian standards laid down. And we have to have a check, we have to mitigate the menace of duplicate and the fake products.
Puneet, maybe this time I'll start with you in terms of, all right, we've listed out all the issues. Now the question is, what is supposed to be done? Top 2 or 3 points that you would like to list.
Yeah, so Gautam, from my viewpoint, actually, if we talk about BIS, which was formulated less than a decade ago, there are, unfortunately, we have only 23 products under electrical appliances.
That needs to go up substantially.
That is very, very less. There are thousands of MSME companies who are building such substandard products in the market. BIS should bring in some guidelines, do a necessary inspection of the manufacturing facility, lay down the processes, lay down the quality standards, parameters, develop lab. Labs are primarily in India, it's very expensive proposition. Since under the Make in India initiative, everybody is eyeing to go for an Indian product rather than going for an outside product. So this becomes mandated at this point of time to promote Indian product by giving them knowledge transfer, whatever is possible, creating infrastructure in form of laboratories, doing standardization of like the guidelines. The most important is there should be a digital platform or the AI chatbot which should be created by BIS or a government body, enabling such small companies or substandard products companies who are making this in abundance and convert them into a standard platform. This is a good initiative which one should take, and that is how we can see our country to go up.
That's a great idea, and especially in the context of Make in India for India, it's great that we have players like Polycab who are established, who are developed, provide a framework which is certified and compliant, and maybe serves as an inspiration for the ecosystem. Shruti, your thoughts on...
I just like to add one thing, what he was talking about, Make in India. So there are a lot of manufacturers who are MNCs who are just bringing in the equipment in spare parts, assembling it here, branding it as Make in India and selling it.
calling it Make in India.
Yes. So that also they have to categorize. The government has to categorize. They have to give them time. They should say that certain percentage, say suppose 70% of the equipment content should be made in India and then assembled in India.
Mr. Rajput, coming to you, in terms of enforcement of a lot of these guidelines, in terms of the audits that are required, what would you say are the policies or guidelines that are required currently to kind of amp the enforcement side of things? You know, how effectively are they being implemented and what more needs to be done?
If our safety regulations and the regulations for construction of electrical plant and lines are followed very sincerely, we don't have any problem. Analyze the data, the failures are taking place in which sector and in which pockets. जब तक हम आदमी को पहचान नहीं देंगे जिसने सही काम किया है और जिसने अच्छा और ब्रेवरी का काम किया है या गोल्ड मेडल जैसा काम किया है, ऐसे कुछ लोगों को हमें उत्साहित करना होगा और कुछ इनामात देने होंगे पब्लिक प्लेटफॉर्म से, एटलीस्ट सर्टिफिकेशन ही देना होगा, या आपके डिपार्टमेंट में ही किसी ने कोई अच्छा एग्जाम्पलरी काम किया है तो उसको एक आध इंक्रीमेंट भी दिया जा सकता है। ये प्रैक्टिसेस बिल्टअप करनी पड़ेंगी। दूसरा क्या है, जो ख़राब क्वालिटी वाली सप्लाई वाली हैं, जिनका स्टैंडर्ड्स पुअर रहा है, जिन्होंने इसमें मैनिपुलेशन किया है बनाने में, उन कंपनीज को ब्लैक लिस्टिंग करने में हमें शर्माना नहीं होगा।
A big thank you to, again, our esteemed panelists for sharing so much.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future. Sites into their businesses from top Indian honchos before putting your money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
One is
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
An engaging conversation between Nikhil Jaisinghani, Executive Director of Polycab, and Parikshit Luthra of CNBC-TV18, focused on emerging technologies, best practices, and the path towards building a resilient and secure infrastructure in India.
Nikhil, first of all, I'd like to just ask you about the message that we are trying to send out from an event of this kind. CNBC-TV18 and Polycab together. If you had to explain our audience in about a minute or two, what is the message that we want to send out to policymakers and the private sector about the importance of safety as we move towards increasing our push for infrastructure, for renewable energy? What should we keep in mind?
Safety, I don't think is necessarily talked about as much yet, right? We get about, I think, 60,000 or so fire incidents annually. Now, with power, the demand of power and usage going up so much more, we don't want that to increase in the same ratio, right? And therefore, it's absolutely critical. And now that so much more will get electrified, it's absolutely critical that we have an event like this where we can ensure safe usage and deployment of power.
Right. Nikhil, when we speak about growth in infrastructure, what are some of the most common hazards or accidents that you've come across year after year? You can give us a sense of how things happen sector-wise, but what are some of the most common accidents that you see?
Well, I think so. Firstly, we need to give a lot more importance to human life. The value of life shouldn't be very low. In terms of accidents, it could range from just short circuit, and someone was talking about earthing in the last panel, right? Just those shocks. You can get short circuits from the switch not being cleaned in your kitchen, right? If that itself is dirty and it's not maintained, at some point it's going to lead to some issue. And fire that happens due to short circuit, many times what happens is it's not because of the fire that it's not that the majority of the people necessarily burn or get burnt. It's mostly the smoke that comes out of it. And that's where we have opportunities to use products that can ensure at least people don't choke, and there's visibility for people to move out of spaces like that, right? And there are products like FS cable, where we make sure that critical applications like elevators and things like that keep moving in those critical times. So there are instances, like you said, like short circuit and things like that actually happen.
Right. Give us a sense of the kind of opportunity that lies ahead for companies like yours. India wants to be the manufacturing destination of the world. We will have a aspiration to play a big role in global supply chains, and we also have a renewable energy targets as well. So when it comes to infrastructure safety, what is the opportunity that you see? And if you could quantify that opportunity for us, say by 2047. The reason why 2047? Because this is the big goal that the government is working towards, making sure India becomes a high-income country by 2047, becomes a developed nation by 2047.
Look, the opportunity, I think, is across, as you mentioned, multiple segments, right? And so whether it's electric vehicles, as in the first panelist, Anurag mentioned, the number of cables just go multifold. When you talk about renewables, right? Solar, you need DC cables, you need AC cables to go in there. I think, but the critical part for a lot of this is that we need to make sure that we are making things that are suited to Indian conditions and suited for India, right? So for the weather, for the humidity, and for things like that. Some of the temperatures in some places go pretty extreme, right? They can go down to minus something and then can get very hot. So, that's where the opportunity is. The opportunity again is, let's say in defense. Discussing some time back, we've started supplying cables for submarines. We supplied cables for the INS Vikrant, right? And I think those are immense opportunities, and these are all products that are made fully in India. They're designed in India. There are even for products like EVs, right? I think the charging cables, till not too long back, they were imported, right? We've now designed them in India. They're supplied from our plants. Even there are significant opportunities because to manage power better, which I think as a country we must focus on, and we are trying to bring in smart cities and smart meters and things like that. We don't just need power to transmit. We also need power to get controlled, and we have the right data points for that. So with power and control, data sort of going into one cable, composite cables, these are very useful. These could be very useful in data center applications going forward. However, of course, as a country, as we evolve, it won't. And I hope, and we are working and striving towards getting there, is that we're not necessarily only focused on the lowest price. We also have to make sure that we are focusing on the right quality and as a country putting safety first.
Today, there is a lot of focus on smart cities, IoT, AI, machine learning. How are you using all of this into making sure that you can provide the smartest solutions, most efficient solutions, and safest solutions to your businesses, to your clients across the country, across sectors? And how do you see the infrastructure safety landscape evolve in the country over the next 10 years or so?
As we, IoTize a lot of things, we will, work with industries and keep learning and trying to figure out newer applications, again, that suit the Indian requirement, right? And I think that is absolutely critical. We do our R&D in India. We manufacture everything. We make sure that everything is available to our customers as soon as possible, in fact. So, if they need something, you don't have to necessarily keep inventory and things like that. And I think as we evolve, companies like us need to spend maybe a lot more on R&D. I think the regulators need to, like somebody else mentioned, need to ask people to be more stringent or be more stringent themselves, and push more innovation to come in.
All right, Nikhil, thank you so much for joining us, giving us your vision on how the infrastructure safety landscape is going to evolve in the country. You told us about the need to have a greater conversation on infrastructure safety, greater awareness at all levels, and more investments by both the government and the private sector. Thank you once again for being with us.
Atul Garg, Director, Delhi Fire Services, delivered a special address emphasizing the pivotal role of advanced electrical safety protocols in urban planning and emergency response.
Delhi Fire Service attend almost 30,000 calls per year, and in 30,000, approximately 60% fire calls, actual fire calls, and about 60% actual fire calls. In Delhi, about 60% fire call is contributed by the electric, some sort of electric, maybe electricity failure, equipment failure, overloading, short circuiting like this. And the loss is huge. Fire is a very, very critical. And if anything mistaken is taken, something going wrong, the results are devastating. So my solution for this is, number one, please do not install meters, electricity panels near to staircase, because that is your escape route. And regular checking of the electric system is a very, very much essential. If we have a robust electric system in Delhi or all over India, there will be no fire, we will be jobless. Then overloading, yes, there is a point already, people have talked about so many things about the overloading, short circuiting. Yes, these are the main concern about the electric fire. Now, one more thing is that we do not own fire safety. In our blood, there is no fire safety. I will like to quote an example because I have also worked in the industry. When a fire safety engineer or a safety engineer, when he goes to the industry, he checks everything, every point to maintain the electricity because it is his job. But once he go back to the home, he never checks in the building where fire safety system is working or not, because that is not their job. So we are working for a fire safety as a job, not as a mindset. Our mindset is not in fire safety. Nobody think about fire safety once he goes back. So that is the issue. We have to develop this. We have to, inculcate it. The fire safety is the job of everybody. This is a very, slogan is everywhere. Fire safety is a job to everybody. But in reality, nobody think about fire safety unless it is my responsibility. So we have to educate the people. We have to encourage the people. We have to educate school children that fire safety is everybody's job. Unless you know it, unless you are aware it, nothing can be done. This fire is a man-made fire. It can be prevented. Disaster we cannot do it. Earthquake we can't do much. But in case of fire we can do if we are doing a right thing. Fire can be avoided. At least we can minimize the fire. So I think that is from my side. That is my recipe as a man from the state. Thank you so much.
In recognition of their unwavering dedication to fire safety and emergency response, courageous firefighters were honored in a distinguished felicitation ceremony. Devender Kumar, Karanjit Singh, Nitin Lochab, Amit Kumar Rana and Sonu Dakkar were celebrated for their extraordinary bravery, resilience and steadfast commitment to safeguarding lives. True heroes who exemplify the spirit of selfless service. Rajesh Kumar Shukla, Subhash Chandar and Dharamveer Singh were honored for their unwavering dedication and invaluable contributions to public safety. As the grand finale of Polycab and CNBC-TV18 present Infra Safety, Powering India's Electrical Future concluded, attendees took a safety pledge.
With unwavering dedication, I will utilize my knowledge and awareness of electrical safety to protect myself and those around me. I will ensure that all electrical products, including wires, cables, switchgears, switches, etc., are certified, compliant, and have passed rigorous quality tests. I pledge to advocate for regular audits of electrical and firefighting systems, both at work and at home, to maintain the highest standards of safety.
Through collaboration, innovation, and robust safety frameworks, the nation is on course for a safer, more resilient infrastructure future.
Polycab and CNBC-TV18 present Infra Safety, Powering India's Electrical Future.
But cost? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug?
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that. But we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.
Hello and welcome to News Center. Car makers across the world will be driving with caution as they brace for 25% tariffs on all cars being shipped to the US. While making the announcement yesterday, Trump said that tariffs would take back money from foreign countries that have been taking their jobs and wealth. Reports suggest that the levy will be imposed on car parts as well. Charges on businesses importing vehicles will be imposed starting from the 3rd of April. So how big is the impact? The US imported $474 billion worth of automotive products in 2024. Mexico is the top supplier of cars to the US, followed by South Korea, Japan, Canada and Germany. The European Union and Canada have slammed US tariffs. European Commission President Ursula von der Leyen said that the bloc would continue to seek negotiated solutions while protecting its economic interests. Meanwhile, Canadian Prime Minister Mark Carney called the new tariff announcement a direct attack on Canadian workers. President Trump doubled down following the EU and Canada's reactions. In a post on Truth Social, President Trump said that larger levies would be imposed if the two work together to harm the US economically. Speaking at the Oval Office, Trump said he expects auto companies to relocate to the US and build new sites or expand existing ones.
For doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country. What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at.
Right. India's automotive industry has not been immune to the US tariff announcement. Shares of Tata Motors, Samvardhana Motherson and Sona BLW declined in today's trade. Sudarshan Kumar, my colleague, is here with all the action in the automotive segment as a result of the tariff announcement.
Under pressure in today's trade on the back of announcement by US President. He has announced that he'll impose 25% tariffs on all the cars that are not made in the US. Also, as per reports, tariffs will be imposed on auto parts as well, and these tariffs will be effective April 2. Now, the first up on the list is Tata Motors, which will be impacted by this tariff, and the reason is US is one of the important markets for JLR, which forms nearly 30% of its total volumes. The most important part is JLR does not have production facility in the US, and most of the cars that JLR sells in the US are imported from other countries. And JLR forms nearly 70% of Tata Motors' consolidated revenue. And due to this tariff, its revenue can be impacted by more than 20%. Next up on the list is Samvardhana Motherson. This will not be impacted directly by tariffs, but it supplies auto parts to those automakers which export cars to the US. So here the impact can be seen in the range of 6 to 7%. Now, if US government decides to impose tariffs on auto parts, two major companies that can be impacted are Balkrishna Industries and Sona BLW. For Balkrishna Industries, 17% revenue comes from the US, and for Sona BLW, US contributes nearly 43% to its total revenue for the fiscal. Last in the list is, if US government goes ahead and imposes tariffs on bikes and trucks, then some of the companies which can be impacted in that list are: first, Eicher Motors, for which US forms nearly 2 to 3% to its total volumes of Royal Enfield. Second in the list is for Bharat Forge. 40% of standalone revenue comes from North America. And for Ramkrishna Forging, 26% revenue is contributed by North America. So these are some of the companies which might be impacted by the tariffs that are announced by US President Donald Trump.
All right, to take this forward, I'm now joined by Rajiv Chaba, CEO Emeritus, JSW MG Motor India, Renault India MD Venkatram Mamilapalli, and also on the show with us is Pankaj Chadha, Chairman of the Engineering Export Promotion Council of India. Mr. Chaba, let me begin by asking you about the impact on India. Well, we don't really export any cars to the US at this juncture, but considering that this announcement would be not just for cars manufactured around the world, but also for the automotive parts and components, there will be a rattling of supply chains around the world. So do you feel that in the mid to near term, there will be an indirect impact on the Indian automotive industry?
Thanks, Parikshit. My view is right now, what Donald Trump is trying to do is to disrupt some of the supply chains. And that depends from country to country, whether it's disruption or destruction. India will get into this disruption category for sure, because automotive industry is a very complicated industry in terms of lots of linkages in supply chain globally. What does it mean is that no one country is producing all the components and all the child components. And right now, whatever we have seen on your screen, one analyst who was talking about the impact on the share pricing, it's all at the surface at this point of time. We need to get into the child components level, because what US government is talking right now is not only the tariff on the cars, but also tariff on the parts, but also they're studying what's the localization. A lot of imports happen from child parts, imports happen from US, and then a final component or assembly get made and again get re-exported or get exported to US. So the whole value addition concept would be seen. So I think it's too early. We need to see the details. But what will happen is, in 3 to 6 months' time, in my opinion, people can start seeing method to this madness. Means what will happen is that, and the government of India also is trying to have reciprocal kind of an arrangement on tariffs and things like that. So still the clarity is not there, but it is forcing all the countries, including India, to look at our own policies. There's a huge opportunity for us to have a clean sheet approach right now and study this and insulate ourselves from this impact.
Right. Mr. Venkatram, at Renault, have you started analyzing the impact of this 25% tariff on the auto industry imports into US? And come the 2nd of April, it's quite possible that the average tariff rates that US imposes on India may be increased as well, because he's going to put reciprocal tariffs on all countries. So there may be tariffs over and above this as well. How are you bracing for the tariff impact? Do you see price increases in the auto industry?
First of all, good evening to all, but which is relating to the passenger car segment, at least from India, we don't have exports much to US, no doubts about it, not just Renault, but across industry. But the auto component industry is well established, even though the revenue-wise it's not big, but it is expected to go up drastically in future years. But with this tariff, I don't know how the balancing would happen between India and US, even though there are a lot of trade talks going on between both the countries. And it's necessary that we have to look at our country and our job creations, and we have to balance the tariff system between US and India for sure. Whether it is auto components or whether it is passenger cars or trucks or any other commodity which is related between US and India import exports. We got to look at it a very balanced approach, and I think government should look at more deeply, and we should not be at a loss, nor we should be bargaining for anything which is not beneficial for us. So that's what I would look at as, and we should take a very, very clear approach. And it's, as Mr. Rajiv Chaba said, it's a clean slate. It's an opportunity to rediscuss everything, which is well balanced for India and our job opportunities within the country.
All right. Mr. Chadha, at the EEPC, have you been able to quantify the setback that will be there to the automotive component industry? We're trying to be a supplier to the world. And for some companies like Bharat Forge, like Sona Comstar, and also Motherson, Samvardhana Motherson, US is a major revenue generator. So have you been able to quantify the impact of these tariffs?
See, it's like this. As of now, the proclamation has not come out. He has signed it, but the detailing of it is not there. So we are unable to get to know what are the HS codes which are being affected by this tariff. He has given broad guidelines, but for us to get to know the actual impact, we need to see the HS codes and work out. But in a broader sense, India's export of auto components to the US is the largest market for India. It's $6.9 billion. Whether it's not that all of it will get affected. Some part of it will be. As soon as the proclamation comes and the detailing comes, we will do an HS code-wise analysis of the export of India on these lines of items. And then we'll come to know a final number which has been impacted. But definitely there is an impact. The question is, on 12th of March, we had an impact of $5 billion for steel. And now we are now on this stage, we are going to have an impact on auto components. As far as auto is concerned, the supply is very little. It's minuscule. It's some CKD kits by Mahindra. So I would not be worried about the auto part, but the auto components part is definitely a cause to worry about.
Right. And Mr. Chadha, if I were to ask you about an overall assessment, looking at what he's done with China, Canada, Mexico, impose a tariff, a broad tariff range of 25% on all imports from these countries into the US. He's possibly going to do the same for India. He can't, on the 2nd of April, apply reciprocal tariffs on a product-to-product basis. There will be one broad tariff that he will announce for India as well. Any assessment of that has been done?
See, so as my co-panelist said, that India is hardly exporting finished goods, or some bikes and some CKD kits, to my knowledge, probably are happening. There will be some impact to those guys. But as an overall auto economy in India, there will be very minimal impact on the auto side, finished goods side. But on the parts side, we need to see. So yes, there will be some impact on the parts side, but frankly, I feel it's a great opportunity for our parts supplier and for the government, our bureaucrats, to find out, to make a really good offsetting here, and support the local industry for Make in India, and have a good approach to optimize tariffs and even non-tariffs barriers. So I think, frankly, it provides an opportunity to clean lots of things from our system.
Right. Mr. Chaba, the question that I'd also wanted to ask you, we have been seeing reports how the US, and Donald Trump has said this on record, it's impossible to sell cars in India because of very high duties. According to reports, US is seeking 0% duty, zero duties on cars, fully built cars being imported from the US into India. If that were to happen, how would that impact the Indian automotive industry?
I think our country has smart leaders, and we have to look at not only US as one country, but also we are going to do FTAs with maybe Europe or Britain, with Japan and Korea, and also we are trying to reestablish better trading relations with China. So we need to look at our interests. And by the way, we are talking about FTA with many other countries, even Mexico and Brazil won't be ruled out. So I think we need to look at the approach, what's really good for India, and have a standard, as Venkat said, I think, a clean, straight, transparent approach which benefits India. It's not only America. I think we need to have an overall wholesome perspective to this.
Right. Mr. Venkatram, at Renault, how do you see this demand from the US that do not urge companies like Tesla, like Ford, to make in India, give them zero tariffs or give them very low duty so that they can import and sell? They have to continue making in America. How do you see this as a representative, as the MD of a company which has invested in setting up a local supply chain and in local manufacturing as well?
To be very frank, the policy which was initially it's a draft though, it's not going to be much bothering for us. And we also need to understand we are heavily localized in the country and we are serving the Indian customer since last decade plus. And I don't think we are anyway scared with Tesla coming into India, because the segmentation and the approach, the way we conduct business is far, far different than what Tesla is currently doing across the world. So Indian market and Indian consumer are well aligned with the local players, and I'm sure that it will be a better bet for us to perform better than any new entrants who are going to come from anywhere else. And they are talking about EV. Currently, if you see the EV market in India is minuscule, and it will take some more years for it to develop. So it's not something a threat for us. Maybe it is an opportunity to learn, and they can be an experimental ground for us in the country to see how the EV will perform. So as such, just not Renault, but as an automotive industry in India, are not much of any worrisome aspect with respect to Tesla coming into India.
All right, we're going to take a short break, but I'll request all our guests to stay with us. We'll be right back with this discussion.
What happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time.
Is US exceptionalism ending? Do you see the US market topping out?
Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. When economics meets reality, economics is going to win. It's just, it's like when the Titanic hit the iceberg won. The European markets are all at lifetime highs. So there's something going on in Europe. There's a very old saying in Germany which goes as follows, that a lot of Germans don't believe in God, but every German believes in the Bundesbank.
Are we in for a chaotic period in the near term in markets?
I think as Aldous Huxley described in his famous book, A Brave New World, I think that's the reason I said that the world has shifted on axis. So it requires us to have new hats, new thinking. I do not believe in particularly the wealth created through gold or through real estate or through any other asset class. Equities long-term always deliver a superior rate of return.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself. Mm-hmm. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons.
All right, welcome back to News Center. We're discussing the impact of US automotive tariffs on the Indian auto market and the component sector as well. Let me go across to Mr. Chadha, Mr. Pankaj Chadha of EEPC. Mr. Pankaj Chadha, let me ask you, how do you see the impact on India's exports? One thing that could happen as a result of Trump tariffs is that globally there could be an issue of overcapacity. So will that have an impact on India's exports also? And secondly, you may have been in touch with several OEMs in the component space as well. What do you think is the industry wish list when it comes to tariff reductions in the overall bilateral trade agreement that we are signing with the US?
See, as far as the export is concerned, well, we already have a hit of $5 billion on steel and steel products and aluminium. So definitely that is being impacted. But again, as I said, it's an impact for everybody. So we need to look at the fact that whether we can get a better bilateral deal done with US than the others can get it done. So if that happens, then what happens is we can get a part of their share. I mean, let's be an optimist. So possibly we can get a part of their share if we're looking at from the steel sector. In the hindsight of in the other side of the steel sector is that we are also worried about diversion of steel, which was from other countries, which was supposed to land into USA and which will be excess and which might land into India. So therefore, that is why if you see recently we have had a safeguard duty for imports of steel into India already, a provisional duty announced already, which is 12% to safeguard that section. Then we look at the auto component one, which has just got in, the auto component, which has just got in. This total, as I said, is 6.9 billion, but what would be impact would be depending on the HS boards which are there. Yes, there would be some impact on this, but I still have a feeling that this being a niche sector, auto components, it's not something that you can immediately replace X with Y or Y with Z. So I have a feeling that possibly the final customer for at least some time will have to bear the cost. And as I said, I'm the strong opinion that a tariff war is a zero-sum game. Eventually, the loser is the customer. So let's see. It's still too early to play. Yeah, the price will rise.
Absolutely. Right. Let me now go across to Mr. Venkatram. Mr. Venkatram, as a result of what's happened in Europe, because several of these car makers who could be badly impacted, and for European car makers, UK is a major market, such as for companies like Jaguar Land Rover as well. Do you see, because of an impact, a major impact on European car makers in their domestic market due to Trump tariffs, there could be some sort of impact on India as well? And because of the flux in automotive markets and the automotive supply chains for the next 3 to 6 months, possibly because of tariff uncertainty, do you think people will hold on to investments and future capacity increase programs as well?
In my opinion, for passenger car OEMs, there will not be much of an impact. But definitely for auto components, the large auto component suppliers who are European in nature, like Bosch, for example, where they have a lot of integration. You have tier 1, tier 2, tier 3 suppliers who are getting parts out of Japan, US, elsewhere, and also exporting back. So there are very large technological parts which goes in and goes out into US. And these may be having a little bit of an impact, as everyone are stating that it is end consumer who is going to get this heat. And in my opinion, as India, we may not be getting much impacted, but definitely as Europe, our European Union car manufacturers and auto components may see the heat. But we need to wait for more details coming out of this tariff situation, because it's only a statement which has come out, not the details as yet. But once we have the details, probably we can analyze better.
Okay, Mr. Chaba, Mr. Rajiv Chaba, what would be the best case scenario in terms of a bilateral trade agreement, a win-win tariff rate for the automotive sector for OEMs? If we were to ask you for one tariff rate which is good, what would that be?
I think it's really difficult for me to say. I've not really thought through, and I definitely 70% duty on the finished goods is high. On one hand, we need to reduce that. On the other hand, we need to take care of the local investments too, done not only by local players but also multinational players in this country. So the answer is somewhere between 15% and 70%, and more towards 15, I guess.
Okay, and any non-tariff barriers that we need to focus on, Mr. Venkatram, which you feel that are important as well? And do you feel that we need to lower tariffs more on the auto sector, and what would be a good rate for you?
I don't think that I'm pro loading the rates to it, because we need to see the trade balance between both the countries. It's not that we can put up a number without looking at the trade balance. Today, if you see just the passenger car exports between both the countries, it's minuscule. And if you take the auto components, then we have to look at the trade balance, and then accordingly we need to calculate. So putting a number to it doesn't make much sense today without having the numbers in place and the detailed tariff script of what Mr. Trump is talking about.
Okay, we've run out of time, but thank you very much, Mr. Sanjay Chadha, Mr. Rajiv Chaba, and Mr. Venkatram Mamilapalli. With that, we come to the end of this special episode. Thank you for watching. Goodbye.
Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
Ontario Teachers' Pension Plan is one of the world's largest and most influential institutional investors, managing nearly $200 billion in assets globally. Their investments in India stand at over $4 billion and are growing, with a diversified portfolio that spans infrastructure, private equity, real estate and tech. Ontario Teachers is known for its long-term patient capital and disciplined investment approach. Today, I have the pleasure of sitting down with Ontario Teachers' CEO, Joe Taylor. Joe, welcome to the program. Thank you very much.
Thank you for having me.
For markets globally, it has been a time of change, some confusion, but lots of opportunities ahead as well. So with that short preamble, let me dive straight in. Joe, once again, how are you liking your Mumbai trip so far?
It's always nice to come here. I find the optimism in India really encouraging, and there's good reason to be optimistic. Lots of good things happening in the country.
Although right now, a lot of the focus is on what's coming next week, 2nd April. Trump tariffs, reciprocal tariffs day, or as President Trump has been calling it, Liberation Day for the US. I mean, as a patient, long-term investor, Joe, how are you thinking about this? Do you think, do you go with the this too shall pass attitude, or you think it'll do some durable damage?
We're probably a bit in the middle. So we are a very long-term investor. You know, our liabilities go out 40, 50 years. So the first thing you want to do is not overcompensate. And some of the impacts of the tariffs isn't really fully understood yet. Second thing to say is we try to plan to have a very diversified portfolio, both in terms of the asset classes we hold and actually where we hold it around the world. So really what we're trying to do always is to be agile, but also to be thoughtful about what we might want to bring in as new investment activity and where we probably feel a little bit more exposed. But coming back to the US, we probably have around 30 billion of investment there. So it's a material market for us, and it's also been a very profitable market for us over 20, 30 years.
You said I don't want to overcompensate, but is there a risk of underpricing the risk?
Well, our job's not to do that. You know, we do take risk and we're willing to do it. We're a mature plan, so we have to be careful. Our contributions out exceed our payments in every year. But what I think I would say is that you can overreact sometimes to news flow and things that look like they could be a material impact on your activities without really fully thinking through how it's going to land. I think we're honestly still in that mode of still trying to evaluate what to do. But certainly, if you're based in Canada at the moment, there's a lot of reflection. We've got an election coming up. We've also got quite a few initiatives that have been developed about how we continue to invest in Canada ourselves, but also how do we help trade where it may be going less into the US than it did before.
You know, you sit on top of one of the largest sort of institutional investing assets globally. My question is, which way are you leaning? Do you think this will be a bit of a break from the past, what is being proposed, you know, America first, tariffs, and it looks like they really believe in it. It's not like a negotiating tool and then you sort of propose something and walk back all of it. We will find out. But without going into specifics, do you think it's, on many fronts, not just from a market standpoint, it's a bit of a break from what we've had so far for a few decades, actually?
It does feel something different. We're actually trying to plan for something that is enduring, because that's the easiest way to be sure of probably the one with the biggest implications for an investor like ourselves. The thing I would stress is, and you did it in your introduction, so thank you for doing it, is, you know, we are an international investor.
Yeah.
We do look to try and have a diversified portfolio around the world. That's why I'm here in India. That's why we have a team on the ground here. And so my job is really to say, if it gets a little bit more tricky in some markets or some asset categories, what do we do? And that agility and that willingness to innovate and try some other things out has really stood teachers out for a little while.
The other, I mean, you know, so for example, America first.
Yes.
Making in the US has been a big sort of theme. We got this 25% auto tariffs on cars not made in the US, right? I mean, that's just one example. What about capital itself? Will capital allocation strategies change because of what is happening? You know, US versus the rest of the world. I mean, actually, in many ways, US has been the only game in town for the last few years. Will that continue to be the game in town, or you think? I mean, how are you thinking about the whole thing?
Sure. Well, it is an attractive market. If you look around the world and you look at the risk-adjusted return, America has a lot of positive things going for it. That probably means we'll try to continue to see other ways of having exposure to the US. And probably if we're not able to do that, maybe because of sort of more of an American first mentality, we'll then have to really try and work out other destinations for some of our capital. I think you also think about two other things which are very important to us. So one is, it's not the new deployment of capital, it's what you already own down there, which actually how do you make the most of those businesses in terms of maximizing their value. And secondly, we're very, very keen ourselves as an organization to invest in companies not only to get a return for our members, but to get do it the right way so we improve those businesses as we own them. So to be a good custodian of the asset, making sure it's a better business when we sell it. Now, if that's not possible because we have a different outlook to some of the American states, then that might be problematic for us.
And are we going in that direction, to your mind?
It depends what we're investing in. So I would guess if we would say we're investing in something around healthcare, that might be a little bit more controversial than trying to help on electricity, power and transmission, which I don't think is that controversial, but there is clearly a need in the US for more power to serve the growth in demand from data centers and other activities.
What about sort of regions like Asia, India in particular, China, for example? I mean, with this America First stance, what does a money manager do as a global investor? I mean, if you're in one country, if you're an Indian investor, and mostly you can only put your sort of money in India or in the US for that matter, it's different. But you have money everywhere. How does this change things for you, especially with regards to Asia and India?
Sure. Well, we've been investing in Asia for a while. It was a deliberate decision to actually give us that access to higher growth, interesting markets where there's a lot going on in technology and sort of new areas as well as some of the more traditional fields. We've paused our investing activity in China. We did that a couple of years ago. We actually made that choice because we felt we couldn't necessarily see the growth in that market in the way we had seen hitherto. And also, from our point of view, we trying to compare what we could see as a new investment opportunity there with other parts of the Asian region even. I think it's very dangerous to see India as a substitution for China. It isn't. It's a different business. It's a different market. Or there are different businesses here. But what we do see here, I think, is a country which is, let's say, disappointed with 6% growth. I mean, I'd be delighted with that in Canada at the moment, to be quite honest. But it also has a very supportive government for inward capital like ours. It has a stable and growing economy. It has the right currency in terms of it being stable to the Canadian dollar, which is one of our other considerations. And we've made co-investments with the Indian government in things like the National Infrastructure Fund, where it's allowed us to navigate what's actually coming up as investment opportunities in the near future. So we've invested in a number of toll roads as well as hospitals and other growing sort of tech businesses in the region, and they seem to be performing very well.
Just one last point with regards to tariff, and then we'll move on to what you're doing in India and where you see opportunities. The common refrain is that tariffs are bad, and it's going to be bad for trade, bad for markets, etc. But 2 points. One, if everyone lowers tariffs, it is good for trade, globally. If reciprocal tariffs result in lower tariffs for everyone, everywhere, that is one. And second, some of these policies which the US is pursuing under this new administration seems to be firing up, we got to do it for ourselves kind of a sentiment as well. I mean, you're seeing what's happening in Europe, for example, Germany, countries wanting to invest, spend more, break out of the sort of, fiscal limits, etc. Canada, I think you briefly spoke about, there's increased sort of, People are rallying around doing more for Canada, in Canada. And I mean, I think those things are happening in Asia as well, in places like China, etc. Do you think, I mean, there is one, it could move in this direction the way I'm sort of describing, or you think it's maybe convoluted and it is bad, it's all bad? What's your sense?
I think the bad thing about the current discussions from trade and tariff perspective is just the uncertainty. When you're not sure exactly where you're going to end up, it's quite hard for a lot of businesses we would potentially invest in to know how they're going to grow and deliver that return for us as a long-term investor. The second thing I'd say is around the tariff scenario is, as you rightly point out, it can increase that tit-for-tat type of nationalistic sentiment in terms of reacting to what could be, as you say, perfectly balanced trade discussion. It's probably better, in my opinion, to be framed through a trade discussion than actually, an arbitrary number that is actually being debated. But from our point of view, honestly, I go back to my earlier point. We try to stay reasonably apolitical. We would like to be able to find businesses that can plan for the future and not be particularly impacted through tariffs being implemented on them. And, I think the businesses that are probably finding it most difficult at the moment are manufacturing companies, particularly where they have subcomponent parts passing cross-border, where it's then quite difficult to know what exactly is not only the end tariff cost, but how you document for it.
Got that. Joe, what we're going to do is take a quick commercial break here, come right back, and we continue our conversation and focus on what you are doing in markets like India, what you like, and which of the sectors you find opportunity in. Stay right here. We're going to take a break. See you on the other side.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
One is timelines, but what about costs? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per drug.
Just before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both I think, two big trends. One is hard to change, which is that science builds on itself. And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, as a multinational company, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products, and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals,
Welcome back. We are in conversation with Joe Taylor, CEO, Ontario Teachers Pension Plan, one of the largest global institutional investors, nearly $200 billion in assets under management, and of course, over $4 billion right here in India. Joe, we've done the global macro, the big stuff. Let's talk about what you're interested in doing here in India. Infrastructure is an area of interest. Healthcare, you've invested in one of the largest private hospital companies in Maharashtra, right in this state. Technology has been an area of interest for you. Talk to us a little bit about your experience of investing in India and where are you seeing opportunities?
So our approach to India initially was to work out which partners would actually be the ones which we could trust to help us navigate a country we'd been impressed with for a long time, but really wanted to make sure we can make the best choices. So the National Infrastructure Trust example with the government was a really good one, helped us to really reflect on what infrastructure assets are coming up for sale. We also have a co-investment on another trust that actually gets access to privatized road that are coming out for auction. In terms of our private equity activities, we've been quite selective. The Sayadri hospital chain is a good investment for us, and we're able to scale that with further capital and further support. And really that model is to really be expert in its particular location, because it then gets the best out of having really good doctors, the right referrals, and able to help and support the patients in the right way. The technology side's really been in our younger business, what we call Teachers Venture Growth. These are high growth young companies aspiring for the stars perhaps, but certainly aspiring to be able to be attracting retail investment maybe through the listed markets eventually in its life. So then back to your question, well, what else might we start thinking about? I think at one level we can certainly scale our investment on the private equity side. We've done a lot of investing in financial service businesses, and there's lots of interesting examples of those in India that we could certainly have a look at. On the infrastructure side, the asset or the relationship I haven't mentioned, which has been a fantastic experience for us, is working with the Mahindra Group on their sustained solar business. And again, that maps very well, I think, to the power need within India, and working with a partner that's actually receptive to long-term capital like us and has worked with international investors before. So it's probably going to be a mix of picking strong partners, sometimes family offices, working in sectors that we know and we understand. I guess the question which we are probably exploring at the moment within India is things like manufacturing businesses, where I think there's a big opportunity here. I think for India, as much as any other country at the moment, there's a bit of a question of what is AI going to do to the workforce. So for a country where I think job creation is a really important component, what will AI do? Will it actually negate some of that opportunity, or will it actually allow some new jobs to be created in more technology fields?
And just one question, Joe, I wanted to ask is, so private equity, venture, infrastructure, right? I mean, three broad kind of categories. What about public markets? Or is that, does your mandate allow you to do public equities, listed equities?
So we can invest in listed equities. The team we have on the ground, which is the team I'm visiting today, they're mainly focused on our active private situation. Those are the ones I've just listed out. I think the challenge more recently for an active private investor is actually keeping up with listed equity benchmarks. If you look at the S&P 500, it's been growing by 20-ish% the last couple of years. So you apply a illiquidity premium to that, you're really looking at making at least a 25% return, which is really tricky. We also would look at listed markets and say, quite honestly, the entry pricing for some of those businesses looks quite strong at the moment. So the question is, can we find better pricing, better growth opportunities in some of these other areas? And that's really the job of the active private team. What we also are able to do with our private assets is add some value. So we have a lot of effort we put into improving the business, as I referred to earlier, helping it to be able to be consistent with climate transition and other targets we've set for the plan overall.
So healthcare is one area. Continued area of interest, would you look at more assets?
Yes, we would. I mean, healthcare is definitely a sector that we like.
Hospitals, largely. I mean,
well, it could be that, but there's a lot of drug manufacturing that happens in India as well, where I think that could be potentially one we would have a reflection around. I mean, the obvious thing about hospital is we're already doing it, so it can either expand through that asset or find other opportunities of a similar nature. I can give you a very coherent plan for India, but the honest truth is, to some extent, you react to really interesting companies that become available and actually fit where we actually have expertise. We try to stay to something where we have some domain knowledge rather than going into areas where we're really not familiar with it.
And the other one is financial services, right? These are lending institutions, largely, primarily?
Well, we've done one in the past, a business called Spandana, which actually did lending to more rural areas and rural communities, and that was a successful investment for ourselves. And we did that with Kadara, one of our fund partners. Right. We would do something similar to that again. I think we want to be always thoughtful that actually, if it's a lender, what is the effective interest rate for the third party? Because if it looks usurious, that probably doesn't sit with our own values and our own reputation.
You said you probably will do one more. Is that what you said, Joe, if I heard you correctly, on financial services?
I think we can do as many as we find. I wouldn't want to rule it into boxes into saying it's only one. I mean, back to your comment, about $4 billion for us allocated to India is not something where we're constrained. So actually the issue for us is having the discipline to make sure we pick the best opportunities and play to the strengths of the team. And if we can do that by cross-referencing it with good partners, then that's the ideal.
Is there a number that you aspire to, I mean, put to work as a percentage of overall assets, or you think as you said, I mean, you just go with what you find? I mean, in terms of you find a good asset, you invest. I mean, there's no target in that sense, or is there one?
That's one of the most often questions I'm asked around the world about what's our intention for certain locations. I probably try to answer it this way, which is to say, the danger of giving a team a capital allocation target is they go and spend it. And what I'd much rather do is just pick the best investment opportunities you're able to originate. And if that means there aren't too many because you don't like the look of something from a pricing or growth point of view, that's absolutely fine for us. We have a very strong current portfolio, and we only want to add in companies that really will add to that mix and that return.
When you said manufacturing, you mean capital goods, electronics, or you meant pharma manufacturing? I mean, what did you...
Well, I think it can be pretty broad. And also there are some great families in India who do specialize in manufacturing, either as one of the sleeves of their overall activities or the core business. And some of those businesses aren't necessarily located here in Mumbai. They're in other parts of the country. So one of the issues for us will be inevitably, if we want to look after that business in terms of trying to be adjacent to it, able to add value, we've got to be a little careful it's not too far away from our current team.
On the venture side, how's the experience been for you?
To date, it's been fine. You know, we have 3 assets that are performing well. They're very much moving towards being able to attract subsequent capital from ourselves and from others. Generally, the sort of businesses we like are ones that provide good, cost-effective solutions for larger entities. So we have one, Perifos, which actually is very good for banks in terms of automating their know your customer and other regulatory type things. That's a SaaS software model business. It's something we understand from what we've done in North America. Looks like a great company, and we're happy to be now part of the shareholder base.
Absolutely. Just last one question, energy, right? I mean, where does one go there in terms of energy investments? It looks like coal is very much here to stay in emerging markets, especially even developing countries like India, etc. But maybe now even in the US, so there is a bit of a pushback to renewables and green energy, etc. Again, do you think it's a bit of a temporary thing? How would you look at investing in energy assets?
Well, two observations. We have made clearly a commitment to reduce the carbon intensity not only of our own business but our investee companies. Mm-hmm. So we're able last year to hit our 2025 target a year early, which was to reduce those emissions by 45% from where we started in 2019. Mm-hmm. We would look at coal as honestly something we're generally at the moment helping power generation companies and other businesses to sort of reduce their exposure to, rather than trying to increase our allocation to it itself. We do a lot of renewable investment activity around the world. A lot of that is actually electricity transmission rather than necessarily power generation. We have, as I said earlier, the Mahindra Sustain business here doing solar, which is part of the power solution potentially for India. But I think transmission could be something for us to think about within India as we go forward. There's also a lot of businesses, back to your question about manufacturing, who make subcomponents for transmission. So if you take some of the key elements that you would want to have in a transmission business, there's quite long lead times in getting access to those component parts. And if they're made here in India, that would be interesting.
Wonderful. When's the next trip, Joe?
I'd like to come back as often as I'm welcome, and it looks like it's a date that's certainly been very much on offer to us by both our local partners and the government here. Most of my offices, my plan was to see them every year, so you might see me at the end of this year or early next.
Joe, you're always welcome to Mumbai, to India. We look forward to your next visit. Wonderful conversation today. Thank you very much for your time.
Thank you.
Thank you.
What's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around, and our cost of goods is not so sensitive to the end price. I think the big thing in healthcare people are watching is the generic industry, where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. It's been 10 years, or does it feel like where did the last 10 years go?
When you're on a treadmill, you're running so fast, you forget how long has it been. So it's been that kind of a journey.
Between then and now, of course, 24 to 34, suits, I can see both of you are dressed in suits now.
When we started, we used to wear t-shirts and used to go to bank branches and ask for payment gateway. At some point, we started keeping beards as well, right?
We used to stay together till at least 3 years back, 2 years back?
2 years, 3 years back.
And then what? You decided some separation
We
is
got married. So I still spend a lot more time with Shashank outside work than I spend inside work.
He's responsible for all things tech, you're responsible for all things business. So that's how the separation has worked.
That's the broad boundaries. And
Yeah.
we have a principle internally in the company called disagree and commit.
Huh.
That once you have decided and you fought, you have put your best effort, and we decided that this is the call that we are going with, then you disagree and commit to it. Next
Who's
year.
the more aggressive of the two of you?
We have a joke in the business team that if you come to Shashank and say, hey, we have done this, he says, congrats, how do we do 2x next time?
How important was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next?
Happens very frequently when you're an experimental org, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me, and also it's.
This sounds like relationship advice.
It's very important to not take things personally, as simple as that.
Hello and welcome to the Young Turks Reloaded podcast. I'm Shireen Bhan. What began as a partnership as part of a coding club at IIT Roorkee later transformed itself into becoming the foundations for one of India's foremost payment companies. Harshil Mathur and Shashank Kumar have been doing this now for a decade to talk about the Razorpay journey and, more importantly, what the next decade looks like. The gentlemen join me here on the podcast today. Harshil, Shashank, many thanks for joining us here on the Young Turks podcast. That's what I want to start with. It's been a decade and not too many people actually realize that. You were 24 when you actually decided to start Razorpay. So fairly young, and you continue to be fairly young as well. Harshil, the last 10 years, does it feel like, oh my God, it's been 10 years, or does it feel like, where did the last 10 years go?
More the second. I think when you're on a treadmill, you're running so fast, you forget how long has it been. So it's been that kind of a journey. There's always ups and downs, and there's always firefighting and fixing and doing something new. I think when suddenly somebody said, hey, it's been 10 years, we just had to pause and reflect. It's been 10 years? it doesn't feel like that. But I think when you look back at where Razorpay is today from where we started, I don't think we could have ever expected it to be this big, to be this large, and in the place here it is. We have 3,000 people now. So when you look at all of that, then you feel, maybe it has been 10 years.
It's been 10 years. And the big difference between then and now, of course, 24 to 34, suits. I can see both of you are dressed in suits now. And it was tough for you to actually find one when you were actually starting Razorpay. Shashank, what's been the big difference?
When we started, we used to wear t-shirts and used to go to bank branches and ask for payment gateway, right? And we learned to wear shirts, we learned to wear suits, we want to look older when we are going and talking to people. I think at some point we started keeping beards as well, right? So
is that why the beard? Is that why the beard?
That's how you started the beard.
this version has come in the pandemic. So
So that's also evolved. The beard has also evolved over time.
Absolutely. But it's been a fantastic time. There's no doubt about it. We have learned a lot, and we've had so much fun. I think people say there's so much struggle when doing a startup, and that is true. You do struggle a lot, and you do face a lot of challenges. But actually, what I'm really happy about is that we had an absolute amazing time in the last 10 years while building the company.
Yeah, and I want to focus on that fun as well. But what I want to understand from the two of you, and I think this is important because when you're building a company that's built to last, what drives culture? What drives the values? What drives people to work towards a common shared goal? And what drives the two of you? And the fact that you're still together. I mean, we've seen many businesses, not just startups, but, legacy businesses where we've seen a fallout, where we've seen differences of opinion, or where we've seen differences of personalities lead to an eventual parting. The two of you are very much still hands-on, very much still together. What has it taken to not just build this partnership, but also build this relationship, and how that's evolved over time? Harshal, I'll start with you.
I think one of the things that has been core to it is that we were friends much before we started building Razorpay, and we continue to be a lot more. We spend a lot more time as friends outside Razorpay, and I think that relationship. That's
and you were roommates as well.
Yeah, we used to stay together till at least 3 years back. 2 years back. 2 years.
3 years back.
And then what? You decided some separation.
We
is
got married. So we had to. But I still spend a lot more time with Shashank outside work than I spend inside work, because inside office we are busy in our own things, and there's so much to handle with different teams. But outside work we still spend a lot of time. So I think that's been the core. And I think, as Shashank said earlier, like when you build something together with friends, I think there's some bit of basic chemistry, the basic trust that's there. And to your point, like, it's not that we don't fight. We fight a lot. We argue a lot, like because we are both passionate about Razorpay.
Yeah.
And we'll both fight. Hey, I believe you should do this, and I believe you should do this. But I think the baseline of that is that we both know that we are both fighting for the same thing. We're both fighting for what's best for Razorpay. So we might have differences of opinion, but it doesn't lead to us having a conflict that, hey, you're doing something for something else. Like, the intent is never questioned. So I think
the intent may not be questioned, but how do you resolve differences? I mean, what is the conflict resolution plan or mechanism?
Yeah, that's the key thing, right? I think two things that I feel that are important in any relationship. One, you need to know where you stand with each other, right? At all points, you need to have that clarity, and that you have the best interest of the organization and also the other person in mind, right? You understand where the other person is coming from. I think a lot of people or a lot of founders as they scale up, right? I think forget about this basic part that, you don't just have to take care of yourself, you have to take care of your partner also and your people also, right? I think on the conflict resolution part, I think we have been working together for quite some time, and we have been very good friends with each other.
Yeah.
So we fight a lot, we argue a lot, but at the end of the day, right, we come together, we figure out, okay, does this thing really matter? Who is it more important for? Who is more passionate about it, right? And just go for that, and not everything is like a irreversible decision. There are very few things which are truly strongly irreversible in nature. So sometimes, we just go with the passion of the person and saying, oh, look, this guy feels very strongly about it. Let's just take a chance and see what happens, right? And other times when we say, look, this can really hurt the business. Unless we have a lot more information, unless we know a lot more, let's not go down this path. Let's come back again in 2 days and see if we still feel strongly about these things.
Yeah.
So some of these basic things honestly take you very far in
But
all
is
kind
there,
of conflict resolution.
have there been moments when you have structured formal conversations about this, that, what is the role that you're going to play? What is the role that you're going to play? Because I know that in the beginning, everyone's doing everything, right? As you scale is when it starts to become a little bit more structured and more organized. And I remember you said that at the end of the day, he's responsible for all things tech, you're responsible for all things business. So that's how the separation has worked.
That's the broad boundaries of things. So that's how teams report into him, that's how teams report into me. But I mean, it's still blurred. Like that's why we are still a startup. So if there's something going on in business which he notices that is not happening the right way, he'll come in and intervene. If I notice that, hey, we should be doing something like this in the product, we'll intervene. But I think that boundary is there for like who has the final say, right? So if it has anything to do with tech and product, he has the final say on where that heads. If it's on business side, we have the final say. But we'll still debate and discuss and value each other's opinion. But I think one thing I want to discuss is not just the decision-making part in the argument, what happens post that. And we have a principle internally in the company called disagree and commit. That once you have decided and you fought, you have put your best effort and we decided that this is the call that we're going with, then you disagree and commit to it. You don't keep going back, hey, see, I told you this. See, I told you this. See, you're wrong. See, you're wrong. Like that is what deteriorates relationships. You have to, at the end of the day, realize that, okay, you've spent your time, you've made your argument, now disagree and commit. So now once we've decided decision, it's both of our decision. It's not like this was my decision and not yours.
Yeah, well, that's an important point, and I think that works in every kind of relationship, and that's an important one. So you don't come back and say, I told you so. I told you so. When was the last time you took a big chance on him, even though you may have disagreed with what he had to say?
I don't know if it is like a last big time.
There's so many times, right? I know on the business decisions, there's so many times that
it's
like
probably,
we are going through the annual planning right now. There's so many calls we are taking on what we are going to do next year and what we're not going to next year.
Who's the more aggressive of the two of you? When it comes to targets and goal setting?
Targets, I think he's a little bit more aggressive. Really? Because I handle the business team, so I'm a little bit more empathetic.
So he's actually setting the targets for you.
So I get a bit empathetic that I know these guys are putting a lot of effort. Like
I have a habit of just pushing farther in general, and now that we are more mature as an org, right? So there needs to be a lot more predictability.
We have a joke in the business team that if you come to Shashank and say, hey, we have done this, he says, congrats, how do we do 2x next time?
So now Harshal is more a voice of reason that, we need to figure out like, okay, we need to hit our quarterly numbers and all of that, right? And more like how a mature business needs to behave. While I'm always pushing, like I think we can do more.
So he's more ambitious that, hey, let's take an ambitious goal. It's okay if we miss. And I'm like, no, let's take a goal that we can hit, because like I'm trying to prepare ourselves to a point where we can hit the goals we set ourselves.
Okay, so since we're talking about ambitious goals, let's talk about the next 10 years. I mean, a lot has been achieved in the last 10 years of Razorpay. As I pointed out today, you're one of the foremost payment companies in India. 2 or 3 big events likely to fructify in the next few months or perhaps over the next few years. Let's start with the reverse flipping. And this is going to be a big one. It's going to come at a big cost as well, Shashank. But how important was it for you to move domicile back to India? What was the motivation there?
Look, I think the primary thing is that India is our home country, right? This is where we are very well known. This is where all our customers are, right? This is where we have all the operations as well. The main reason for domiciling in US, 10 years ago, right, was with respect to fundraising, right? Because at that time, all the fundraising used to happen through US investors. It was very easy to go out and raise money there, right? But now, when we think about it, right, when we think about where do we go public, it's a very clear answer that we will go public in India, because this is our home ground, right? And even from the size of the business, right? The main business completely is in India. And these two factors together made us decide that we should be an Indian company. Like, we are through and through an Indian company. So just on there's no point on just on paper it being domiciled elsewhere. It should be part of India, and that's why it's a very important thing for us.
It is a very important thing for you. I'll come to the IPO in just a second, but the process of actually ensuring that you do reverse flip, and I would imagine that it's maybe a question of a couple of weeks now before you hopefully get all the regulatory approvals to reverse flip.
Fingers crossed. We don't control the timelines, but hopefully it happens.
You can't
soon.
control the market, the regulator, or the timelines, right?
Yeah, it's a government process, so we hope that it finishes soon. But yeah, as Shashank said, like, I think there's not even a second thought about it. Like, once we started.
But what would have been the downside of continuing to be?
See, if we have to go. We have always been clear that we were building this company to go public at some point of time. And at some point of time, when we want to go public, we want to do a large independent public company. Where do we want to be, right? And this is the market where everybody knows us. There's no point of us going public in US and then doing roadshows every year, explaining to everyone what we do in India. Nobody knows us there. Versus the market here, where everybody is using this in championship and form, seeing us here and there. They understand what we do. It just makes a lot of logical sense. So it is going to come at a heavy cost, but it's that's been
factored in.
We have factored in, and it's a heavy cost, but it's a small price to pay. honestly, in the
A
large scheme of
heavy
things.
cost, but a small price to pay for an eventual IPO here in India. What's the timeline that we're talking about? Shashank, I'll start by asking you. I mean, PhonePe is, finally decided that it's going to go the IPO route. What about Razorpay? When are we looking at a possible listing?
Yeah, I think we haven't started thinking about the timelines in that sense. We are still waiting for the reverse split process to finish, right? That itself has its own set of timelines, right? But directionally, what we are feeling is that, we'll have a lot more, proof points for the new areas that we are expanding into in next 2 years. And at a group level, we want to ensure that we get to profitability, right? So those things should happen in due course of time.
So group level profitability, what's the goal you've set? I'll ask Harshil about his goal.
No, that's a simple goal. There's no 10x there in that sense, right? That the group needs to become profitable. But yeah, at some point we will set ambitious goals for profitability as well, beyond just being a simply group level profitable company, right? So whenever those things happen, after that we'll start thinking about going public, and I think that's minimum 2 years away, right?
A minimum of 2 years. And so, as you get ready for an eventual listing, are you thinking in terms of what you need to change? You're talking about maturity and stability within the organization, visible line of sight as far as profitability is concerned, consistency thereof as well. So how do you prepare now from where you are today to where you want to be 2 years on before you list?
So internally, we have started operating as much as possible as a public company. So we are preparing our teams for that, leadership and everyone else downstream. So we set quarterly goals, we set the annual quarterly targets, and then set the quarterly goals, and then our board reviews every quarter on how much have we met those targets and are we being consistent about it. I think the online payment business, which is the largest business for us, is fairly consistent now, and we are able to predictably set goals for ourselves and predictably hit them. I think the newer areas of business are still getting to that predictability, and that's why we need 2 years, because those areas need to get that time of maturity. I think those are the areas where we are aiming for 100% year-over-year growth. So when you have such ambitious goals, then it's hard to keep it absolutely exact. But I think that maturity will come in, as Shashank said, within the 2 years.
But do you fear that, this business of having to deliver on what you're expected to deliver every quarter could perhaps stifle?
I absolutely fear. You're right. And that's something that I think a lot of founders talk about as well. That how do companies change once they go public, right? And somewhere I feel, the short-term nature of the market, right? Inevitably forces companies to become very short-term focused. Like you just have to think about hitting the next quarter numbers, right? And that can take your eyes off the long-term goals, the long game, and open you up to disruption, right? So that's our job as founders. How do we balance that out? How do we ensure that the short-term goals, while they are getting that attention, we are still innovating for the long term, because we want to build a long-term company. We are not building a next quarter company, right? We are building a 10-year, 20-year company. So yes, you perform on a 3-month basis. You go out and share everything on a 3-month basis, but you are building for next few years at the same time.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
One is timelines, but what about cost? I mean, how much does it cost to put out a drug in the market today?
A little over $4 billion per drug.
$4 billion per
Just
drug.
before you make one sale. Yeah. So it's hugely expensive and complicated and slow. So on average, the industry takes about 14, 15 years. We're about half of that, but we spend about the same as others. And that is a function of both, I think, two big trends. One is hard to change, which is that science builds on itself.
Mm-hmm.
And so each new drug has to demonstrate benefit over everything that came before it. So we actually have to make those comparisons. Of course, there's a multi.
You're a regulated entity and you're operating in a regulated market where many decisions are not of your making, many decisions are of the regulators making, and you've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put on you. So how do you cope with your destiny being in the hands of someone else in many, many ways?
I think it's at the scale at which we operate and the industry at which we operate, like I think regulations are a given, and it's rightly so. Like payments and financial.
You don't
world,
feel that there's overreach?
No, not absolutely not. I think the financial world, I'll say it is like coming of age. When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively, and it's reached a point where it's important enough, critical enough to the national interests that there needs to be regulations in this space. So I think it's kind of coming of age. If you're a mature industry, large industry, almost every large industry in this country in some ways has some sort of regulation.
So the guardrails have to be put in place.
To be put in, especially when it comes to financial matter. We're still a country where people are still learning how to trust digital payments, still learning how to use digital payments. How do you build that sense of security for people that you don't have to worry about where my money goes and what are the rules set around it? So I think those guardrails are needed, and I think.
But do you believe that the brakes perhaps have come on too hard? Because that's at least the feeling that many of your peers are sending out.
I mean, when you drive a car, right?
Yeah.
I mean, sometimes you accelerate, sometimes you put a brake, right?
Yeah.
So at the end of the day, that will keep happening. Right? I mean,
and that's part of the
and that's part of the
cycle
of the cycle of doing this, right? Sometimes you are in boom, sometimes you are in bust, right? I think as good founders, you can't say that, look, this is not in my control, right? Because it's not that you can't read the winds, you can't understand where the regulator is coming from, where the government is coming from, where your fellow founders are also going.
So you have to
towards,
anticipate
right?
and preempt the action.
You have to anticipate, you have to learn, you have to adapt. And I think that's for the good, right? Because, at the end of the day, I think all of us believe that India financial market is some of the most dynamic in the world. The fintech sector in India has done really well, right? So that also can't happen without the regulatory support.
Yeah,
so
absolutely.
Where I feel, there is a gap, to an extent, right, is the regulators thinking and the eventual action. Right? People see the final action and they sort of panic. I kind of feel like there needs to be some level of evolution that today it's either green or it's either red. There needs to be something in between that the regulator can probably indicate to the market.
Amber.
Yeah, some sort of amber, right? That, hey, like, look, this is where some of the things are going wrong.
Yeah.
So the media, the investors, all of them can anticipate that, look, this is on that path, right? And this is a chance for the company to correct. Today they do that, but probably more internally, more behind the scenes.
Yeah.
And I think people don't get an opportunity to read through that. So that's where I would say, at least I would want the regulator and the industry to evolve.
And what has that meant as far as the way that you're operating your business, Harshal, given the fact that, there have been changes in the regulatory landscape? There could potentially be more changes. I mean, there's a discussion now on whether MDR is likely to return or not. So, how are you looking at what is happening around you externally and then evolving your strategic thinking internally?
I think, first is, as I said earlier, we have to be adaptable. India is a dynamic market. And things will change, and we have to assume things will change rapidly and suddenly. And how do you create a business in a way that you can change priorities? For example, when we went through embargo, we restructured a lot of our business operations to prioritize on other areas that we were growing on. We were able to still maintain a healthy growth rate even in that year. when we came out of embargo, we reprioritized again, and we said, how do we get every business that we lost in last 1 year? How do we get them back again? And almost 80% of those businesses came back to Razorpay. We had lost almost for a year. Simply because you were able to reach out to all of them, call everyone, and
I believe you had war rooms operating 24/7.
Yeah, we called every single customer who signed up for us within last 1 year and said that, hey, we are back in action. Do you want to come back and start using us? And majority of them did come back. So I think that you just have to figure out how do you reprioritize and move your things around, and that's what a startup is. How do you change your priorities suddenly and move your ship around quickly? And that's what differentiates us from a lot of large incumbents.
So I want to understand from the two of you, how are you looking at AI, generative AI, what it means for the organization, what it means potentially as far as reaching out to a larger market is concerned? How does it change you, and how do you use it to change yourself?
See, first, it's a fundamental change. So you can't do it as a outside the core. So like I'll give an example of when digitization and computerization happened. A lot of teams would form tech or digital teams whose focus is to digitize outside the core, right? That doesn't work. So the truly successful digital businesses are businesses that are built digitally inside out, which means every team is using technology, not one team dedicated to using it, right? Same applies to AI. So you can't say that this is a team that's dedicated to build AI and everyone else does their job. It has to go at a fundamental level. Every team needs to start using AI in a big way. So I think that's one big driver. Second is, I think, like the world is going to be much more dynamic than it was before. So we were speaking how dynamic India has been in the last 10 years. The entire ecosystem is going to be much more dynamic from here, because the time to build, the time to service, the ability to personalize is going to change massively because of AI.
Are you starting to see results of that already?
Massively. So like talk about customer servicing, right? Like almost 80% of our tickets coming in are handled by AI first and closed by AI. Like only 20-30% have to flow to a human and be managed there. So that's a massive change. And like the way, and this is only going to get better. Today it's the first level of servicing. Tomorrow it's going to be a second or third level of servicing is going to happen with AI. So the world is going to become much more dynamic from here.
It's a change that I think everyone has to deal with. I'll tell you some stories. I think we had one of the designer, we make slides for our presentations or, any kind of public speaking that we do. I think it always used to be a struggle in terms of making those slides. And now, one designer is able to make slides very easily for a lot more than was earlier possible. Our marketing team is creating videos using AI, which used to earlier take lakhs and you have to work with agencies. And now one person can play, one person itself is like an agency completely in their own, working with AI. And these are at the periphery of tech, right? In the core tech, I think that it's going to be a significant change again, and I worry like how much companies in India are ready for that. Because historically, most of the technology comes from US or Europe, right? And increasingly now, we are seeing China do wonders there, right? So while I think we are trying to, do well on that front, I still feel as a country, as an ecosystem, we can do a lot more.
So, when you say that as a country and as an ecosystem, we can do a lot more, what do you think we should prioritize? Because very often the conversation boils down to capital, and do we have enough capital requires, so much capital.
I
now
that's
the conversation
a very
post
bad
deep,
argument.
post DeepSeek, the conversation is not so much about capital.
Exactly,
so
right?
what should we prioritize?
See, you have to see, right? How many R&D labs do we have in the country which has really well-paid folks doing long-term research or doing short-term research also, right? I don't think we have our best minds in those labs working on things that is like cutting-edge technology, right? If you look at startups, right? I think startups really do well in terms of focusing on here and now problems, right? But how many tech companies are able to focus on long-term technological problems? We still don't have those mechanisms, that kind of cultural element in place to allow for that. In our company now, we are in a condition now to take 3-year out bets, 4-year out bets, but there's still, I would say, a very handful of companies who can do that, right? So in terms of retaining talent, in terms of creating extremely highly ambitious or highly good, well-paid R&D labs, right? In terms of government giving grants for like really top-notch research, I don't think that infrastructure is still placed in the country, and we should think about it. We should reflect on it.
Well, speaking of the bets that you're likely to make on account of AI, and you talked about some of the projects that are currently underway at Razorpay,
what is this going to potentially mean for you 5 years on?
In spite of, like we spoke earlier about it, we are preparing ourselves for an IPO and we have to do a quarter-on-quarter focus. We still keep some space for moonshots. That, okay, these are the long-term projects. These are something that's not going to give an outcome in next 1 year, next 2 years. Maybe it gives an outcome in next 3 years, 5 years. But you still keep some space for that, because otherwise you're not preparing yourself for what the world is going to be like. So an example of that is, like, we launched agentic AI payments, which is, we believe in next 2-3 years, we'll reach a point where AI will not just search for things for you, will actually do commerce for you. So you'll say, hey, buy me a ticket to Delhi, and it'll find you the best ticket and buy it for you. Now, those kind of changes will maybe take 2 years, 3 years, 5 years. But if we launch the SDK for it today, right? So it's a moonshot. We don't expect it to create an outcome tomorrow. But it is going to be a single driver when the world is ready for it, when the ecosystem is ready for it. We are there first. We are there to enable that ecosystem first. So tomorrow, somebody is building an agentic platform for AI to chat and interact and buy things. They can use Razorpay starting today. So those are the kind of things that we can do.
So how many moonshots are on the table at this point in time?
Oh, massive number. I think there's at least 10, 12 things that we've launched in the last 6 months that won't produce any outcome for next 1 year. Like, I think those are the things that we know that are for the long term, but we built it out today because we expect the ecosystem to move in that direction. Another example.
And you don't know which ones will work, which ones won't work. Right? So you also want to, let the people experiment and fail. But when some of these things do create an impact, I think it changes the game in a meaningful way.
Origins of Razorpay, and I know both of you have spoken about this publicly, about the 99 rejections before the 100th one finally succeeded. But to come back from a low, to come back from a setback, and to pull yourself together, collect yourself and say, okay, you have the resilience to be able to move forward, that's integral to the culture, isn't it? I mean, how have you been able to code that into the Razorpay culture? Your own experiences of failing, falling, and moving back up.
Yeah, I think I don't believe in this rejection concept.
Because the 99 times have taught you that it doesn't matter.
It's not that, right? I mean, it's something that is probably not important for that person. It's something that is not important.
It's not about you,
right? It's not about me, right? It's not about me, and also
This sounds like relationship advice.
It's very important to not take things personally, as simple as that, right? I mean, if you fail 10 times, so what? See, here is the important thing, right? Which most people don't understand. If you succeed once in a big way, that is much better than failing 100,000 and it doesn't matter how many times you fail, honestly, right? I think the issue happens, I mean, the reason things go bad is because people tie to their self-worth, right? Like, if someone is saying no, it's okay, it's not important for them, fine. But there are so many other people, there are so many other institutions, other organizations, right? And that's what I tell our people as well. Look, do you want to be incrementally successful or do you want to go out and do something bold, right? Both of them takes equal amount of effort. Honestly, like doing a 10% improvement and doing a 100% improvement, right? But it's just a frequency. So if you are aiming higher, you will fail. Let's be okay with it.
What gave you this ability to be irrationally exuberant, to be irrational optimists? Because you don't come from business families. I mean, where did this come from? Where did this tick come from?
I think one is that both of us worked in large MNC's job for a period of 6 months. I worked for 6, 7, 8 months. He worked for a year. And in those jobs, we were very frustrated because we really hated the incremental approach, right? So both of us would talk to each other in the evenings and say, like, what is this? Why are things moving so slow, right? Like, you'll work in a large MNC, tech MNC, and you'll build something that's going to be shipped out after 3 years or 4 years. So you're building stuff for 4 years out, and that approach, like, we were just personality-wise, we were very uncomfortable with that approach. So we are both impatient and very impatient by nature, and that we just want things now and here and now. I think that's one. The second is, I think, also a lot of support from our families, right? So when I decided to leave my job, I called my dad and said, hey, I want to do this startup and maybe it will fail, maybe it won't, I don't know. And I was also stressed, like, I don't know if I want to take the call. And the first thing he said that, it's okay, give it a shot. Worst case, you will come back to a job. Like that's the worst case outcome. You can always, and he had that trust and faith in me that, okay, I can always find a job again.
It helped to have the IIT tag.
I think it's partly that, but partly also that he had enough faith that, okay, you can apply to a job and maybe get, you have enough caliber in you that you can get selected for a job. You can get an interview.
Mine had a very different
different story there.
Yeah.
What did he say?
You know, I was working at Microsoft in US, right? And you know, I'm from Patna, Bihar. So I think it's a dream come true for me and for my family that, you know, you get a good education and you get a job abroad, right? And you get the NRI status and all of that. You know, the family is really proud and talks about it in the community. So when I said, like, you know, I'm thinking of leaving the job and doing a business, right? And I don't think, you know, no one in my family is probably like doing a startup or doing that. I think, like, okay, what will you earn? You know, because that's like probably a parameter, right? And said 0. So
Dimag kharab ho gaya tumhara.
Yeah, exactly, right? So kya kar rahe ho beta, right? Itna padhaya to hai abhi. So and I was like, I don't think logic will work. So I asked my father something very different. I told him, look, I'm coming back to India. You know, do you want me to be near you or otherwise I'll be
emotional card. Well done. That's a lesson for those of you who are planning to have this difficult conversation with your fathers and mothers.
No. You know, I definitely want you to be in India. That was at least there. Like, you know, I want to be near me. I want you to.
No, dad can say you don't want to be.
Yeah, I want to spend time with you. I want you to spend time with me. So he was like, we'll figure things out. I think it's okay.
Yeah, so that did the trick. That won him over.
In fact, my father, even in 2016, when I came back, right, a couple of years later, still told me, do you think you want to give UPSC? Even when we had raised funds and everything, because I don't think he understood like what we were doing, what business we were doing. He was always worried, like, why, you know, my grandfather especially was worried, like, why are people giving money to you?
I had an interesting conversation. I told my dad that we've got $11.5 million of funding, right, like with a Series A that we did. He said, okay, when do you have to pay it back?
You know, global industry, we're not really for tariffs. We think actually both non-tariff and tariff trade barriers should fall everywhere so that everybody can enjoy the benefits of products and we have global competition that's balanced and fair. If there are tariffs on pharmaceuticals, I understand what's being discussed is more of a general tariff situation. For us, that has limited impact because we have very regionalized supply chains already. We can move things around. And our cost of goods is not so sensitive to the end price. And I think the big thing in healthcare people are watching is the generic industry where the cost of producing the medicine is much higher compared to innovative. Our biggest cost is R&D. Yes. They don't have R&D. So that might affect medicine costs in the US or in other countries, and that would be that would not be good, I think.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
You're expanding, not just with the kind of products that you're offering, but also expanding into markets outside of India. And that's what I want to talk to the two of you about. The global ambition, the global aspiration. I mean, how aggressive are we likely to see you be there? Singapore, Malaysia, where next?
So this is one of the things when I said that there are things that you do for not for the next 1 year, but you're doing for the next 3, 4, 5, 10 years. I think international is one such thing. So a lot of the outcomes on international side will take a lot of time to happen because we are going into new markets, we're setting up our base there, we're expanding, and a lot of these markets, I'll say, are much behind India when it comes to the digitization curve. And that's the reason we're going there, because a lot of the markets in Southeast Asia in particular are looking up to India in the way UPI has been built out here, the way digital payments adoption has happened here. And a lot of these markets are trying to replicate that journey. And that's an opportunity for companies like us who have seen that journey play out in India to go there, embed ourselves into those markets today. So that as these markets expand, as these markets replicate the journey, we are already there. So I think from an ambition perspective, we have large ambitions there. But from an outcome perspective, we don't expect outcomes to happen in next 1 year. We're going to take a lot of time to build those out in the right way. And as a lot of these replicate India's journey in the next 10 years, we'll be able to build something as meaningful in the next 10 years in these markets.
So a global brand, is that the aspiration now over the next 10 years as far as Razorpay is concerned?
I would think so, yeah. Like, the problems that we have solved for businesses in India, I think those are universal problems, right? And, the unique thing that I think about our country, right? I think we built very low cost infrastructure at the highest level of scale, highest level of quality. So, whether you think of something like ISRO or Geo or UPI, I think we have the lowest cost infrastructure in that sense.
At population scale.
At population scale, right? And I think we should export more of that because I think the world will really love what we do here, right? I don't think we do enough of it. So if we have done so well on UPI, on payments in India, I think most of the businesses outside there, most of the countries outside there need that. And that's the belief that we have, that we should be able to take it globally.
So next 5 years, where could we see you? I mean, as I pointed out, Malaysia, Singapore already forayed into. What's the ambition? What's the aspiration?
A lot more in Southeast Asia. So, Indonesia, Philippines, Vietnam, Thailand, all of these markets are going through very similar trajectories. So
but what's the experience been like of getting started in some of these
Malaysia
markets?
has been really good. That was the first market that we went to. We went through an acquisition, and it's been a really good outcome for us. We have launched in Singapore just last week. And it's still early, and Shashank was there, and it's still early, but we are seeing a lot of excitement in the market, particularly in the cross-border side. So it's been a great, and that's given us more confidence, right? Like when we started in Malaysia, we thought maybe it will be a 2-year, 3-year journey to get to a base level, but in 6 to 8 months, we could reach a level of scale where we said, hey, it's going better than we anticipated.
I want to ask both of you, because you've done a fair number of acquisitions in the last 10 years. EasyTap was, of course, the big one. What does it take to acquire a business? What does it take to integrate a business?
You can go very wrong in acquiring companies, right? Few things that need to align really well, right? One, is this complementary to you, or is this something that you truly want, right? Or is it a fad? Like, sometimes I feel like you can acquire companies because just in that moment you feel something is important, but long term it won't be, right? Second, I think the people, you need to have really good feeling about the people, right? The culture of the organizations need to be similar. If you're acquiring a company which has a very, very different culture, it'll be extremely hard to integrate, right? So that part matters significantly. And a third, which I think we look for, is that we want to acquire companies which are technology first in nature, right? Because that's, again, goes back to that's our DNA, that's our outlook. So being tech first, we know that's how the company is going to operate, and we can very easily then, merge the two organizations instead of force fitting it. And
that never works.
Never works out, right?
Yeah.
So these are the few things that we look for. Do we really think this is important for us? Do we have really good people, and then a DNA and the tech first?
So since we're all talking about AI at this point in time and AI capabilities, is that an area, a space where you're potentially scouting, looking around for candidates?
Do you think we'll find many in India?
I don't know. You tell me. You tell me. But why just India? I mean, you could look globally as well, right?
I think we'll opportunistically keep looking out for capabilities, something that aligns with AI as well as what we want to do. If there's something interesting, we'll be open to it, and we keep evaluating.
I've been walking around the office looking at all the slogans that you have on the walls. Right behind you is "Future in Progress," and of course, on a wall next door, it was, "If you don't have a seat at the table, then build a longer table." So, I want to understand from you. I mean, where do you find yourself on the table today? Where do you believe this table could be the next 5 years? I know you've spoken about $1 billion in revenue by 2030. That's the kind of aspirational target that you've set out for yourself. But, where are you at on the table today, Shashank?
Let me talk about the goal that we go after, right? I mean, today India is like a 3.5 trillion economy, right? And it'll grow to 7 trillion economy, right? And when we talk about this GDP, it comes from businesses. Right? That's how it works at the end of the day. And our goal is how we can help businesses accelerate, right? How can businesses become more digital, more productive, so that they can, do better on what they are doing. They can create more jobs, and that will bring prosperity to the nation. If you look at it in the context of our goal, I think, we have played some role, right, in the last 10 years. But I think entrepreneurship is still difficult, right? We're still very far away, because I would really want that, every person in India thinks about entrepreneurship as a career. Every person in India thinks about taking a moonshot at least once in their life and going after it, right? And promoting that. So if India as a nation is continuing to grow, I think we have a large role to play there, right? And that is why, if we are able to do good on that opportunity, if we are able to do good on our goals, then I think $1 billion in revenue is going to happen much faster, even compared to what
much faster than 2030.
I hope so, yeah.
While the opportunity is large and there's plenty of headroom for growth, let's talk about profitable growth as well, because you said at a group level, you're still to attain profitability. So on the payment side, I mean, things are moving steadily. What is the forecast or the guidance, if I could ask you that, as far as the payment side is concerned, and on some of the other, businesses that you're building out?
So online payments is profitable today, and it's scaling well, but it's still not, like when you say stable, it sounds like it's a slow growth rate. It's still growing at 40 to 50% year over year.
Yeah.
So that's still a massive growth happening on the core online payments business, which is the largest business we have, almost 70% of the business. On the non-payment side, which is about 30% of the business, which is offline payments, RazorPay, neo-banking side, international, and Engage, which is our marketing side. All four of them are still early days, not profitable on a unit economics level, but each of them is growing at almost 100% year over year. So that's the kind of growth that we are seeing there. And that ensures that entire RazorPay is growing at almost 60% plus year over year. So that's the kind of ambition that we have. From a profitability perspective, we expect each of these business units to be profitable before the next 2 years.
Have there been particular entrepreneurs, founders, Indian or outside, that have been kind of the North Star for you in terms of how you wanted to build your business, how you operate and think?
YC was the first one, and I think in YC there was Sam Altman,
Paul
Bukai,
who
were really good early mentors for us.
So Sam Altman, did you think that Sam Altman and OpenAI would be the phenomena that it is today when you first met?
He's an impressive
I
guy.
think we always thought Sam Altman is a phenomenon.
Yeah.
In himself.
Yeah.
He's a really
He was the head of YC when
standout
we were there, so.
guy, right? The OpenAI thing, I don't think anybody could have predicted.
But he's a guy you could, whenever we interacted with him, we were so impressed that we knew that he's going to do something great. Nobody could have expected OpenAI. Paul Bukai, who's the guy who created Gmail, right? So he was one of our advisors, and the kind of advice he would give. Closer in India, I think we had Kunal, who was one of our earliest investor and earliest angel investor. We would go to him for almost every 3-6 months for advice. Hey, this is what we're thinking, this is what we're doing. How do you think about this? So he's been an early mentor. So there means a lot of folks like that we have gone to. And in India, we also went to Bansal's a lot, Sachin Bansal and Vinny Bansal, to take advice and stuff. So there have been a lot of folks, and I think that's a great part of the ecosystem today, that you have a lot more such founders.
You know, business advice is one thing, but life advice, who do you turn to for life advice?
I think we turn to each other.
Yeah?
A lot, yeah.
We do discuss about our life situations quite a bit, right? But otherwise, I think family plays a role, friends play a role. I would honestly want a lot more founders to discuss, about their lives as well. But I don't think, I still see, a lot of founders at a place where they can open up easily. So that's still very hard, I would say, for people, right?
Who gets more anxious of the two of you when things are not going in the way that you expect them to?
It depends on what things are not going
Yeah,
well.
I think both of us get anxious at different points of time. We actually have a rule that we shouldn't get anxious at the same time.
How do you codify that?
But
it just kind of serendipitously happens.
Naturally happens. When one guy comes anxious, the other guy is always like, it's okay, we'll manage. It just naturally happens. It's like in a relationship also, when one person is stressed, the other person has to play the comforting role.
Yeah.
I think that's what happens in our relationship as well. Like when sometimes he comes stressed and I play comforting role, it's fine, we'll deal through it, it's fine. So most of the time it's them.
Thankfully, we don't get stressed about the same thing.
About the same thing. That's good. That's good. But how do you decompress? I mean, it is an all-consuming thing, right? I mean, being an entrepreneur, being a founder is an all-consuming exercise. How do you decompress? What's the method?
First is you have to find things, you have to have things outside work, right? And it becomes hard. Like in the early days, you don't have anything outside work. And same for us, like you're working 20%.
But was there a realization that, my God, I become one-dimensional?
I think there was a point where you start getting burnt out, right? Like you start feeling that, okay, I'm not stepping away from work, and then everything is with work. So if something goes wrong in work, it affects your mood, it affects your state, it affects everything. You're not able to live your life normally, and the outcome of that is it lowers your productivity. So the challenge is that you're not able to also work well when you're in that state. So you have to find a way to separate out. I think, for example, for me, I think we have 5 days in office, and Saturdays only for spillover things where I'm meeting founders and stuff. But at least a Sunday I keep for myself. That this is a day that I'm.
So what is a Sunday for you like? A typical Sunday?
Yeah, I'll do something. I'll either go and play badminton. He also plays that, and then sometimes I go for swimming. Sometimes I go for I go for motorsports a lot. So I go for go-karting or something like that.
What about you, Shashank? How do you decompress?
I have a hard time decompressing, honestly. I usually want to be active. Okay, can't sit in one place, that kind of thing. So I would go play sports. Generally, I'll, few years back, I used to, I was learning salsa, and I would go for salsa, continue going for salsa classes. Then few years, 2-3 years ago, I went for swimming classes, and I started learning swimming. So usually for me, it's like, I need to do something which is outside of work, as Harshal said. Like that has become important, but I still need to do something, right? And that acts as a good thing for me.
So you're getting back to the dance floor.
I hope so.
Is that part of the plan?
Yeah, hopefully next few months I do want to go back.
So if I were to ask you to end with, a slogan that defines where you find yourselves in your journey today, and more importantly, what the aspiration is, what would it be? What would your slogan be on one of these razor pay walls?
I think the core piece right now is that I think we're sitting on a massive opportunity. There's a massive opportunity ahead of us. In terms of what we have done or what we have achieved, it's not even 1%. So I'll say what defines us today is that we are excited and motivated, but still far away from where we want to be.
Excited, motivated, still far away from where you want to be, Shashank?
This is my life philosophy. I don't think it has changed in the last 10 years. Like, we are here to make a difference, right? We are here to keep doing something amazing, and I want to keep doing that. But now I also want to help others do that more and more, and that's what, as Razorpay, we should be doing. We should be figuring out how, as Razorpay, how can we help more entrepreneurs and help create more entrepreneurs in the country.
Well, we wish you the very best of luck with that dream, with that ambition and that aspiration. The very best of luck with Razorpay's future journey as well. Thanks very much for joining us here on the Young Turks podcast. We look forward to being able to check back with you on each of those things that we talked about. But of course, the big one being the IPO, but it's still a distance away if I go by what the two of you are telling me. Perhaps we'll speak with the domicile shift earlier, of course, but many thanks, and we wish you all the very best, both in life and with work. With that, it is time for us to wrap up this edition of the Young Turks podcast. From all of us here on the team, thanks very much for watching. Do stay tuned. There's a lot more coming up right here on CNBC-TV18. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Hello and welcome to the Global Dialogue. I'm Shireen Bhan. Two trends captured public imagination through 2024. Artificial intelligence and the big breakthrough as far as weight management is concerned. Mounjaro, that's the drug from Lilly, has just officially been launched here in India. To talk to us about the potential, about the road ahead, and what we could expect in terms of more breakthroughs is the global CEO, Dave Ricks. Many thanks for joining us here on CNBC TV 18. It's a pleasure having you on the program. Let's start by talking to you about Mounjaro. You've got the first mover advantage. You've launched here in India. What do you believe the headroom for potential growth is?
Yeah, well, such an exciting day for our company in India, for Mounjaro, and especially for patients who are looking for a way to control their diabetes better or their obesity. And India now joining a list of countries launching this product, making an impact in so many ways in society. So, you know, what could be the impact? Obviously, it's a very large opportunity. There are, the prevalence of diabetes is very high in this country, and that's a serious condition where we need good medicine for. Mounjaro has proven to be very effective in controlling diabetes and helping people lose a little weight with diabetes. And then for obesity, which is almost like a precondition to other very serious health problems, we're seeing really strong uptake in many markets where we've launched, and I would expect that here as well. Unfortunately, overweight and obesity is a reality in India.
But it's not seen as a disease.
Yeah, but it actually is, by WHO standards, classified as a disease. And even if you want to argue with that, it's totally clear that being obese leads to more diseases later. Over 200 adult conditions, and some studies have shown almost 40% of adult disease is triggered by obesity. So it's important people manage their weight, hopefully with diet and exercise, but if they can't, now there's a medicine, Mounjaro, which can really have a profound effect on their body weight.
You know, before I talk about the future of Mounjaro and what you intend to do with it here in India, I just want to go back to the backstory, because this is not new. We've had GLP-1 and, you know, it's 2006. In fact, you had it on your annual report in 2007 on the cover. Why do you believe we've seen this kind of a breakthrough, and what does it mean now in terms of future adoption?
Yeah, as you mentioned, this class has been out a long time, and there are people with questions about is it new, is it safe? We actually know a lot about the GLP-1 mechanism and its safety. No drug has no problems, but we know what they are. So I think patients and their doctors can talk about those risks. It's not like there's unknowns there after 20 years of experience. But what we've been doing is improving that original idea. And sometimes in medicine we think of a breakthrough, maybe like the COVID vaccine that came all of a sudden and helped. But most medicines are more of a step-by-step improvement. We launched exenatide in 2006. It was a twice-a-day injection, so that was inconvenient. So we made a weekly injection called Trulicity, which is available in India today. And we noticed that by making it weekly, there were actually fewer side effects at higher doses. Why? Because the drug is sort of tolerizing once it's in your body. Then we added another incretin, so GLP is one, something called GIP for a dual-acting medicine. That's what tirzepatide is, or the ingredient in Mounjaro. So each step improving to the next, and we're seeing more weight loss, more profound health benefits, better diabetes control with each improvement.
But, you know, and I think this is a number that you gave us in a previous interview that I saw, where you said between Novo and you, it's still about 20 million people globally using some form of weight management drugs at this point in time.
And diabetes.
And diabetes. So what do you believe is going to lead to higher adoption? And do you have the capacity at this point in time to cater to more demand?
Well, capacity is key. Consumer awareness, physician awareness, also important. Payment and support from health systems where that's appropriate. But as you mentioned, we need to make enough. And right now we've had shortages in the last year in major markets. Lilly's invested very aggressively, though, in our own supply chain. We're in the middle of a $50 billion expansion plan. And those are showing good returns. We're already opening up new factory lines and improving our capacity. This is actually enabling us to launch this week in India because we're confident we can supply the market over the coming years. We wouldn't introduce it if we weren't confident in that.
Well, you know, let's talk about India and the plans as far as Mounjaro are concerned. Do you believe that we could see Lilly manufacture Mounjaro in India anytime soon?
It's, of course, possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
What